My large language model is named Joe, for sure.
It's Jim. Excellent. We appreciate your time today. Thank you.
See you next time.
Speaking of finances, Leslie's back. And with we talked about Bank of America, now we got it. Hey, Leslie.
We do have it, Joe. I also want to get to some updated guidance from JP Morgan, but let's go through the B of A numbers first, delivering sizable beats on the top and bottom lines here as the Wall Street side of the business saw sizable gains in the second quarter. You can see those shares up about 1.6% right now. Investment banking fees, those jumped 50%. Sales and trading gaining 33%, led by a 70% surge in equities, which was a record for the firm. Chairman and CEO Brian Moynihan saying in the release that it was a, quote, exceptional quarter for their markets-facing businesses, while adding that, quote, pipelines remain strong and commercial borrowing has picked up. B of A's wealth and investment management, that's largely Merrill and the private bank, saw sizable gains as well. That division's net income up 42% in the quarter. On the Main Street side, net interest income, that's that profitability metric for loan making, was essentially in line with estimates. NII was up 9% to a record, though. The consumer appears to be heading in the right direction here as well, with net charge-offs and delinquency rates improving from last quarter and last year. And I'd also flag the return on tangible common equity of 17%, which is at the midpoint of the firm's medium-term target for that efficiency metric that it set in November, so surpassing that already. And then a little bit more on JP Morgan. That presentation has now been posted, and we are seeing some updated guidance for both net interest income and expenses, and I think that's why you can see shares a little bit lower right now. It said, as we talked about earlier, Jamie Dimon said in May that you can expect expenses to be $106 billion, and that was up from the April guidance that was given. And now today, the firm is saying for the presentation it'll be $107.5 billion.
Really?
And they say that is due to the prior outlook, increased relative to prior outlook, primarily due to higher volume and revenue-related expenses driven by the activity levels and associated revenue outperformance. That's basically just operating performance is solid, so you raise expenses accordingly. And then in terms of net interest income, previously $103 billion, now it's $105.5 billion. Ex markets previously was 95, and that has been bumped by about $1.5 billion there as well. So higher net interest income, higher expenses, guys.
It's still early, thin trading, but down almost 1.5% now as you were. It is 1.5% down about $5. But
what?
Yeah.
High-priced issue.
JP Morgan.
And the others are up. Bank of America now up. And I look where that was on Liberation Day. That was like low 30s. So
yeah.
A lot of these banks have moved quite a bit. Thanks, Leslie.
Thank you.
Don't miss an interview with Bank of America CEO Brian Moynihan at 10 a.m.
Don't miss it.
On Squawk on the Street.
Okay, and we're going to get a little deeper into this morning's slate of bank earnings as well. And you also don't want to miss this. Social Capital's Chamath Palihapitiya live with us on the set as we head to a break. Here's the AccuWeather forecast. I'm going to hand it over to meteorologist Bernie Reno. Bernie.
Widespread heat on your Tuesday from the Dakotas all the way toward the East Coast. AccuWeather says 94 in Boston, sunshine in New York City, Washington, D.C. Spotty thunderstorms, but drenching in the southeast. And look for flooding rain, San Antonio, Austin, and the Houston area. Even thunderstorms in the southwest today from Las Vegas toward Phoenix. Travel delays, you're going to see them in Atlanta, but you're A-OK along the East Coast. AccuWeather for Business delivers proven superior accuracy with often earlier site-specific warnings that reduce false alarms and costly disruptions so your business stays best prepared. Visit business.accuweather.com.
Very good information.
Coming up, social capitals, Chamath Palihapitiya. Join us right after break. And it also said we're going to have a full reaction to all the bank earnings, instead of only the partial reaction that we've given you so far. So that's coming up. Stay tuned.
Minutes. Oh, better get my watch on. Okay, here I go.
Going to do today. 7 a.m. on the East Coast. Just after, you're watching Squawk Box on CNBC. I'm Joe Kernan, along with Andrew Ross-Sorkin. There's somebody else here. First, we're going to talk about the future, then we'll get right to Chamath. Let's check the future, starting with the Dow. You can see is down every day. It seems like you'll see some divergence between the NASDAQ and maybe the other averages. That's rebounding this morning. The crude number is probably most notable, back above 80, in fact, back above 81, now up another 3.5%. I thought Treasuries, the 10-year, we said, you know, it hasn't been able to get above 4.6, and it is now. And that's talk to Sam Pelley about that. He has said higher rates for longer. Been saying that for a while. And then the 2-year, 4.282, doesn't really matter what Kevin Moore says. The 2 years telling you. And then Crypto, big stories on gold, maybe not being a safe haven, down 25% from the high. The minute you think, Chris Waller says a hike is next, and that's not good for Bitcoin. They want easy money, but it's up, rebounding a little bit. It was at 64, so it went back down to around 60. It's up a little bit. Joining us now for a reaction to quarterly results from the big banks is Stephanie Link, Chief Investment Strategist and Portfolio Manager at Hightower Advisors, as well as a CNBC contributor. You were probably glued to the screen. Is Leslie not amazing?
She's incredible.
She is. Can you distill it down? The highlights. You've got Wells. You got then we had J.P. Morgan, then Bank of America, which have all had big moves.
So they did, and we had record flows over the last couple of weeks into the banks. So a little bit higher expectations, but I would summarize that by saying you saw growth, you saw profitability, and much better credit quality at all three banks. I think the lowest expectations were at Wells Fargo, and they actually delivered pretty good numbers, in line net interest income and net interest margins. Expenses were lower. Their efficiency ratio came in at 60%. Expectations were for 63%. So they're doing all that they can to streamline the business, while at the same time, with the asset cap now lifted, they can focus on growth. I think this is the bottom for Wells Fargo in NIM this quarter. I think it's going to increase going forward.
Sorry to interrupt, but IBM, may not be what it used to be in terms of bellwethers, but when you get a $40 move on a warning, when's all that? Companies haven't warned lately. They warn of better than expected results in this new world. But IBM is warning, and it's had a big run up, which it hasn't had in a while, but it is down today. There is a letter from the CEO to investors, and the company sees second quarter revenue $17.2 billion, software revenue up 5%, consulting revenue flat, and adjusted earnings per share of $2.93, and infrastructure revenue actually down 7%. Also, gross margin down 70 basis points. What do you think, Steph?
Well, I own it, so I'm not happy about it, and it's a shock. So this now probably reinforces that AI and what is it doing to software, and that's the scare that people have had, and that's one of the reasons why software in general hasn't done so well. Software at 5%, I mean, oh my goodness, it was supposed to be at least double digits, maybe even into the teens, and so that's very disappointing.
You need to go somewhere and have a drink or cry or something, or you want to continue along with the... Yeah, I'm worried about you, Steph. Okay, thankfully, let's go back to the banks and we can talk about all the good things happening.
Yeah, no, okay, so going back to the banks, so Wells Fargo did everything they could in their control. Now they're going to focus on revenue growth, and as the asset cap has been lifted, so that's good. I think very low expectations at Wells Fargo. I think that's a buy. J.P. Morgan, I mean, my goodness, profits were up 41%. They had record revenues across every division. I think, obviously, the big call-out is fees up in investment banking, up 30%. The Whisper number was up 20%. And they also had ROE of 24%. So really good numbers. I think people are a little spooked because of the higher expenses. That was really expected, to be honest. But at 2.7 times book value, the stock, you have to be perfect. And there was a little bit of a blemish on the expense side. Bank of America, clear positive call out for now. I mean, I don't think I've ever seen investment banking results up 50% at this company, and their wealth and investment management business up 70%. Really, really great numbers. Profits were up 27%, and across the board, credit quality again. That's a big theme for all three of these companies. Net charge-offs and provisions for bad loans much better than expected. So they're growing, and they're seeing better profitability, and they're also seeing better credit quality. I think that bodes well. The only thing is the expectations were high. So let them settle in and pick their spots.
I know it's a sore subject, but IBM expected second quarter infrastructure revenue decline played out worse than our expectations. Steph, so that just hit as well. Do you think, and we're going to ask Tomas this in a second, do you think that this puts a question mark over AI in the, or it just basically says, yeah, software is going to be disintermediated or something because of AI? So is it a negative for AI, or just what we already knew was going to happen?
Well, I think it's coming to pass that AI is having an impact on software. I think that's exactly the issue. This is what we've been nervous about for a while, and it's coming to, unfortunately, into fruition. I will say, I mean, this is an amazing CEO. He has done an incredible job at turning this company around, but the bulk of their profits are software. So if they're guiding down, obviously they're getting impacted. It says that a couple of or several deals failed to close in the quarter, so we have to get more color on that as well. But this has been a good stop since under Arvind and Krishna, and
yeah, the miss is
this is not great.
the miss is definitely what you're pointing to, because 293 is off. 301 was the estimate for adjusted earnings. And then a little bit lower on revenue, 17.2 versus an estimate of 17.8. So that's below. But I think you can go cry on your beer. Well, not your beer. Cry on your coffee. And when we can get to Tomas. Thanks, Steph.
Okay,
We
thanks,
want
Joe.
to bring in our special guest this morning. He is sitting on set watching all of this play out. Hasn't been here in a bit, and we're thrilled to have him back. Chamath Palihapitiya is here. He's the founder and CEO of Social Capital, CEO of 8090, and host, of course, of the All In podcast. And you're wearing a suit, no less, for us. So
my entire job is selling enterprise software.
That's what you do. So actually, before we get into anything, and I want to get into all what's happening in the Valley, AI, everything. We're going to go back in time, talk SPACs, because people have asked. I know your favorite topics, but just your take on the IBM situation, to the extent that you think it has ramifications in any larger way, or maybe it's just specific to IBM.
I think the thing that we know is there are a handful of companies that are compounding revenue $1 billion a day. And at some point, the downstream ecosystem has to make money as well. And then the ultimate buyer of these tokens also has to make money. And so at some point, the question has to be asked, if 2 or 3 companies are going to generate $200, $300, $400 billion a year, and it's doubling and tripling every year, where is the rest of this money going to be made? And who's implementing it in such a way where these profits are to be had? And I think you're starting to see a little bit of the wheels come off. Like, just at a very basic level, if you think AI is like oil, let's just use this analogy to make it simple. A barrel of crude is what, $86 right now?
Right now, unfortunately, it's gone up, yes.
No. Unfortunately, watch your mouth.
WTI is 81, okay. Let's say a barrel of intelligence, which is 1 million tokens, okay? You can buy that barrel for $26 from Anthropic's really good model. You can buy from OpenAI for $26. Anthropic's latest model costs you $56. Elon is selling you a barrel of intelligence for $1. Zuck is about to sell it to you for $1.50. Demis and Sundar are trying to sell it to you for $1. The Chinese will sell it to you for 50 cents. So this rationalization has to happen. We have the same input that has this crazy cost. If you've made it that very early around one of these folks that are selling extremely expensive barrels of intelligence and you try to pass through the cost, you may run into some downstream difficulty. And that has to play itself out.
And you think that's playing itself out in the IBM story? Or you're saying that's just a broader...
No, that's just a broader comment. I think that Arvind he's done a great job. I mean, look, it's undeniable the trajectory of the business.
It's undeniable.
Oriented around cloud.
Right.
That's a general fire.
But the reality is, everybody that's in this ecosystem, me included, we're all
Not me.
trying to figure out how do we price this stuff so that the ultimate buyer is making more money, is growing faster, and that is still a question mark.
I don't
think
like
you're
this
getting
guy.
to a point that Alex Karp, who was just here about a week and a half ago, was making about this sort of token maxing conceit, which
Got a yin-yang.
some of these companies are, and this is to the Anthropic
Liar.
OpenAI piece of it, where you have CEOs, and I've now talked to them too, who say, the math is not mathing for us.
The CEOs and the CFOs, in my opinion, probably have no idea how much token maxing is going on inside of their organization.
Correct.
I suspect what will happen is one day you're going to have a miss, and EPS will be off by a few pennies. And
Wrong.
the CEO will say to the CFO, what happened? Where did all of this incremental OPEX come from?
Well, we had that party.
They'll trace it to the $50 barrel of intelligence versus the $1 or 50-cent barrel of intelligence. That hasn't happened yet.
This is interesting. There's the software stuff. What is also interesting, so it's a Dow component, IBM. So the Dow's down 500 points.
Right.
Just do the math, 50 points times whatever the divisor is. The NASDAQ was up more than 100. It is still. So if it is a question mark about technology in general, you're not seeing it yet in the NASDAQ, and that big 500-point drop.
Hey, let's have a great day
I think in
today.
fairness, the NASDAQ has a lot of other stuff, which is
It's not software.
all the hardware, all the memory,
Yeah.
all the chips. That entire complex is still going to make a ton of money.
You know, I'm still like a ballet dancer, standing on the tip of my toes. So I'm not at any point going to be a risk taker until we get to the 200 SMA on the daily and weekly time frame. And then I'm going long. And I'm thinking around September. I've mentioned it many times, and I'll mention it again.
NASDAQ will probably overperform the S&P.
Okay.
If you look at the only other pocket where there's true growth, it's the LLM
Anybody agree?
complex, as you said.
Say
I
yes.
don't know what the long-term valuation is, but if you see
Oh, I
a bunch
agree,
of public
James.
companies in the next few quarters miss because of an OPEX miss,
Right.
and they trace that back to runaway spending that they didn't know existed inside of their organization, you're going to take a little bit of the air out of that specific category.
Okay, so we just talked about
Say
four
yes.
of the big model makers, maybe 5 of the model makers. We talked about OpenAI, Anthropic. You mentioned Gemini. We talked about
Gemini,
And
please
we
do
talked
not
about
mention me ever
How
again.
do you see them all stacking up longer term?
I think that you are seeing a convergence. It used to be the case that when a model dropped, it was so superior to everything else. You're like, oh my God, we went from kerosene to Jet A.
That's
right?
correct.
To jet fuel. So of course I'm going to go to jet fuel. Instead, I think the analogy now is we've seen the nth version of the iPhone. We've all kept upgrading to it. We're still using it for roughly the same
Okay,
behaviors.
well, let's have a good
My
day.
elbow hurts, what should I do? And you're wondering to yourself, well, why am I spending all of this money? And I think that's where we are today. So if you're going to direct all of this behavior, why don't you spend 50 cents or $1? That's a pretty rational
So,
question.
but then the question is the meta model, for example, or Grok, as good as or close enough of an approximation for whatever you think you need to get done using
For most use cases,
Anthropic?
the answer is a screaming yes. For some very narrow use cases, no. But in those narrow use cases, I would say spend the $50 barrel of oil. Spend it. It makes sense. If you're a cybersecurity company, if
Right.
you're Palo Alto Networks, and you can book billions of dollars of more incremental revenue by locking down all the infrastructure of big companies, use Fable.
But the freak out over the weekend, even inside of Anthropic, you know, we talked about it yesterday morning. Anthropic, as you know, was planning to end the sort of free use of Fable for some of the paid users, sort of end that extension so that you'd actually have to upgrade or pay more to get
they
access
can't
to
afford
it.
to.
And then all of a sudden they say to themselves,
Can't afford to do it.
we can't afford to do it because if we do, people will cancel their subscription
Well,
and go to OpenAI.
Exactly, and the OpenAI model is excellent. Soul is excellent.
Right.
Mythos, Fable, it's excellent when you can use it. So all of these folks are hitting the same constraint. They're massively power constrained. They're massively data center constrained. And so they are usage constrained. Meanwhile, the guys that have all of that capacity, Google, SpaceX, and Meta, are
Right.
finally getting their footing, and they're starting to consistently release model after model after model that's 80 to 95% is
Right.
good. It's a very complicated dynamic for the leading labs.
Do you see a shift, by the way? You know, there was, you know, for a long time, OpenAI and Sam were sort of under a lot of fire. There was big questions about trust and the like. and by the way, maybe even more questions given this Apple situation on Friday. But there seems to be some dings taking place on the Anthropic side too, and this maybe gets to the Alex Karp of it all, but people who believe that either the spending part, the math doesn't make sense of what's happening, or you look at the Figma story, for example, of them going into different businesses.
Those are really concerning. I mean, look, let's be clear. There are 3 leaders of lab companies who have been in the spotlight for 20 years. Elon, you've seen every facet of his personality, and you can judge over 20 years of behavior. Sundar and Demis, 20 years. Zuck, 20 years. And I think those folks have shown that they basically run a relatively straightforward, well-understood business, right? There aren't any rug-pulling situations. Maybe Facebook had some in the past. I think they've cleaned that up, okay? But Google certainly never has, and Elon never has. You may dislike him for other things. And then all of a sudden you have these 2 guys who are incredible entrepreneurs, clearly, but the amount of collectible data that you can look at, behavioral instances where they've had to make hard decisions, are still relatively limited because they're only a few years into being this public and being this scrutinized. So if you look at the first few years of Facebook, messy. I don't know about Google, maybe the first few years.
We're going to talk about you and your 20 years. You're going to get to talk about.
I mean, like I was caricatured as the guy at Facebook that made everybody cry. But then you look back, it's a $2 trillion company, so the tears are crocodile tears.
IBM is saying that, we just missed closing a couple of big deals. They always say things like that. But this is interesting. The clients that they were trying to close were distracted by industry-wide cybersecurity concerns and the stuff that they were.
If you have
believe that?
If you have somebody
now they're going to say the weather was
No,
bad.
I have a real issue with this, and I've said this a couple times, so I'll just say it again. You can look at a graph of the financing needs of these companies.
Right.
And you can pinpoint when they oscillate between 2 different messages. Message 1, we've created a super god, which then the VCs are like lemmings. They run and they're like, well, I need to be on the right side of the super god. And then they flip to other 2, which is, this is a complete weapon, let's shut the world down, and why don't you regulate everything? They just go back and forth. We've had this game. Now the problem is, at the scale of $1 trillion of market cap, that game has these ripple effects that touch everybody in the industry. This is why, by the way, I think what Alex Karp did, he deserves a medal. This is an incredible human being who had the courage to come here. Everybody watched that clip. All these S&P 500 CEOs called me after that clip saying, help me interpret this. And I'll tell you, he was on the right side of history, because what he's showing you is that, hold on a second, like, you need to have a much more predictable way of running your business, because if you are, bending to the vicissitudes of private company funding cycles, or private companies' desire to need to live up to trillion-dollar valuations, you're taking a level of risk that you probably didn't know you were taking. That's a fair critique, I think.
We got to take a pause for a second. Just one last question related to, because it's on the Alex Karp topic. Effectively, what he's saying is that Palantir you are going to need some kind of layer, though, in the middle.
I believe that too.
Partially to protect you. He was arguing in some ways from the LLMs ultimately.
Here's the thing: the LLMs do a very good job of a very superficial form of privacy called zero data retention, ZDR. That's the term that they use, and they say enable this, and everything's hunky-dory and everything's okay. But when you look at the fine print. Let's just say Joe puts in the secret formula for Kentucky Fried Chicken into the model and say, help me optimize it. That part is ZDR'd. But then if you look at a little thing like if he just clicks the like button, is there any guarantee that that information is not stored somehow, that he liked this kind of a thing? And the honest answer technically is no, because we don't know how to do that. The other interesting thing that I would point out to you is that when Alex came on, I think he said something extremely legitimate. I think it applies to companies. It also applies to countries, so at some point we should talk about this. And at no point did Anthropic say, you know what, he's got it totally wrong, here's the exact technical details, and so there's nothing to see here. And I thought to myself, why wouldn't you, the minute after that clip started to go viral, be completely specific and repudiate the claim? And I think it's funny that we're here 10 days later and nary a word has been uttered. other than Alex's version, which the reason is because we all know is the true version.
You know, I've noticed, and it's funny you said chicken, because I've asked multiple times how long to sear. I do a reverse sear on chicken on the grill.
I'm a reverse sear guy too.
Are you a reverse sear
Yeah,
guy?
but I
on the
only
cool
use
zone?
beef. I don't like chicken.
But on the cool zone, and I've gone back to Claude and asked, and he goes, you know, last time and I'm like, what do you mean, he does remember.
Well, that's the consumer version.
Okay.
The enterprise version. My
Okay.
point is, in the enterprise version, they do flush the recipe.
Right.
I want to be clear. Anthropic is very good about that. So is OpenAI.
But
What
there's
I'm saying
certain
is
things that
all
they
of these
remember.
little, there's all of these little leaps.
Do I have to pay tokens to get the good stuff that he has? Is that what we're? See, I haven't paid.
I pay.
You
I
pay.
I pay through the nose.
I pay through the nose.
I pay through the nose.
I pay through.
Okay.
But
we're
I
gonna-
don't use the latest models.
So, okay, we're going to take a pause. I want to hear about which models you use and how you use them in a moment, and we're going to get into so much other stuff as well. Do not go anywhere. Chamath coming up in just a little bit. We're coming right back.
Welcome back to Squawk Box. I'm Dominic Chu with a check on your morning movers. Big morning for big corporate headlines. We'll start with IBM shares dropping on preliminary second quarter results, warning that its earnings and revenues will miss estimates. Now, in a letter to investors, CEO Arvind Krishna said, quote unquote, this quarter we faltered, adding that IBM failed to close numerous large deals on time, which mainly drove that shortfall. IBM will hold its regularly scheduled conference call and results next Wednesday to unpack everything else, but you can see IBM shares down about 19% in the pre-market trade. And by the way, that pretty much erases the gains you saw for the full year. Now, 3 banks are out with earnings in this past hour, reporting big beats. Wells Fargo, corporate investment banking, saw the biggest year-over-year jump in revenues, up 16%. JP Morgan reported a massive beat in equities trading, but a slight miss in fixed income. And Bank of America reported net interest income up 9%, which was just about in line with expectations. Next up, we'll hear from Goldman Sachs and Citigroup expected in the next hour. But on balance, those shares off, well, fractionally for Bank of America, JP Morgan and Wells Fargo off about 2 to 2.5%. Chip stocks are moving higher, led by U.S. listed shares of SK Hynix, rebounding after a 9% drop yesterday. The Korean shares also gained 3% overnight. Fellow chip names like Applied Materials, Micron, Intel are all moving higher. The SOX semiconductor ETF is up. You can see just about 3% in the pre-market trade after dropping 5% yesterday. And then finally, Apple shares are down by just around 0.75% after KeyBank downgraded that stock to an underweight or sell rating from a prior neutral sector weight. The firm sees U.S. carriers pulling back on device subsidies, slowing upgrade rates for phones, and its international business needing to carry more weight. It also says price increases on Macs and iPads could put the unit growth outlook in declining territory, so keep an eye on Apple. For more on those and other top analyst calls of the day, just head over to cnbc.com/pro. Subscribers, as always, get all the detail and context around the big upgrades and downgrades each day. Joe, I'll send things back over to you guys.
Yeah, KeyBank down. We said this downgraded Apple back in October of 2023 at like they went to a neutral, and I think it was at like $160. So they were neutral till now. They missed that entire move. Now they don't like it, and you know, Citigroup's got a 365 chart. I'm not shilling for Apple, but just you know, why we're talking about
wide expectations, right? And a lot of different views. You know, sometimes
great expectations.
Great expectations, yes.
Thanks, Don.
You got it, guys.
Goldman Sachs just out with quarterly results. Leslie Picker has the numbers. Welcome back, Leslie.
Thank you, Joe. Speaking of great expectations, this was really a blowout quarter at Goldman Sachs. I don't use that term lightly, but they had record revenue that surged by 39%, beat estimates by nearly $4 billion. The bottom line also surpassing the street's expectations and notching a record there as well. Now, of course, the juggernaut was the Global Banking and Markets division, which saw a whopping 55% increase in investment banking fees. Its equity underwriting unit, which of course advised on SpaceX's IPO and Alphabet's issuance, surged 130% to $985 million. Debt underwriting jumping 75% to more than $1 billion, a record there. And advisory, which mostly involves M&A transactions, gained about 17%, slightly missing analyst estimates there. Goldman said that its investment banking fees backlog did increase compared with last quarter and last year. Within markets, equities alone raked in $7.4 billion. That was an increase of 72% and beating estimates by more than $2 billion. And fixed income currencies and commodities gained 32% and beat by more than $1 billion there as well. Asset and wealth management up by 20%, beating estimates. And of course, guys, with such solid operating performance, compensation and benefit expenses also soared up 30% and about $1 billion higher than what analysts were expecting. Still, annualized return on equity came in at 23.5%, nearly double what the firm generated a year ago, guys. So just a super accommodating backdrop for Goldman, but clearly they're capitalizing on all of it.
Yeah, I guess that might help the Dow a little bit, but the 50 points in IBM weighing heavily. Thanks, Leslie. Don't miss an exclusive interview with Goldman Sachs CEO David Solomon today at noon on CNBC.
Okay, we are still here with Chamath Palihapitiya, founder and CEO of Social Capital, CEO of 8090, host of the All In podcast, and we haven't seen him in a while. We used to see you quite a bunch.
My own distribution.
I know.
I had to build my own distribution.
I know you've got your own distribution now, but you did come on a whole bunch during the SPAC craze.
I didn't have my own distribution.
And I want to ask you this, or maybe I want to read you this. We got a whole bunch of people tweeting at us. Pretty rich that Chamath has an issue with the game when he was the SPAC king and playing the game. So I'm curious, when you go back and think about...
What does that mean? What do they mean when they say that?
I think what they're saying is there was a period of time where you sold a lot of SPACs, and that...
No, let's...
promoted a lot of SPACs as the partner in a whole bunch of SPAC projects. And the truth was that a lot of those SPACs ultimately didn't work for investors.
Hold on. No. They did not work for speculators, but they work for the CEOs and they work for the employees. They work for the customers of those companies. I mean, like, I think...
But for the investor class that was buying on the other end.
Hold on. Let's not call them an investor class, okay? There were a ton of well-heeled hedge funds that were my partners. They made money. Who didn't make money? Speculators. Now, do I feel bad for them? Yes. Were my incentives misaligned with them? Also, yes.
Well, we used to
Those are-
debate this.
Yeah, but those are, and I can evolve and see,
Right.
and I can say, that's a fair critique. But it's also pretty rich for folks to just sit and chirp on the sideline without saying, well, how much money did those companies raise? The answer is tens of billions of dollars. How many clients or patients or customers do they serve? The answer is millions to tens of millions. How have they grown revenues and traction since that happened? And the answer is, in some cases, doubling and tripling. So if you want to take a fair look at it from a 360-degree view, there were some parts of it that worked, and the part that didn't work, I went out of my way to relaunch a SPAC just to show you how I can address the speculator class. Because it always worked for, I think, for the entrepreneur. And for
Oh,
the
there's no
speculator-
question that the SPAC process was good typically for the entrepreneur, and invariably maybe even good for the company and employees. I'm not arguing about that. I'm arguing that, and I think anyone who was watching at some points when we used to talk about these
I
things,
completely agree with the point. I agree with that.
and they would say, look,
It didn't work for them.
you
By the
told
way,
me this would be a
it
great
may not-
thing,
It may not
and the
work
stock.
again. By the way, it may not work again, but at least this time, the way that I structured this second time, let me maybe just take a step back and talk about why do I do this? I'm running a tech company. I don't need to do it. Why do I do it? I think the through line for me is I don't like it when I see markets that are gate kept by a few people. I don't like it. It bothers me. And my entire working career, if you actually say, what's the through line from Facebook to now, I tend to go after markets that need democratization. Whatever, that's an overused, jargony term. But Facebook was democratizing information. Social capital, I democratized a lot of investment, okay? The SPAC was, I didn't like the idea that 2 or 3 banks sat as the gatekeeper between companies that should be funded and exist and their ability to actually serve customers. Because what happens is, and you can see it in these banks' earnings, and I'm not saying they're doing anything wrong, they're doing something totally legitimate and right. But at the end of the day, those folks structure liquidity for companies based on their ability to embed gains to their best customers. That's the game. So if you hear that OpenAI cannot go public this year, that has nothing to do with OpenAI. That has everything to do with who is lead left and who is lead right, deciding how much embedded gain they can transfer to their best clients. My point of view is find a different way. There are many different ways. Direct listings are a way, SPACs are a way, reverse mergers
But if
are
you
a
could
way.
go back in time,
Yeah.
do you think you would have done the SPACs again the way you did them?
The thing that I would have changed is I would have had nary a comment on Twitter. I would have not come on CNBC and talked about them at all. That was a huge mistake. And at the time, I think I was also learning about the influence that I had, and I was kind of learning to deal with it. I think 6 years later, 7 years later, the 2021 me versus the 2026 me, the 2026 version of me would say, we don't need to say that. We don't need to say anything. In fact, let's just be very clear. Everybody stay away. I'm doing this because I have 2 very specific goals. One is...
And you're talking about your current project.
Yeah, no, well, the SPAC that I did now has 2 very specific goals. One is just to create an architecture that I hope people copy, which is you cannot get paid unless the stock goes up, do it over time, set huge goals in the out years for performance. So now there's complete alignment. And the second...
And you're locked in.
Yeah, and the second, which is much more practical, is I look at the United States and there are these huge gaping holes where companies need capital to do very important things for the United States that they will not be able to get because they do not check the obvious box for the gatekeeping banks. And unless you fix that problem, you are going to have a serious problem on your hands.
But it just sounded like you said, look, I want to raise money for the companies and I want the hedge funds to do good. And hey, these speculators, they're speculating and they lose their money all the time. They should just, they should buyer beware. They should have known they were going to lose their money. That's what it sounded like you said.
I think that I should have been much more circumspect and said nothing.
Right.
And this time you'll hear me say nothing.
Was there a way that they could have gotten a fair shake along with the
I think
hedge
there's a
funds
lot
and the
of-
companies?
I think that is, again, the structural things that need fixing. So the next version after this version that I would hope somebody does is they just post all their own money. So like right now, the way that the SPAC works is that you post a little bit of it and you still need to raise from outsiders. But I've talked to Paul Atkins about this. I'll post the hundreds of millions of dollars. Now it's a turnkey IPO. It's all my risk. If I find something I like, I'll just underwrite it. I'm giving that company the hundreds of millions that they need, and it should go public. That kind of stuff, where there's all of these folks who could then do that and copy that. All the hedge funds could do it. All of the, the big buy-side organizations could do it. That could be a really important thing for what we need to happen right now, which is more companies should be public, not less. And more money should go into critical infrastructure, not less. And right now, if you put a handful of financially motivated actors in the middle of that, you are going to see...
Should they go public earlier?
Yes.
Yes.
Yes. Transparency is better. Yes. Absolutely. Performance pressure is better. It's all better. There is no version of this example where staying private forever is rewarded over the long term. Somebody will get screwed at some point.
Okay, we're going to take another pause and come back with Chamath because we got so much more to talk about. We still got to get into some of the AI stuff. There's the whole...
No, let's stay in 2021. I like 2021 discussion.
Do you?
Let's stay in 2021. Let's not talk about the future.
Okay. Chamath in a moment, Joe.
All right, coming up, another film where every scene is generated from AI is set to debut later this summer. We talked about the first one with Tom Rogers, and now there's a second. We'll speak with the CEO and Tom, CEO of Fountain Zero, who also wrote and directed Odysseus, The Fall. Tom Rogers, executive chairman of the company, about disrupting the movie business. Next, there's some panties in a bunch out in Hollywood from this. Squawk Box returns in just a moment.
Time now for today's Aflac Trivia question. July 14th is Bastille Day, marking the start of the French Revolution. Which structure was built to celebrate the 100th anniversary? The answer when Squawk Box returns. Now the answer to today's Aflac Trivia question. July 14th is Bastille Day, marking the start of the French Revolution. Which structure was built to celebrate the 100th anniversary? The answer? The Eiffel Tower in 1889.
Our next guests are set to debut their second totally AI-generated film later this summer, Odysseus, The Fall. Joining us now, Fountain Zero CEO Ash Kusha, who is writer and director of the forthcoming film, and Tom Rogers, Fountain Zero executive chairman and executive producer of the film. He's also a Versant media senior advisor and a CNBC contributor. I guess I just want to know about the movie, I think, to start with. Ash, if I see the Matt Damon flick, the big blockbuster, and this, I don't need to know anything else about the Odyssey or Odysseus or anything. This will blanket my total historical knowledge of that work.
I think that 10 more films would still not be enough for being able to translate what the Homer text says and all the years of different translations of the poems into different takes. So this attempt of making this film is another take, and it's another personal view of how I saw Odysseus as a person, and what I read through the different translations and over the years, just knowing the character and the worlds. So I think, no, I think I would want to watch 10 more movies about different worlds. Yeah.
I have no reason why I wouldn't want to see this, and it looks amazing. But Tom, I mean, heads are exploding in certain parts of Los Angeles, I think.
Well, they shouldn't be over this film. I don't think anybody's not going to go see the Nolan film because of this. We're wishing that film is a raging success. I think the key here is to writing the awareness of the Odyssey, which obviously has a huge marketing campaign behind it, in hopes that people will compare what is the height of human achievement in filmmaking and compare it to the height of AI filmmaking today, which basically we think announces that AI is not only capable of great art house quality films, which our first film, Dreams of Violets, certainly showed, but is able to allow writers and creators to take on huge blockbuster type budget films that mean that without any financial constraint, the only limitation is imagination now on the part of creative types, and that's a huge difference for the film industry, not to have financial constraints because what AI allows.
But I find what you guys are doing so inspiring. I think it's incredible. Can I ask a technical question, which is, what models did you use? Like, how do you even start making a movie like this?
Well, Ash is the technology genius here. Ash, go ahead.
Ash, what are you using?
Yeah, so mainly we use Kling AI, which is, in our view, is the most powerful video model. I think along with some other models, but I think one of the things that has been missing is the pre-production preparation. So how you even approach making a feature film happens before you hit the AI model. And I think that's the systems that we've been working on, the simulation system, the emulation of emotions, the fact systems, the response systems of characters. So you do that a lot of times, you do that way before you hit the AI model. And this has actually given us an incredible advantage, which is we use a lot less tokens. So our cost is incredibly low because we don't hit the video models to take our chances, right? And we use Google and Anthropic for different layers of reasoning, different layers of simulation, and yeah, Kling is the main video output.
How important is the script versus then all of the surrounding prompts? Is it like now all of a sudden the prompting becomes the critical enabler of a successful film versus maybe necessarily a script because you're guaranteed perfect acting, or how does that work?
The key point about the script is that there's no closed script. So the script stays open until the last render take, right? So we have multiple takes of the film. And the reason for that is scripts and screenplays and storyboarding was invented to make a sort of disciplined decision about going on set and going into production. But in this scenario, we keep the script open, so we allow for mistakes in writing. So we go back to it. So everything you can think of it as a dynamic element moving forward. So the script, the storyboard, everything is still at play until the last moment we go to post-production.
And I think the best way to understand that is it's more like painting, the way Ash has described it, as opposed to prompting the way you would handle research in an AI.
But Ash, just explain this so we all understand it. So let's say there's a scene. There's, I assume, a script for that scene that's been written. I don't know how much of that's been written by you, how much of that has been written either with the help of AI or by AI. And then how many times are you redoing the scene either through a sort of one-shot prompt and saying, make me 10 versions so I can see different ways this happens, or are you then sitting and re-prompting each time and saying, you know what, he's got to look down in that moment, or he's got to look up, or he needs to cry more, or like, can you just walk us through that?
Yeah, I think we shouldn't bet against human writing in this situation, and that's my experience with making films with AI, is that the human writing comes at the core, so you have to have an anchor of intention. So I want to say this thing. If I don't want to say this thing, there's no helping me by Claude or any other model, right? But what Claude does, and I think Gemini does as well, is that they compute possibilities of realities that you put aside until you go and render that reality and look at it. And
Ash,
traditionally we have this,
What about the jobs part of this? Like, you know, the lighting people, the gaffer, all of the folks, how are you finding that plays out when you're making?
Well, one thing to understand here, this was a one-man effort, which I just think is astounding when you think about it. One person created this film, Puya, Ash's brother, helping out in post-production. I think this is a microcosm of what we are going to confront with AI. While we have this debate, is it going to create more jobs or are more jobs going to be lost? There's no doubt that massive numbers of people involved in all levels of filmmaking are going to be negatively impacted by this kind of film creation. On the other hand, creative types, writers and directors, are going to have an ability to have far more opportunity than they have today without financial constraints. We hope at Fountain Zero to employ many, many teams of writers and creators, because if they can learn these techniques with the proprietary software that Ash and Puya have developed, we think there'll be literally a fountain spewing many more movies.
It's not great I mean, hey, how much? That doesn't look a whole lot different than a Marvel comic. The CGI is.
Remember the movie 300?
But the CGI is already rampant. But at least there's actors once in a while. There's gonna be no actors, huh?
Well, CGI is a use of computers. This is a different use of computers that involves fewer people, but the potential for what it can do at incredibly low cost, again, allows creativity to the infinite.
There's something super exciting on one end of this, right? That all three of us can make our own movies, just if we want. There's obviously then the jobs piece.
It's not that easy.
I understand, but then there's the jobs piece on the other. But I have a different question, which is, do you see and I'm not calling it AI slop, I'm just saying, do you think there's going to be such a glut of content, even high quality content, that the cost on the other end goes down even for the value of a human acted movie? Meaning, does it hurt the Chris Nolan picture itself? Not in this instance, but I ask only because, you know, during the whole sort of Netflix, when everybody was making lots and lots of content, the value of all that content, unfortunately, actually came down, didn't go up.
Well, there will clearly be more really bad movies and TV series made, and there'll be more high quality, hopefully, made as well. What it does to cost, I think, is going to have impact on the industry, because the major studios and the Netflix of the world, their role today is financing big budget productions. And to the extent that is democratized and people can create content without having to go through the processes that those studios involve, is clearly going to change the leverage, the power they have in terms of movie making. On the other hand, with less money going into content, what is going to become more important with more quantity is marketing. And it will allow for more opportunity for marketing, and the marketing prowess of big companies, I think, will matter a great deal.
If one of your kids calls you up and says, Dad, I really want to be an actor, or I want to be a writer, or I want to be a lighting, a director of photography, you would tell them what?
Well, one of the interesting things about this film is that the likenesses of 13 real people, including Ash, who is the star of the film as Odysseus, are incorporated. And we created what we think will be a standard form agreement for people who want their likenesses and images in films in return for various things that they may be able to do on behalf of a film, an influencer marketing it or whatever. Actual acting, I think, is going to be something that changes.
I always want to see that Tom Cruise is actually doing his own stunts instead. You can make these people do. He's actually up on the side of that building at 105.
And he may want to license his likeness or image for a movie,
but nothing's real. Nothing's real anymore in these things.
Well, it won't mean that nothing's real. There'll certainly be human-made movies, and there'll be hybrid forms where actors are part of it, and AI is a lot of it.
Can you tell us how much this movie cost, if you're comfortable saying?
It was mid-five figures. It was mid-five figures.
That's incredible.
And that was mostly.
We're not valuing anyone's time in that.
No, because Ash did this on his own part-time with a day job.
That's the cost
of a few months.
That's one day's catering on a set.
And that's the point here. There aren't no financial constraints. Obviously, there's proprietary software that's built here on top of the models that is allowing a film like this to look as if it is of human production. But we think collaboration by creative types here will allow for all kinds.
And just to understand, for you and your company, the long-term idea is to sell that software and whatever you've built, or you're the production house that's going to make these movies.
Right
and
now,
keep it proprietary to yourself.
We think we're way ahead of the curve here, and bringing in people that Ash and Puya can train to work in pods of creativity to develop film under Fountain Zero is the way that we're looking at our structure today.
Modern pod shop.
Wow.
That's awesome. I think it's incredible.
Well, the film is going to be released we're aiming for mid-August.
Okay.
We'd like everybody to go see Nolan's film. Everything I've heard from people who have seen it have said it is spectacular. Awesome. And we're hoping that people who wouldn't otherwise go to the theater or aren't interested necessarily in the Odyssey will actually go out and see the Nolan film so they can then compare it to this, and we can get a real dialogue going about the future of AI and filmmaking.
Fantastic.
Cool. Thank you.
Thanks. Thanks for having us.
Good luck.
Coming up, Fed Chairman Kevin Warsh will testify before the House Financial Services Committee this morning. That's expected to start at 10 a.m. Eastern Time, and tomorrow he will appear before the Senate Banking Committee. Chairman Tim Scott's going to join us in the next hour. It's at 8:40 a.m. Eastern Time. On the programming note, J.P. Morgan CEO Jamie Dimon, Pennsylvania Senator Dave McCormick will join us tomorrow at 8:10 Eastern Time. Squawk returns in just a moment. So, take it away.
We're
Jamal Palihapitiya is here, founder and CEO of Social Capital, CEO of 8090, and host of the All In podcast. We were just talking about future of AI and movies. By the way, we haven't talked about the state of California and Paramount and this Warner Brothers deal. I wanted to ask you just about, frankly, the state of California and the regulatory complex these days, and sort of how you're thinking about what's going on in the state that you call home right now.
It's given me everything, so I will not leave, and I will keep building companies there and hiring people there, and you know, if there's taxes that I have to pay, I'll pay these taxes. But I just think that at some point we're better off addressing the core issue of why people believe this form of governance actually makes sense. Is it because they actually think it's better, or is it that they're just angry about a bunch of other things? And I think it's mostly the latter, so we should fix that, because there is no sane human being that could look at any of this information and think that we are well run. We are completely out of our minds.
So hold on. So you and Jensen and a whole bunch of others have said, I'm staying, I'm paying.
I'll pay.
You have a number of other friends that you know who have a very different view. They've either already gotten out or want to get out.
You don't really believe it's going to happen, though, and you're hoping cooler heads prevail on this crazy stuff.
Yeah, what's that conversation like?
You know, there was a period where I definitely thought about it, and I went around, I looked at different places, and I thought, wait a minute, California's incredible, Palo Alto's incredible, it's given me everything, and I just said, okay, mentally, here's the number, and just allocate it, and just let's move on with our lives and get back to building things that I think are important. The reason why people are angry, it's the same reason they were angry in 1890. It's the same reason they were angry in Europe in 1930 at the beginning. It's the same reason after 2008 we've had all of this pushback. It's the same reason. So at some point, we should just fix the core problem that everybody is shouting about, as opposed to allowing these other people to pervert the frustration they have into these dumb ideas and programs that are always about, give me more money and I will solve your problems. It just doesn't work.
So what do you see as then the core problem?
The core problem is there is a large number of people that look and believe that the ladder has been pulled up above them. Why do they believe that right now? I think very specifically technology has had this profoundly positive impact, but very few of us participated in it. In the way that we all think that we've made it better for everybody, looking at Instagram Reels does not make your life better. That's not true. Being able to have a functional search is useful, but it doesn't necessarily make your life better. So we have to answer the question, how does this economically benefit more people? And I actually think this moment, you know, the different question, why did I, after 25 years of working, decide to actually get back in the seat and run a business? It's because this is the moment that I think actually has a chance to address the core root cause of what these people are saying, which is legitimate. The problem is the symptoms, and then the people that take advantage of those systems are winning, and I find that really concerning.
So, okay, we're going to do 5% of your, it's going to be a wealth tax for you. Do you care that you're going to be out that 5%? Do you care that what it's supposed to be doing for the people that you're talking about right now, very unlikely it's going to have any effect on them, and they're going to piss it away,
It
and
will
it's just going to
not have an effect. It will be completely.
It won't help the
totally,
people, right?
It will be
So,
totally
but you're okay with
wasted.
that? They're going to do it to me.
No,
I don't need it, but it's. I know it's not going to help the people.
I'm not okay with it. But what I'm saying is, this moment is very unique in the sense that we have the level of bottoms-up awareness that we can create, whether it's X or whether it's the Nick Shirleys of the world, whether it's you who's been very consistent, whether it's me. I think that this is a moment where if you go and you raise all of this money, every single dollar will be traced, every single one. And the reason is because it's not how it affects the richest 0.001%. The reality in California is the overwhelming majority of the taxes are paid by people making less than $150,000. That is where they're going to go next. It is completely undeniable. And I think that we have to have a bulwark against that. And so, you know what? You want to take a piece of flesh? Fine, take it. But I think that there's a lot of us that will follow those dollars like Inspector Clouseau with a microscope.
Well, we haven't up to this point. We're finding out now about Leering centers and all this stuff and Medicaid.
Yeah, but now it's up to people to act. But the reason why people will not act right now is there's still more anger towards the small number of people that are winning, and I think we need to address that problem.
We got to pause. We're going to have a lot more with Chamath in just a bit, but we got some news breaking this time on Citi. Leslie Picker joins us with those earnings.
Hey, Andrew. Yeah, Citigroup's EPS jumping at 61% in 2Q, beating estimates, while its top line also surpassing estimates for the best quarterly revenue in a decade. All 5 businesses reported revenue gains, with the highest stemming from investment banking. That one jumping 34% thanks to growth in capital markets activity. Services, markets, and wealth each increased at least 13%, while U.S. consumer cards grew 1%. Equity markets helping bolster that division with gains of 45% in the quarter. Net interest income, the profitability metric for loan making, gaining 13% year over year due to growth in each of the businesses. Expenses and net credit losses were each up by 5% and 8% year over year, but provisions for credit losses were better than the street expected and lower than last year. Chair and CEO Jane Fraser saying in the release, quote, despite short-term headwinds from investments in our U.S. consumer cards portfolio, our resilient customer base kept fueling underlying drivers: loan growth, higher spend, and better credit performance than expected. Fraser, of course, has been orchestrating this multi-year transformation of the firm, which has helped bolster the firm's profitability metrics. Return on tangible common equity came in at 13% in the quarter, which was an improvement of 430 basis points from last year and at the higher end of their near-term target. Guys, the shares are down about 1.4%, could be on some of these higher expenses that we noted.
Okay, Leslie Picker, thank you.
We have some breaking news, different breaking news. Becky joins us now from Omaha. Becky.
Hey, good morning, Joe. Good morning, everybody. There is a news release that's just been put out by Berkshire Hathaway and Warren Buffett. This is regarding Warren Buffett's annual giving pledges that he has put out a release for the last decade. Every June, late June, early July for the last decade, he has put out a press release detailing his gifts to 5 different charitable foundations, those foundations being the Gates Foundation, the Susan Thompson Buffett Foundation, named after his late wife, and the 3 foundations of his children, which are the Howard G. Buffett Foundation, the Sherwood Foundation, which is run by Susie Buffett, and the Novo Foundation, which is run by Peter Buffett. This year, which is his 21st year of making these gifts, is a little different with the release that he's putting out and with what he's actually doing. He's making gifts to only 4 foundations this year. That would be the Susan Thompson Buffett Foundation and then the foundations of his 3 children. He is not making a charitable donation to the Gates Foundation, which has been the largest recipient of his gifts over the years, totaling more than $50 billion, I believe, to this point. So this year, here's the breakdown for it. There are going to be 8,000 Class A shares that are transferred into 12 million Class B shares. That totals about $6 billion. So the numbers are very big here, but the breakdown is very different. This time, the largest recipient is going to be the STB Foundation, Susan Thompson Buffett Foundation. It is getting a lot more money, about 10-fold more money than it has gotten in the past. I think 9 million shares of Class B, which translates to about $4.5 billion. The other 3 foundations, the children's foundations, are going to be getting 1 million shares each. And that, by the way, is an increase of about 50% of what they've seen in the past. His gifts so far, since he started giving back in 2006, total about $67 billion. 2006 when he came out and pledged to give away 99% of his fortune. And if you're doing the math based on yesterday's closing numbers, that's about $140 billion that he has left to give. He would like to see that giving expedited at this point. He said in the past that he would like to see that those numbers, the shares given away over the decade after his death. Now he says, just based on time, based on mortality, he would like to see a step up in that. He says, my goal is to dispose of all of my Berkshire shares within about 8 years. As I explained last year, my children are unfortunately growing older. The kids are somewhere between the ages of 67 and 72 right now. Buffett says, I have every hope that the 3 of them are able to carry out the disposal of my shares by December 31st, 2034. Guys, that's going to mean a much bigger numbers that you start to see in terms of the gifts that are given away, because if he were to continue to give at the pace he's been doing lately, which is about $6 billion annually, about 8,000 Class A shares annually, if he were to continue giving at that rate, it would take close to 24 years to give away the rest of the $140 billion or the rest of the shares that are remaining on this. The valuation of those shares has grown pretty rapidly over time. And so what started out as $100 billion has continued to grow even as he has given away an additional 5% of his shares every year. And that's just the law of big numbers and of compound interesting that you've seen play out over time. Again, the big news here, though, is that he is not giving any money right now to the Gates Foundation, which has been the largest recipient of his giving since 2006. Buffett sat down with us back in March right here on CNBC and talked about how he was withholding his judgment on what he was going to do this year with his charitable giving. He was upset by some of the things that he had seen unveiled regarding Bill Gates and the Jeffrey Epstein files, some of the things that had gone out. He told us at that time that he had not spoken with Bill Gates since all of the things became coming out, since everything became kind of released on some of those issues. And Bill Gates said that he had not spoken to Warren Buffett since January in testimony that he gave last month to Congress. We are going to get the chance to sit down with Warren Buffett, and we will talk to him about all of these things, about why he has changed his giving to this point, what he plans to do from here. We'll talk to him also about what he sees in the markets and some of the investments we've seen from Berkshire Hathaway recently as well, and we will bring all of that to you tomorrow right here on Squawk Box. Guys, I'll send it back to you.
Excellent. Go for it, Becky. Sounds great. Can't wait to see all the comments from the Oracle. Thank you.
Okay. Meantime, I want to get back to our special guest this morning, Chamath Palihapitiya, founder and CEO of Social Capital, CEO of 8090, host of the All In podcast. We were having a bit of a political conversation about what was taking place in California. I'm curious what you think more broadly about what's taking place in the country here in New York. Of course, we have our own mayor who's clearly on the left as a democratic socialist. How do you think about that right now?
I think that this has been a failed ideology for hundreds and hundreds of years. It's never worked. It never will work now. It will never work in the future. But the reason these folks are able to coalesce power is that they're able to breathe life into the ability of pointing a finger at some group and organizing people's frustration and anger. And I think it's just important to go back and fix that issue. So, if you ask me, I'm really concerned about the growing anti-Semitism. I think that is completely unacceptable, 100 trillion thousand % unacceptable. The pointing to billionaires, it's actually not even pointing to billionaires. It's specifically pointing to tech folks. Because, if you said you made $1 billion in pig farming, nobody would care. And you'd say, God bless you, go off and, go with God. So specifically around how tech people have coalesced power in a way that I think frustrates a lot of people. And then now you have the growing scourge of big government, which is like, give me more, I will take more, I will give you UBI, I will solve all of your problems. They never do. It's never worked. So you have to fix it. And so you see it in New York, you see it in California.
But how do you break how much do you think it is about the concentration of wealth? Because that is a real issue.
I think it is a real issue.
And so how do you break that concentration? That's sort of the question.
Well, I think that the way that I think about this problem is you've always had infinite human ambition. I mean, you just saw these two filmmakers. They have incredible ambition. And what you actually saw was that capability met ambition. So I think the real question is everybody is capable of like taking care of their own selves and having a decent life and taking care of their family and doing all of these very important things. The question is, have they been blocked somehow? Or said differently, is there an unblock? Is there an unlock? And this is where I think we have done a horrible job in Silicon Valley with AI, because AI is that great leveler. It is the thing that allows you to concentrate all this intellectual horsepower into this little magic box and give it to every single human on Earth and say, I will help you fulfill your ambition. So
but are you in the Jeff Bezos camp that says there's ultimately going to be a lot more jobs?
Yeah, there's going to be a lot more jobs.
So you don't believe that there's, when we talk to Tom and say, but maybe you won't be able to be an actor anymore.
These are very specific and nuanced arguments. One is a specific kind of a job will not exist. The different argument is, but many other kinds of jobs that are harder to name right now will exist. And I think if you look through history, the answer has been that the latter has always been true. You know, there's a great example that Jeffrey Katzenberg tells about this exact thing related to like making movies with Pixar when he went down there and did a deal with Steve Jobs. When he went back to Disney to get that deal done, people in Disney were up in arms because they said, you know, the animators wanted, you know, Jeffrey's head on a stake. But it turned out they got the deal done, and then it turned out 10 years later there was 10 times more animators at Disney. That's one example. Vinod Khosla famously said radiologists were going to disappear. Lo and behold, 5 years later, there are like umpteen more radiologists because it turns out the taste and judgment of those doctors mattered even more.
Right.
So I suspect we're going to look back and you're going to find that AI actually creates a lot more opportunity, but there's going to be dislocations for sure. The problem is we don't tell that story. Right now, we're still in this like navel-gazing part of just like underwriting our own book. If we need to raise money, we're going to prognosticate about the digital god. If we are done raising money, we're going to try to pull up the ladder by getting regulatory capture. That's the cycle we're in, so we should just call it that.
Yeah, see, it's never different this time, but I think this time I think it's different this time. This is qualitatively different. This is not a, you don't have to be a stupid Luddite to try to not want, I don't know, whatever that was, the weaving machine that they were designing. This looks, how can this AI movie not possibly displace a lot of Hollywood? You think everybody becomes a creative writer or something? Truckers, how can autonomous trucks not displace all the trucks?
I looked at this trucking example recently, and it turned out that after all of these years of Uber cannibalizing the driving market, the number of chauffeur drivers are actually 2x more than when they were when Uber entered the market.
How does that make sense?
And I think the thing is that there is this nature of humanity, which is that we're very entropic, like it just kind of expands as a gas. And we generate more GDP every year, right? We consume more things every year. Now, people may have an issue with that, but the point is that we are, as a species, creative, ambitious, we make things, and then we consume more and more things, which requires more and more people to do more and more things. And if all of a sudden this ends because you stop having emotions and an ego and need to eat and need to sleep, okay, maybe. But I suspect that most of our lives are going to be roughly the same, but we're going to have this, like the way that I think about it, like, you know, what is 80-90? I want to build everybody a digital co-founder. I want you, Andrew Ross Sorkin, to have in your pocket a super co-founder, a person that when it comes time to helping you, unambiguously helps you with anything and everything related to you being able to be happy, fulfilled, have an economic life, and sustain yourself. You could build a one-person company like that guy. You could build a 50-person company. But right now, you can't do most of those things. Because if you have the idea, there's a huge gap, right? Ambition tends to be infinite, but human capability is finite. And I think that AI will allow you to democratize that. That's a big deal.
I hope you're right.
The problem is we have people that are like, you know, prognosticating doom and gloom, and they're the people on the inside of the tent, which I find very troublesome. It bothers me deeply.
You're talking about these sort of AI doomers.
It comes from our own camp. It's our own side.
So, but what's that about then? Explain to me why a Sam or a Dario has gone to Washington and said, look, this stuff is dangerous. This stuff could mean that we have half the jobs that we thought we had. Are they doing that to protect themselves? Do they actually believe it? What are you suggesting is happening?
I think that they legitimately believe it. And I don't think Sam is as much as Dario. Dario is much more of this kind of like, he is very deeply afraid. I think Sam has toned down that rhetoric a lot, and I think Sam has much more been, you know, the glass is half full, especially in the last year. Why are they doing it? Honestly, I think at some level they believe it, but they've just been wrong consistently, and I think they're going to continue to say it. And at some point, we have to say, okay, hold on. Maybe underneath this, what's really happening is an opportunity to create a monopoly or a duopoly or an oligopoly. That's the natural reaction of all the rest of us. Let's not do that.
Right.
Let's not do that. Let him scream in the sandbox about how the sky is falling. Let him do it. What I and many other people will tell you, after decades of being in this industry, the sky is not falling.
All right. All right. Well, we'll have more to come from you. You used to tell me we're all going to die from climate change, and hopefully you don't think that. Coming up, California's billionaire tax will be on the ballot this November, but the state's wealthy are already finding loopholes to avoid it. Robert Frank will have more on that. Then later, you laugh at
Climate change.
Yeah. Tell me about it.
You're right. I was wrong. I'll admit it.
I love
right. I was wrong.
Oh, I love you.
I read the media.
All right, we are just a few minutes away from the latest CPI inflation data. CP inflation data, you'd really say, I think, wouldn't you? That's like HIV virus. U.S. equity futures, right? It is. No, CPI inflation data. No, but it's not the HIV virus. IBM taking a bite out of the Dow after the company warned earlier this morning, and Robert Frank is going to talk to us about that, right? Are you? Eventually, California's Billionaire Tax Act, Chamath here we were talking about, will go to voters in November. He's going to stay. But the wealthy and their accountants, that's why you're staying, are already finding out ways to reduce or avoid. Robert Frank joins us now with more. Hey, Robert.
We have an actual California billionaire to talk to about this. That's because the ballot measure, this is a one-time 5% tax on total net worth over $1 billion. Accountants are looking right now at 3 main possible workarounds. So first, charitable gifts. That could be a good thing. Many tech founders are looking into gifting unvested shares to lower their total net worth. Others are accelerating gifts to donor-advised funds and other charities. Real estate held personally is also exempt. So some people are buying property or transferring real estate from their companies or their LLCs to their personal balance sheets or revocable trusts. And certain assets held outside the state won't count against net worth. So they can buy art, planes, boats, vacation homes in other states or even other countries. That won't count against their total net worth. Now, also, states cannot tax treasuries. So some private banks are advising California clients to move a portion of their liquid investments into treasuries for a year. Now, proponents say all of this will raise over $100 billion in revenue from the tax. Other studies show it's going to raise far less, and in fact cost the state up to $4.5 billion in lost revenue from billionaires who have already left. Now, we should say that the total billionaire wealth in California is about $2 trillion.
Yeah.
6 people, most of whom have already left, account for more than half of that. So the question is, what's left, and then what will it raise? And then most California billionaires are between $1 and $2 billion, so they may minimize or avoid the tax through these other strategies.
What do you think their contribution was prior
About
to leaving?
$2 to $3 billion a year in total income taxes, estimated income taxes paid by California billionaires. So that's what they currently pay.
And you're going to say that.
So you would
that's going to chop in half.
That's right. Now, question for Chamath: do you think Mark Zuckerberg has actually changed his residency to Florida?
Oh, I have no idea.
Do you think, we know that that Larry Page definitely did. Sergey Brin probably did, right?
I don't want to comment on Larry and Sergey.
But you said on your podcast that you know for a fact that $1 trillion has already left.
Yeah. Look, there's a lot of my friends. I'm not going to name who they are because I don't think it's appropriate. But yeah, a lot of my friends have left.
You think it's $1 trillion?
I mean, it's in the neighborhood.
Do you think this is going to?
But look, it doesn't matter what that number is, and I'll tell you why. The real thing that is going to happen from here is every single kid that goes and starts a YC company is not going to do it in California. They're going to leave. Then there are going to be companies like Paramount who are just say, you know what, enough's enough. Because, again, this is not a billionaire
That's a very optimistic founder if they think they're going to get to $1 billion.
This is not really. I mean, these valuations happen all the time. The problem with the way that this thing is written is some kid who actually has a little bit of success and is able to raise at a huge up round, still has no money, all of a sudden is going to be given a $50 million bill. He may be only making $100,000 a year. This is why this law is so dumb. It's just a way of opening the door to go after other people. So the billionaires will be able to sue. There's going to be issues of standing. There's going to be issues of tax. This will take 15 years to meander through the courts at the state and the federal level. So the state of California will accomplish nothing. But in that meantime, they will hollow out the builders and the makers. And then separately, all the upcoming builders and makers will say, on the margins, I'd rather be anywhere else but here. And then separately, I don't know if you guys saw this, but there was this incredible A/B study. This was Florida versus Illinois, and it's almost the same like for like, where you look at the same kind of estate, the same kind of revenue, and completely different outcomes. And Florida has obviously done so much better than Illinois. And the question is, these policies don't work. So more of the same will result in more of the same. And I think California will at some point be faced with some sort of quasi-bankrupt moment. And then it'll be up to the federal government to decide, what do I ask for if I'm going to bail out the state of California? Because California technically can't go bankrupt. So all of those bonds, all the muni bonds, all of that stuff, what will the lenders ask for? That's the real question. And I think the way that state is governed today doesn't work.
People have been saying that about California and New York for years. They're overtaxed or overregulated, they're dying. In fact, we're seeing California tax revenues adjusted up because of this huge technology boom. New York the same because of the financial boom. It just, we haven't seen an impact yet from these high taxes.
You haven't seen it yet.
You think we will?
Well, I think the reality is that most people will optimize for their own earnings. They would here's the thing. I think Joe Lonsdale said this on CNBC, which I thought was a wonderful point. If I could give 95% of my wealth away, and I knew that all of these problems would be solved, I'd do it. It's fine. It's not a big deal. The problem nobody wants to give even 10 or 15% away is because we know that it's a joke. It doesn't work. They're terrible at what they do. They should not have these jobs. They should be fired. If there was a for-profit company, you'd fire all of these people. That is the problem. The policies do not make any sense. They are totally ineffective. They're about their own power and their own influence. And to that, I would say, that's completely accepted in capitalism. Go and start a for-profit company.
I know we got to go because we got CPI, but I got to talk to you after this. We're coming right back.
We're just seconds away from June Consumer Price Index data. So it is inflation data. Futures right now down 206. That's improved because IBM is still down quite a bit, and the Nasdaq is up. You should have seen the chip stocks. Software down, chip stocks up. Rick Sandelli standing by at the CME. Above 4.6 on the 10-year now, Rick.
Yeah, about 4.6. Here we go. This is our June release of the Consumer Price Index, expecting a headline number to be negative 0.1%. This is 4 times more negative, minus 0.4%. That would be the biggest negative drop that we've seen since 4/20, since basically COVID timing, which really affected, of course, all of the inflation data points. So that goes back, basically 6-year low. And if we look at the CPI month over month on the core, also under expectations, comes in at goose egg, 0. 0 would be the smallest amount. It would equal Jan of 21. To find a smaller change or a more negative change, or minus 0.1%, that's May of 2020. And if we look at the year-over-year numbers, year-over-year headline, 3.5, 0.3 less than expected, much less than the 4.2 in the rearview mirror. That would be the lightest since March of this year when it was 3.3. Year-over-year core, 2.6, 0.2 less than expectations, 0.3 less than the rearview mirror. 2.6 equals March. 2.5 brings you to February of this year. Quickly, if we look at the indices, 1913 this started CPI, and the indice comes in at 333.95. That actually goes back a month. It's not a new high. Usually every month we make a new high. So that's very good news. And if you look at the core index, started in 1957, very similar, 336.06, a little bit lighter than the historic high of last month. It's nice to break the chain. Usually these indices make new all-time highs every single month. What has the market done? You know what the market's doing. Interest rates moving lower. 4.25 was a 2-year, now it's at 4.17. And if we look at a 10-year, as Joe pointed out, it was at 4.60, down 3 basis points. Now add another 7, make it minus 10 because it's at 4.53. We see that the pre-opening equities and the Dow futures have turned positive. So this really is a big deal. And of course, we know how much of the Fed's ultimate decision may be riding on this number. Joe, back to you.
Crazy, Rick. Thank you. Let's get to Steve Leisman with the testimony from Fed Chairman Kevin Warsh, who's appearing before the House Financial Services Committee later this morning. I'm wondering if Chris Waller just said, "Oh, never mind." Steve? Anyway, go ahead.
That is an interesting question, Joe. Let me give the headlines and we can come back to that interesting question there. Kevin Warsh will say that he has the committee has no tolerance for consistently elevated inflation. The committee has a, quote, resolute commitment to restoring price stability. And with the correct policy, he says, the inflation surge of the last 5 years will be a thing of the past. Underlying inflation over the long term is determined, he says, largely by monetary policy. Economic activity is expanding at a solid pace. The housing sector is lagging. Consumption growth has been moderate. Manufacturing output has moved up steadily. He talks about the rapid pace of business investment appearing to accelerate, and the Fed is monitoring the impact of AI on inflation as well as on the labor market. Labor market, he says, appears to be broadly stable. Productivity growth is strong. He sees few layoffs, solid growth in nominal wages, and he talks about these task forces he's put together. Says, quote, we are starting a new chapter at the Federal Reserve. So, Joe, he doesn't lean against Waller, what Waller said. He doesn't promote it. Just basically elevates inflation to the main thing that he's talking about at the beginning of his speech, and doesn't talk about having too much concern about the jobs or the employment side of the mandate. So it's on inflation watch, but he's not affirming this idea that Waller gave, that if it's hot today. There was one hot thing in there I will just point out, not to take away from the overall coolness of this, which is the overriding story. But you did have core commodities up 0.8%, partially a surge in new vehicles up 0.5%. So those are worth watching. A 5.7% decline in energy. And the question is, what happens next month now that oil's back up to $80? Market likes it. I don't lean against that. I think it's the right move, but I'm not sure it's the trend right now because of the sharp decline in oil and energy that happened between the last report and this one, and then what happens the next time around.
It's in America.
Yeah, yeah. Amazing, Steve. And we should point out the Dow did turn around, and I think Rick's still with us. I think IBM's taken off 400 points. Goldman Sachs is adding 300 points. So I don't even know. The NASDAQ might be more indicative of, I guess, the response to those numbers, I think, Rick.
Yeah, the NASDAQ, I don't know how delayed my latest quote is, but it looks like it's nearing up 200 on the day. And you know what? Steve brings up a great point. With the issues in Iran ramping up again, one of the key drivers in this report was, for example, in the month of June, we did see a rather large drop in gasoline prices. Some of that may reverse a bit. Airfares are still high. We know that these issues with consumer electronics being affected by the chip shortage. So Warsh sort of mentioned all of these and what Steve just enlightened us with. And I think what's really interesting is how we forget that Warsh was kind of bannered as the easing voice of the president being sent down from the White House to be plopped in that chairman chair and lower rates. So I think there was great pressure on him to set the record straight. So I think there's a bit of overcompensation, not only on the market side, on the committee side, on the Warsh side, that will dissipate over time. Because I think Kevin Warsh is going to do a middle-of-the-road good job, and I don't think there's a bias inherent in the process. Maybe spurned governors that were in the running might be more of an issue to concentrate on. That's what everybody I was talking to yesterday was whispering about.
Yeah.
Hey, Joe.
Okay.
Joe, I need to correct myself. Joe, I'm sorry, I made a mistake. Core services was a year-over-year rate. The month-over-month was minus 0.1. And I will add that services less energy, or our core services number, was also flat. So when it comes to the concern, you had a good number for owners equivalent rent. When it comes to the concern about the underlying inflation problem, it didn't seem to be in there. It didn't seem to be anything that helped those who were concerned or supported those who were concerned about a broader inflation problem. It looked like core commodities as well as core services both did well this month.
All right, gentlemen, thank you. Thank you, Rick and Steve. You said I was 100% right on climate change.
You're 100% right on climate change.
What about Trump?
You're 100% right on Trump. He's fantastic.
Great person?
Unbelievable person. Very smart, on top of it. Open-minded.
Great president?
Great president so far. Yeah.
You think you got bad mail from the SPAC stuff? What's your trigger?
I actually
the TDS you can cut.
You know what's so funny? I mean, like, people can be lazy and reductive. There's enough people that I hear that are lazy and reductive, and they're going to end up where they're supposed to end up, in a little cul-de-sac of their own making. The reality is that most of us were lied to by the media about President Trump. And if you just go back to the source material, you should take away two things. One, he didn't say half the things he said. And two, why did these other people just fabricate what they wanted to say so that they could essentially assassinate his character? I think that that second thing is completely unacceptable in America, and there's still been no repercussions, really. I took the time to learn about it. I admitted where, you know, the way that I met him was I admitted on the pod, which, you know, has millions of viewers, and I said, I got it totally wrong. Because I went and I watched Charlottesville, and you know the first person to call me?
Who was it?
President Trump. And I got to know him, and I put the phone down, I called my wife, and I said, we got it totally wrong, we were lied to. And then I got to know him, and he is fantastic.
Okay, let me ask you a different question. There are going to be people who are watching, who are going to say, who are on the other side of this. What, if you were going to be critical...
Just people watching?
What?
You have to, as a human adult...
Just people that are
my question to you is, if you were going to be...
Some people say.
It's not as some people say.
Okay, go ahead.
No, look... By the way, I find the president very charismatic. So this is not the personal.
My life is dealing every day with.
I'm asking a different question. I'm asking a question. If you were to look at this president and say the things you disagree with the president about, or that you, what would they be?
I thought some of the ways in which some of the cuts were done in certain organizations was probably not ideal. I think it was a little too chaotic. In the end, I think Doge made a ton of sense, but I think there was too much glass broken. You know, just I'll give you a simple example of this, but we just published something this morning, we meaning 8090, we worked with CMS, and we took a 50-year-old system. This is the core system. It processes $500 billion a year of healthcare payments for Americans.
Right.
Nobody knew the system end to end, and they put us and Palantir in a sandbox and said, can you help us decode what's going on? And in 40 days, we, 8090, produced the 500,000 rules that process $500 billion of healthcare payments so that that team could figure out what's going on. Where's the fraud? Where's not the fraud? There are all these things that were possible.
Right.
It took a little bit longer because it was a little chaotic. That's an example.
Okay.
Second example, maybe the way in which we funded the research budgets of universities, I didn't particularly like that as much. But on the broad-based things that he did, I think that he has been way more right than wrong.
Where do you land on the war?
Wait, can I just say one more thing?
The war in Iran.
The most important thing that got me to see his point of view is he was completely binary on there cannot be nuclear war. And what's so interesting about, you know, like Warren Buffett in that last segment, who, by the way, should give all of his money if he wants to give it away to Trump accounts, I'm just going to say that. Way better for the man who basically told all of us to buy an index fund. Here you can literally gift 140 billion to index funds. If you ask Buffett, Buffett would also say the same thing. He and Munger used to say in their letters, there's only one risk for humanity, nuclear war.
Right.
And so when you have a madman country that is attempting to destabilize the ability for all of us just to live our lives, I think he was pulled into a situation he didn't want to be in because he believed strongly in no nuclear weapons. I support that because I think everybody is forgetting the chaos that that kind of thing can create in the world. Now, can I just say something else? You're allowed to disagree with the guy. You're allowed to maybe dislike the guy. But as an adult living human being that's responsible for taking care of your family, you have to get past the TDS. See where he's right. See where he's wrong. But the TDS thing that's stopping people from making a savings account for their children
Right.
that can give them free money,
Is it called Trump? Let's get.
it is insane.
We got Tim Scott probably likes hearing all this stuff. But Fed Chairman Kevin Warsh is set to testify in front of the Senate Banking Committee tomorrow after he faces lawmakers today. We're joined by Republican Senator Tim Scott. He's probably nodding, saying, "Don't interrupt this guy. He's on a roll." Chairman of the banking.
Joe, he's really good. I tell you what, I loved what I was hearing there, and frankly, we should, the proof is in the pudding. At the end of the day, we should ask ourselves, are we better off now than we were under President Biden? The answer is emphatically yes. Biden dug an economic hole. Frankly, interest rates got as high as 9%, inflation followed. There's no doubt about it. When you look at the two presidencies so closely beside each other, the one thing you must say, today more Americans are receiving more money, $250 a month. Why? Because of the one big beautiful bill, the Working Families Tax Cut bill, saved Americans about $5 trillion, which translates into about $250 a month. We also closed our border. Joe Biden said, I need more laws, I need more laws. Frankly, we just need more backbone. President Trump closed our border, and the Fed Reserve report that says that illegal immigration spiked the cost of housing. Really important information. So when you look at the facts on the ground, Americans can breathe a sigh of relief because President Trump stepped up to the plate and made critical decisions at the right time. And on balance, President Trump has been a fabulous president for our economy, even for working Americans who desperately need hope for the future, that their kids will be better off than they were. That's good news.
I don't know if you saw Steve Leisman before that talking about what Chair Warsh is going to say today. What do you want to hear? What do you want to know, Senator?
Well, there's no doubt that you look at the dual mandate of the Fed is really important. Price stability, employment. I also think that we have to drill into the artificial intelligence conversation in South Carolina. There are aspects in parts of South Carolina today that want to ban data centers. The real question we should ask is, how do we make sure that these data centers pay their own way as it relates to electricity and water use? We have to solve those problems so that our consumers, our constituents, breathe a sigh of relief, because when you zoom out, the most important question is, who wins the future? Is it China or is it America? Artificial intelligence will be that which threads that needle. I want to make sure that we are on the right side of history, and frankly, we have to solve the problems at home so that we can win the issue as a country.
If we had started the interview differently, I think we would have started with your late colleague from South
Yes.
Carolina, Senator Graham. Shocking. The one, there's no silver lining. There's nothing good about it, except that in hindsight, suddenly people are like, this guy was an amazing guy, right?
Yeah. Joe, there's no doubt, man. It's hard to forever forget Sunday morning, 3 a.m. I'm dead asleep and my phone keeps buzzing and I look over, it's Marco Rubio calling me. I'm like, what in the world has happened? And I picked up the phone and Marco says, Lindsey Graham's gone. And it just didn't register immediately. And he said, Tim, Lindsey is dead. It was hard to hear those words and to realize that Lindsey Graham, I've served with him for 13 years. He was one of the 4 senators I invited to my wedding. He was a close personal friend. He served our country valiantly, but he was just a dear friend to me, a part of our family, and we lost a great guy.
The one thing I retweeted and was the speech dressing down some senators on the entire Kavanaugh situation. Kavanaugh wouldn't be sitting there on the Supreme Court right now if it wasn't for that speech. I think Lindsey Graham.
100% agree. That's one of the things that we'll remember about Lindsey the most is Kavanaugh. His legacy will be foreign policy. But Joe, let us not forget, and I think almost no one remembers already, Lindsey Graham was the chairman of the Budget Committee. And so the budget tool reconciliation that we used to fund the Working Families Tax Cut bill, to fund our national security apparatus when every single Democrat said no, Lindsey Graham was able to get 50 plus of us on the same side. That's hard to do when you're herding cats in the United States Senate. Lindsey Graham pulled a rabbit out of the hat and really saved the average American.
I've got to let Andrew in before he explodes. Andrew, go ahead.
No, I was just going to ask the senator, I'd ask Jim off too, because we've been talking about the president, and you can like a lot of the policies of the president, and I'm not going to dissuade you of those policies, but just on the basic facts of measuring where we are today versus before, and by the way, I'm getting a lot of emails and texts from people, you know, the stock market clearly is better off, but just on the math, we have more debt, inflation numbers worse, consumer prices worse, unemployment is worse, jobs number is worse. Technically, you could argue the GDP number is stable / maybe worse. So, but that's just empirical math. And I'm not making a judgment. I'm just saying you're making
from when he left office.
Yes, from when he left office.
His inflation averaged 5%.
I understand it.
That's
unemployment.
It's from when he left office, and that's how people measure.
Okay, 4.3 to 4.4% unemployment is still so. Those are that was a total that was an exercise in sophistry. If you're comfortable with that, that's fine. Go ahead, Senator.
Yeah, Andrew, there's no doubt. I mean, you've got to take both presidencies in aggregate. The bottom line is simply this, that the average American was losing over $1,000 a month in spending power because of Joe Biden's policies. The first thing he did as president was pass a $1.9 trillion spending package.
If we average all 4 years together of the Biden administration, I agree.
That gave cash away. And the bottom line is this: Americans were worse off under President Biden economically. Under President Trump, they're better off.
Real wages were down.
I'm not arguing on behalf of President Biden or somebody else. All I'm just suggesting is there are people listening to you, Senator.
It's probably bad TV for us to talk over each other, by the way, so I don't want to make your show worse because it's one of the best shows on TV, guys. But I just want to say this. Take the numbers and take a deep look at them. The average American feels better today than they did in the challenging years of the Biden administration, which basically were 4 challenging
and Senator,
years.
I think that's especially true if you have money in the stock market. All I'm suggesting is I think that those who are measuring from the end of the Biden presidency to today may take a different view, or at least would they look at the numbers differently. Jamal was going to say something to me.
No, Andrew,
I think it's go ahead, Senator.
Oh, I understand what you're saying, Andrew, but the bottom line is simply this: that why are the numbers tough for the beginning of the Trump administration? It's because the cumulative value of 4 years of President Biden, things got worse and worse and worse. So, of course, they've gotten better, but they've gotten better because President Trump has made very hard decisions to close our southern border, to pass tax cuts so that the average American has more of their money to hold on to. Those are really important changes that could be transformational over time. And then you look at the birth of the artificial intelligence conversation. This is going to actually increase productivity, which will increase wages without actually seeing a significant drop in employment. I've sat down with some of the largest CEOs from Walmart to Amazon's retail CEO, and they tell me the same story. Employment numbers look good. They're not laying people off. Augmentation is really important, not automation. Augmentation means that people will do more work with more opportunities, more resources because of artificial intelligence. They won't lose their jobs, which would be automation. This is a good story for us to talk about as it relates to the impact of the Trump years.
What is
I think it's important to take a step back and realize you're making a very specific, numerically grounded comparison about what your opinion of President Trump is.
It's not my opinion.
No, I'm just saying, you can make a numerical comparison. Imagine if we were sitting here and we'd have to first declare 19 pronouns and we'd have to talk about, you know, the DEI, like I'm here because I'm like a Sri Lankan immigrant that grew up on welfare. I have to tell you my whole sob story. Where we were going was not a place that was oriented around productivity. It was around theater. But hold on.
I'm not disagreeing with that, but that's a different topic.
So I'm saying you have some valid points about where GDP could be or could not be. You should thank the lucky stars if that's what we're debating right now.
And that's a fair argument on that side too.
No, but the only part I was talking about, to take when he left office, gas prices were below $3. They're back to $3.80 now.
Right.
But they averaged $3.70 through his entire presidency, and we're up from $2.80 from the previous time. So looking at a point in time.
I understand.
And also, you know, unemployment is
typically
not.
the point in time is when the presidency of the last president ends and the new presidency begins. If you want in 3 years, 2.5 years from now, we can do the averages of both presidents, and then we can have a conversation.
There's no way
but that's not how people have that
There's
conversation.
no way we're hitting 22.5% inflation in 4 years. We're at 3. We're above 3. Okay, granted we were 2.8 when he left. We're 2/10 above, or 3, or even a point above.
Yeah,
maybe
but we didn't average. I'm not. Look, we don't need to have this debate.
At the end of the day, guys, here's what we know. If we were going to do what Andrew just suggested, we'd go back to December of 2020 and say gas prices were under $2 a gallon, and because of Joe Biden, they almost went up by 100%. So when you do just a one-spot check on the Trump administration versus the Biden administration, it looks fantastic because it was good. But when you do the exact same comparison in aggregate, take the Trump years versus the Biden years, and then take the Biden years versus the second Trump term, we're already heading in the right direction in a faster clip, which is really important. And that's why it's so important for your viewers to consume as much information as possible and come to their own decisions, but come to them based on the facts, not on our emotions.
Right, but then it becomes very hard to do the full comps because we'll talk about potentially a war in Iran and what happened in Israel October 7th. We'll go through that. We'll do that.
Let's talk about that,
into COVID.
But let's talk about it.
Well,
that's worth talking about. October 7th, 2023, we saw the beginning of a attempt at a Jewish genocide. And frankly, Joe Biden's first text were to tell Israel to calm down. We've seen exactly the opposite from President Trump when he says he wants to make sure that Iran is never a nuclear power, would save millions of lives over time. We cannot dismiss the different styles and, frankly, responses to crises around this world in the two presidents that we're talking about. The comparison is stark. The contrast is easy to see the difference in leadership, in content, in substance, and frankly, in results.
Yeah. See, you thought you were going to come in here and talk about the Humphrey Hawkins testimony, and you got the full squawk treatment this morning, Senator. And Chamath's mixing it up. It's all. I think it's all good. It's all.
I think it's great.
I think so too. Do I look this way? I do. I love you.
Senator Tim Scott, thank you. Appreciate it. Nice to see you.
Joe, y'all take care. Good to see you.
You bet.
Andrew's down.
Well, you're doing the.
Trying to do. It's hard.
Bunch?
Yeah, it's hard.
The best thing about your guys' show is that you are one of the few shows left on traditional television where people actually argue.
Right.
It's great because you actually see both sides of an argument, and you really do have to go out of your way to watch your show and just blindly think of only one side. You have to go out of your way to be an idiot.
Well, they're still out there. I'm getting the tweets. I'm getting the tweets right now.
What are your tweets saying?
Oh, I can't.
You can't read them
those people
aloud?
are-
I've blocked everyone who doesn't like me.
Rule number one of social media, Joe, the people that slag you online secretly love you. They just want your attention.
Like, I don't answer anymore. I can't.
Just gaslight them.
I ask them now, I can't believe you're got on a computer in prison. Or are you on a watch list? I ask a lot of them, because they're
Because we only got a couple minutes, I want to talk about SpaceX with you,
Yeah.
because you were an early investor in SpaceX.
I mean, so
And-
I was an investor in Peter Thiel's fund. And that was my first exposure to SpaceX, which I didn't even realize.
So I think the big question now is, it's a publicly traded company.
Yeah.
How big the TAM really is, how quickly or not. I mean, there's a big debate still about this idea of data centers in space and what that ultimately looks like. There's potential competition. There's the idea that he may want to merge or buy Tesla. How do you see all of this?
Yeah, I think it's an incredible company.
And we should say you own shares of the company.
Yeah,
today.
I was an LP in Peter's Founders Fund 2, which may be the single best venture fund or any fund of all time. It's literally like the outlier of outliers. It's like a multi-hundred approaching 1,000x return, his fund. And then 2011 I invested, and then 2016 he acquired a company where I was a large investor in called Swarm, which is their direct-to-sell business. So I really believe in Elon. I believe in SpaceX. What is the interesting thing that I think is worth taking away? I think that people are probably underestimating the short-term value of two things.
Okay.
One is the industrial logic of acquiring Tesla.
Okay.
There is a very obvious industrial logic to put these two businesses together, to have one capital structure, to have one balance sheet, to be able to raise money for the broad swath of things that he's doing as one vehicle. And then the second is, I think that you're going to see an enormous business in the domestic cellular market before you see a lot of other revenue streams hit. What do I mean specifically? The spectrum he bought from Charlie Ergen, I think, is going to get lit up. This is just me speculating.
Right.
I think Elon's going to have some sort of a phone device. I think he's going to.
You think he's going to have a phone device itself, or that he's going to be partnering with an Apple and a Samsung and others, and he's going to put transponders in? By the way, he's going to need transponders in all these big cities.
I think it makes much more sense for him, with the prevalence of Starlink, to go direct to sell and go to consumers and say, I gave you internet access. I would like to give you an incredible new mobile phone service. It's integrated with all of these other services that you need. Would you like it? From AI to payments to how your car works, all of it. And I think that there will be some plurality, tens of millions of people all around the world that will pay him incrementally for that. I think that is what's being slept on. That is the key asset. When I saw him do that deal with Charlie, I thought, oh my God, here it comes. That is the thing.
Let me ask you, to me, the big question on Starlink in this regard is the multiple on an AT&T or a Verizon or a T-Mobile, or frankly, even globally, any of those players is materially lower than the multiple that he has currently. Now, maybe you could argue the multiple comes down, the earnings go up, and somehow they meet in the middle. But what do you think?
I think that the multiples of free cash flow of all these public companies are going to come way in. I think that as AI becomes more prolific and powerful, I don't think you can have PEs, price to earnings ratios, that all of a sudden think about 20 years of cash flow streams. I just don't think that's possible. Why? Because a competitor with a reasonable barrel of oil, right, starting with how we started, of intelligence, will be able to compete with you. And so the market will probably move all of these companies to being worth some multiple of the first 5 to 7 years only. So I think what's happened is that when you look at SpaceX, it has all of the infrastructure plus its own AI. If you look at the mobile carriers, they're missing a lot.
I'm making you an independent director of Tesla for a moment. How much does SpaceX have to pay for Tesla for the independent board to say this is a fair deal, given the various incentives and power that lies in all this, and Elon obviously is at the center?
Great question. I think if you look at if you look at like a traditionally trading business, it's probably a 20 to 30% premium, but because of the volatility of Tesla and the number of shareholder lawsuits that may come up no matter what, I mean, if he eats a sandwich the wrong way, he unfortunately gets sued, so it's probably a 50% premium.
A 50% premium?
Yeah.
Chamath Palihapitiya, everybody. That was a hell of a 2 hours.
Love you guys.
You go take a
We
nap.
really enjoyed this.
Yeah.
Come on back. This
Thank
was a lot
you.
of fun. Thank you
Appreciate
for doing
it.
this with us.
Thanks, Joe.
You said what? Once a
quarter I'll come on.
Once a quarter.
I don't come
He's
to
got to
New
wake
York.
up
I
early
don't try to
once a
come to New
quarter.
York
Just
anymore.
once a
but
quarter, he's got to wake up early.
That's great. It's worth it.
It was good.
Thanks for including me.
That was a lot of
Thank
fun. Take a quick look at the markets, by the way. The Dow has come back, especially given what's happened with IBM this morning. NASDAQ up about 314 points. The S&P 500 up about 12 points.
Yeah, most of that is IBM, in fact. Make sure you join us tomorrow. Squawk in the Street is next.
Good Tuesday morning. Welcome to Squawk in the Street. I'm Carl Kingston here with Jim Cramer, David Faber, host 9 of the New York Stock Exchange. It was already a jam-packed morning with bank earnings, IBM's downside pre-announced, Warsh on the Hill, but then a cool CPI brought some much-needed relief to bond yields, 10-year coming off the highs of 4.63. Brent hits 87, that's up a full 20% from recent lows as Iran hits tankers on a third night of U.S. strikes. Gas prices do look to hit $4 a gallon again today in several states. Our roadmap's going to begin with shares of IBM taking a hit. On pace for maybe the worst day ever, company out with a preliminary Q2 miss along with some blunt comments from the CEO.
Also had 5 of the nation's 6 largest banks were out with quarterly results of their own. We're going to break those numbers down for you. Plus, it's a big event this morning on Capitol Hill. Kevin Warsh, the chairman of the Fed, is going to testify before Congress. It will be the first time he does that since taking his new job.
Let's start with IBM tumbling on these preliminary results. Company cites weakness in its software and infrastructure business as clients shifted their spend towards servers, storage, and memory in advance of potentially some price increases. In his letter to investors, Arvind Krishna said, quote, "This quarter we faltered." Jim, down 24 pre-market, I think would be the worst since at least the early 60s.
Yeah, I spoke to Arvind, and Arvind Krishna, CEO,
Yeah.
alluded to. I mean, pretty abject. Look, there are these concerns. He did not anticipate them putting the magnitude of the capex reprioritization, which you mentioned. But I also think that clients were distracted with rapidly evolving industry-wide cybersecurity concerns. This is Mythos, and both Nikesh Arora on Mad Money, David, and George Kurtz just now from CrowdStrike said, look, they each have briefed 1,000 companies. Their teams, 1,000 companies on Mythos.
Right.
And Mythos has frozen a huge amount of spend that I did not know it had gotten that bad.
Yep.
So I pass it on to you.
Company reports the actual earnings on the 22nd, so 8 days from now.
It's a
The key, I think, will be, Jim, do they have the confidence to give us some sort of a forecast that the orders that did not come in this quarter will ultimately come in because, as they said, companies were perhaps more focused on cybersecurity, or as they also said, spending on servers, storage, and memory? Or is this longer term in nature and some real reflection of a lack of execution in terms of their sales force?
Well, I do think that, remember, this is a company that has a mainframe, okay, and the mainframe software stack was disappointing. The mainframe sales were disappointing. I mean, the revenue, it looks like it's almost in line. Street looking for 17.86 billion.
That'd be about 1%.
Yeah, but it's that software revenue, which is people looking people looking for 10%. It came in at 5%. Infrastructure revenue down 7%. That's their mainframe, and so I think my answer is it may not come back.
Really?
Yeah.
Then if that's the case, is a 24% decline in the stock price warranted?
Yeah, I think it is. I mean, this is hard. A lot of people know Arvind's done a lot of things very forward-looking, but I think this is a fundamental shift of this is buying compute. This is what we talk about. This is NVIDIA, and this is SK Hynix, and this is Micron. The money's going to another area, and I don't know if it flows right back.
ServiceNow, CRM, all taking a hit pre-market.
Yeah,
the more
software
pernicious
bad.
theory, Jim, is that this is part of the move to direct enterprise, on-premises, Starbucks. We've talked about these things.
I thought the Starbucks thing was much more important than a lot of people realize. Trying to cut out $400 million from IBM, from Microsoft. Microsoft has been creeping up here. I talked with Mark Benioff. He would tell you that's completely wrong. I mean, that his business is better than ever. Adobe business is bad. ServiceNow would tell you business is not only better than ever, but they're going to, they're going to surprise a lot of the people who are negative. All I know is that this is not where you want to be, because it just doesn't resonate. Where you want to be, I mean, look at this SK Hynix. Now, look, SK Hynix. David, what do you think it's selling for the multiple for next year?
8 times?
3.8.
You're kidding.
No, I'm not kidding.
Wait, what?
3.8.
I thought I was good at 8 times.
You were wrong.
I was.
That's sort of the running joke this morning, is that if the Kospi is truly popping a bubble, it's the cheapest bubble that ever got popped.
I mean, of course, this comes back to the idea that usually these companies are going to have their earnings cut by a quarter. Remember, Micron was losing big money. And when you're losing big money, when people are like saying to Sanjay, why are you spending more money? He says, well, I'm losing so much money. What money do I have to spend? And yet he still did spend money, which is why he's doing better than the others.
We have even less capacity right now, right?
Yeah,
If we hadn't spent
this
that
is
money.
about compute. It's about compute, and it's about cybersecurity. Cybersecurity is, look, that's top of mind. We know that. But when I say compute, it's like this is about all the things that we talk about. It's about the spend. I mean, you remember yesterday you said, listen, you spend the $50 billion, that's the ante?
Yeah, for 5 gigawatts of building the buildings, yes.
Right, but I'm just saying,
when
I'm reading today
what they
about
call a powered shell.
A gigawatt in Salem, PA. What was I doing buying land in Upper Bucks when I could have been buying in Salem? Another 100 miles, I'd be a rich man.
You would be. Listen, yeah, there are stories every day now about farmers selling their land for data centers and reaping a big reward.
Beverly
conceivably. By the way, we should mention New York State. No surprise, a 1-year ban from the governor on new data center development, or mega data center.
The only thing they let us do is get the sand from Corning. Best sand in the world.
Best sand in the world. Yeah, it's good to know.
Yeah. Thank you.
You're welcome. All right, but just to go back to those software companies, because we are seeing a broad sell-off, despite what is an increase, a nice move in the NASDAQ. Is it justified based on this language from IBM?
No, it's justified on this stupid ETF that takes everything down. CrowdStrike and Palo Alto, which are being big beneficiaries, their stocks are going to be down because all the money is in this. Well, most of the money that trades is in this index that can take everything down.
You mean IGV? What are you talking about?
Yeah, the IGV. And I've tried to revise the IGV. I told management, listen, I'll revise this IGV in a nanosecond. It is such. Actually, I did. I gave them something.
I'll tell you what's going to have a good day is the DRAM ETF.
Oh my God, yes!
I mean, some of these gains, you mentioned SK Hynix, Jim, but Glowworm's up 6, Western Dig's up almost 7.
Yeah, I mean, Glowworm was down badly yesterday. Glowworm's down 100 points from its high. I know that networking and security also. Look, I'll give you one. Cisco.
Cisco.
Buy Cisco, and not the SYY kind, by the way.
No, I understand.
Do you?
Yeah.
You see Micron up 50.
The CSCO,
it's like the old days.
that's already up 55% for the year.
Well, it's the best Dow stock. Them and Caterpillar back and forth.
It's not done. It's an inexpensive stock versus these others. It spent a lot of money on cybersecurity. When it bought Splunk, which was great cybersecurity.
I'm aware. No, listen, they're all relatively cheap, unless somehow the spending were to drop precipitously for unknown reasons.
Okay, so yesterday they were relatively expensive. Today they're relatively cheap.
Well, no, you just told me SK Hynix is selling for less than 4 times earnings. Next year's earnings.
I'm saying that yesterday was a horrible day for everything that's great today. So what is that? Are we going to play this game every day, come in here and say, you know what, ARM's, well, no, ARM today, there was a negative piece about how they didn't get a foundry.
Oh, I saw Citi take it higher. ARM, that is.
Well, I mean, yeah, look, ARM, there's a case for ARM because it's in everything and it's hardware. But I mean, you look at somebody wants to make a name every day. Like this fellow who hasn't liked Apple since the 100.
I knew you were going to get to this.
Well, why not? I mean, why not?
He
Let's
takes
go
Apple
to him.
Underweight.
Yeah, well, he wants people out of a great opportunity, and I don't blame him. Sometimes analysts say, you know what, I'm gonna make it so no one makes any money on Apple.
You're not finding it.
I will.
You'll get to it.
There it is. He found it.
Okay, so what has he done? When was the last time?
Look what was at the bottom of your pack.
I'm going to give a little quiz to my partner over here, Mr. 3-Point. When was the last time you liked Mr. Brandon Nispel? I probably just sitting there right now and saying, "Oh my God, he's making fun of me." When did he like Apple last?
I have absolutely no
idea. How about 178?
Okay.
Wow, he really nailed it. Jeez,
Yeah,
I'd rather.
and we didn't even mention HSBC taking IBM to reduce.
Yeah,
that
but
was
they-
the other sort of
well,
negative
why
call
don't they
today.
just
Wait,
all-
after the.
Now this
after-
was before the news.
Oh,
before.
yeah, and, I mean, look, the thesis is that it's double thesis that the
IonQ taking
right.
their quantums.
and then the idea that they are going to get hurt by the carriers not giving you such a discount. Oh, and that the service stream is not as good. How many times have I told Tim Cook? I said, is there any way you can figure out the service stream ahead of time? He said, absolutely not. You'll never be able to do that. I mean, you know, there's Tim Cook is like saying, you know, Tim, I think I know it. Do you know that like, Tim Cook tells he likes the truth?
Does he?
Yeah, he likes the truth. He can handle the truth.
Let's get to the banks really quick while we've got some time. JP Morgan, Goldman, Citi, Wells, B of A all posting quarterly beats. Goldman was the only one really higher post-print. Jim, some of these IB fees, 50 at B of A,
You know,
30
incredible.
at
I was
JPM.
talking to David Solomon this morning, and he asked me how I'm doing. And I said, lousy. You know, he said, why? I said, because I quit Goldman Sachs. I mean, look at these numbers. Fastest EPS growth I've ever seen, 92%. Fastest revenue growth, 39%. How about this Goldman number on, did you see that they're doubling some of these businesses, David? I mean,
Equities up 72.
Yeah, no, the
is gonna-
numbers are staggering.
they're saying
the
they're
only
simply
thing to say
extraordinary.
is that we've expected the numbers to be
No, not
staggering.
this good,
I
David.
mean, maybe not this good.
Not this good.
All right, for Goldman, but I would point out JP Morgan's numbers were quite strong, and the stock is looking down.
Well, yeah, I'm laboring over JP Morgan.
So,
the FIC number wasn't
You know,
perfect.
it depends where you want to go and how you want to break it down.
Well,
But
how
yes, global banking and markets revenue up. I mean,
53%
is an enormous
Equity
number.
sales and trading up
I hear ya.
72%.
I hear you, all of it, as well. And their efficiency ratio, yeah, no, there's very few things you could take shots at with Goldman's report.
Oh, it's too expensive on book value?
I don't know. I'll leave that to you.
You know, can I
You're
just say
you're
that
the
before
prognosticator
you
here.
sell JP Morgan, understand that people always hold JP Morgan to a higher standard, and this has now become a frequent situation.
I mean, nobody's better at raining on a parade than Jamie Dimon.
Oh, no, he's increased.
I mean, that man.
He's now talking about tectonic shifts.
That man talks about tectonic shifts. Do we have the sound? I don't know if we do from the call. We don't. All right. I'll read it to you.
I remember when Cezanne was a tectonic shift from Rembrandt.
Oh, well, we don't have the one I'm reading here. He said, obviously, when we're delivering these types of returns, you know, it's really firing on all cylinders. It's getting close to as good as it gets. We just don't know how long it's going to last.
Why didn't you just kill your own
He's
stock?
talking about AI capex, fiscal stimulus, more efficient regulation, Jim, all of those
Well,
things.
remember, he cares. His mind, I think, is much more on making the country great, security.
We're in a very healthy, active, exuberant market with very high prices and very high volumes, and we benefit from that. We just don't know how long it will continue. It can get better,
David
but
Solomon
how much
said-
better,
David
I
Solomon
don't
told me
know.
that.
So those are words from Jamie Dimon, who's going to be on Swap Box tomorrow.
Yeah, I tried to get that. I last yeah, with McCormick.
David
I
Solomon
did
will
my
be
best
with
to try to
me
get that. I
today
lost that. With McCormick.
at noon.
He's with McCormick.
Excuse me?
He's with Senator McCormick.
Oh, got it. With
Yeah.
David McCormick.
Yeah, in Pennsylvania.
Right.
You know,
There's
we're-
David Solomon.
we're all
He's
the
with me.
We're all, you get Solomon?
Yes, I do.
It's my turn to get Solomon.
No, it wasn't.
All right, well, he's got a lot of good stuff to say. Although he would also say it's good. You know, look, this is an unbelievably good time. But what I told David was, I think you should be focusing on all these businesses that are not episodic that you're doing so well with. There's just a really good wealth management
Can we
business.
quickly come to a couple of the others? We came into this quarter. Wells Fargo, of course, has been the laggard. You got kind of negative on it.
All right, so Charlie told me, Charlie Sharp, the CEO, made it very clear how wrong I was. I like that.
Okay.
It was a good, consistent quarter. You know, the stock had a run, but they're taking share. The investment banking number did surprise me, David, as being pretty good. Do you want to use my Claude cheat sheet, or do you just want to continue to rely on what you have?
I'm going to rely on mine. You can stick with yours.
Average deposits
I
of
can't
10%.
read- Yours is so small, and
Well, you gotta
I didn't bring my reading books.
Average loans up 12% year over year. The net charge-offs were good. By the way, he is
pretty
still pruning headcount. Now, Bank Bank of America is still hiring people,
Right.
but it's not going higher. You know, the table of employment.
Yep.
And I think AI, if Jensen were here, which he most certainly isn't, Jensen Wong from NVIDIA, you would start hearing that people are just doing more with AI. So it's not like they have to hire fewer people. Since each person does more with AI, and I think Charlie Scharf, if you were, you would say the same thing. Buying back a lot of stock. I didn't expect him to buy back that much stock. The return on common equity here, 17.7, that was a surprise. It was all surprise, and he pantsed me. He pantsed me. It was a technical term.
The stock is not looking up.
Well, okay. You want to play that game?
I'm not playing a game. I'm just stating a fact.
Only Goldman is up, but I
Yeah, mentioned Goldman's the only one of the
Bank of
five.
America was the most consistent and never gets mentioned.
Here's Scharf. We know that such favorable conditions do not go on forever, and so we're being selective about how much and where to grow.
That sounds a lot like Jamie Dimon.
Well, I mean, when you're doing the home run derby, that doesn't go on forever.
By the way,
Who
I
cares?
do want to hear that from the leaders of the nation's biggest banks, because we are in an extraordinary period. As someone, a very senior person at one of the banks said to me, it's the biggest gamble in the history of capitalism.
But I ask about Iran, they say not a factor. I say, get this, Charlie said, these guys are first name guys. Charlie said, Sure said about, you know, PNC. Now, Charlie said that whole K economy is wrong, that the low income is doing better. I think Brian Moynihan say that the low income is doing better. Goldman has no low income, so I don't know.
Well, we did get real average hourly earnings, Jim, positive after CPI. We were running a 0.4 negative, back to 0.3 positive. That's good news.
Yeah, and like Warsh, I mean, I read his whole piece. Hey, he's anti-inflation. Well, no kidding. So's every other central banker. Nothing there. Nothing there to see. It's absolutely fine. The CPI, people are going to say, well, wait a second. You know, it's this time is the one quarter where, you know, next month will be much worse. I don't know, because some of the things that are down, that are sensational, auto insurance have been sticky the whole way. Medical care, I thought medical care was going to be up. And apparel, apparel's been up every single month. So I don't know, these things are a little sticky.
Yeah.
Used cars and trucks.
Apparel year on year 3.9. Jim, it's all about gasoline up 20.
Well, if the president were not the president, then that's a really stupid thing to say. But you know, tariffs and the Strait of Hormuz, new toll over there.
Yeah, well, you can
choose. Beginning, you get a toll at the end.
You can choose your toll.
Yeah, there's no easy pass.
It's like you can go through the easy pass and pay one, or you can go through the other one and pay another, but you're going to pay.
Right.
Which means it's going to be more expensive.
So have you ever seen a bridge where you pay at the beginning, you pay at the end?
Yeah,
no one takes that bridge, and that's why I think we're seeing the amount of oil they're buying down again.
4 million barrels,
They're ruining the whole Iranian scenario.
That was the big thing, I think, that many of the prognosticators
But the
missed.
times today is like when they start buying again, that's going to be the problem.
Maybe they've got something, I don't know. But which has higher? The last quiz for David. Who has higher inflation, U.S. or Mexico?
Mexico.
First time in history, Mexico lower inflation than the U.S.
Really?
Yeah. They say, listen, we don't have tariffs, we don't have a war with Iran, we got a lot of good things going. Mexico, you want a good currency?
Well,
Peso.
you're shine-bound, huh?
Peso.
Not the Argentinian.
No, that went down while we were talking. Scheinbaum is really an amazing CEO.
Take a look at the pre-market. We will dive into CPI. IBM, not the only negative pre-announced, by the way. HCA's down pre-market on their warning for the full year. We'll get to P-Sky, Kenvue, get you set up for Warsh in a minute.
Jeez.
had some crazy swings in yields today. That's a look at the 10-year. 2-year actually went from 4.26 to 4.18 in seconds in the wake of CPI, although now off of those lows back to 4.20. We'll get a look at that. We'll get Kramer's Mad Dash. We'll count down to the opening bell on an incredibly busy Tuesday. Don't go anywhere.
All right, we got 6 minutes before we get started with trading here at the New York Stock Exchange. Time for a Mad Dash with that man.
There is so
you
much.
mentioned ARM very briefly.
I was going to say downgraded because they don't have the foundry capacity, but that was initially the drawback when Renee Haas first said it. But the stock went up 100 points anyway. I think it gives back some. But David, we have seen an amazing rally in UNH, which I think is going to have the biggest upside surprise this quarter, in Humana, okay? In CVS, David Jordan doing incredible things. But it doesn't extend to all of healthcare. This morning, HCA Healthcare, our largest hospital chain, holy cow, David, it's been a rise in uninsured patients and a decline in surgical volumes. Surprising. I'm going to have to do some work on this. I don't know why there's a sudden decline in surgical volumes. I think we have to do work, but I will tell you that there was some negative notes saying that there could be some problems, but this is the IBM of the healthcare business today.
I guess we can take a look. Is Tenet still out there? There are a number of other, right?
Yeah. And by the way, I'm going to reiterate that UNH reports in 2 days, and that company's back. I mean, I think that it's just going to be a blowout. By the way, the non-blowout in the banks was James Frazier. It was good.
It was good.
It was good.
Yeah.
It was just good. You know, good.
All right, we hit a lot of stocks in the Mad Dash here.
Well, what are we supposed to do?
We hit ARM, we hit UNH.
This is called our job. We're doing our job. It's great to do our job. Oh, yeah, and by the way, Trump, let's talk about Trump, and why don't we talk about, like, how we feel about income and how we feel about things that don't make us any money, because, man, I can talk about those till the cows come home. I can also talk about cows. Texas Roadhouse is really looking good here.
Is it?
There. Okay.
Perfect. By the way, if you haven't gotten enough of this, you can catch us anytime, anywhere by listening to and following the Squawk on the Street Opening Bell podcast.
I'm here. He's here. Yes. Cheers. He's here. He's here. In the times. He's here. Always. He's in the day. Okay. Behind the scenes. Oh, we had a little pop. Well. Inflation. It's like all of a sudden it's a big deal. It pisses me off so much. Oh, I left that shot. Shit. I know what I'm gonna do. I'm gonna be right back. Definitely.
SK Hynix up sharply in the pre-market, recouping some of the losses from yesterday's decline on those AI jitters. Jim, we got a couple days of trading under our belt. We'll now look for some options-related products that launch.
Yes, and the Samsung story is denied, by the way, about them doing the same
they did
thing.
say we're not considering ADRs.
Right. Now, SK Hynix is the best at something that everybody is short on. Now, you do get this, I mean, the companies all need more compute. I mean, SK Hynix may be an example of what we're talking about with IBM's problem. People are spending far more on something that they didn't spend. And one of the things that I think people don't remember, in the old, I was speaking to someone who used to run a major capital equipment company. In the old days, SK Hynix was just like Samsung, which was just like Micron. They all were the same and interchangeable. You go to SK Hynix and say, listen, I'm getting a great quote from Samsung, you cut your price. That's over. Their stuff is now better, and therefore there is less cyclicality. They have a you can't pit them against each other anymore, and that is why the price keeps going up. You can't pit them. It used to be something that we call football, where you could bet one against the other. Not anymore. Wells Fargo down $2. Wow. I mean, the banks are just getting killed. What we regard as being, David, I know you're jammed there, but a lot of the banks are pretty good.
At the big board on Wall Street is venture capital firm Madrona and the 2025 IA40 winners, comprised of private tech companies focused on applied AI. At the NASDAQ in Times Square, it's Zoom, celebrating its 15th anniversary. Founder will be with Jim tonight on Mad. And at SIBO in Chicago, it's the internal floor operations
Can I
team.
just say Eric Yuan is a great American hero. By the way, he had money with some of the AI, with some of the frontier models. But I can tell you that I'm going to ask Eric directly versus Microsoft. Where is he? Because a lot of people feel that Microsoft is existentially in trouble in a lot of things, including perhaps Teams. And how much easier Eric's product is. I happen to like Eric very much for multiple years.
That's interesting. Jim, the Goldman IBM effect is going to be like barbells on the Dow at the open here.
Well, I know David speaking with Solomon. This is Solomon's time. I mean, if you can't make any money with SpaceX here, David, with some of these giant, they've got a lot. They have the M&A, and they also have the giant deals. It's interesting. Wells Fargo is doing some good investment banking, but they don't have anyone who I recognize. But they are taking share. I think that stock being down is foolish.
You do?
Yes, I do.
So is this recognizing that you're turning a bit in terms of your sentiment on Wells Fargo?
I am turning a little bit because line by line, Charlie Sharp schooled me. And look, when I get something, when I'm too critical, I added 35 basis on this thing for my trust, and I sold some.
I know you
And
did.
he asked me whether I sold the whole position. I said no. He said good. I will reward you with faith. This decline does not, in any way, shape, or form, make me think that Wells Fargo is not something you shouldn't buy. I think you should.
Okay. Well, the market doesn't agree with you right now.
Well, okay, so right now the market doesn't agree with me.
And it is an outlier that we have mentioned any number of times because of the strength largely in the stocks of all the big banks other than Wells Fargo.
Well, what do you think about Bank of America here just doing a consistent great job, but not shouting, we're great, we're great, we're great. And yet that had a very big ramp going into the quarter. Look at that chart. And yet it didn't let us down, and it doesn't get any of the credit that I think it should. Every single one of their lines is terrific. They just keep growing deposits, global banking revenue really good, FIC really good. Doesn't get credit, Carl, because they do not sit here and tell you we're the greatest. They are very matter of fact, and Brian Moynihan's been very matter of fact, and you've been making a lot of money at a stock that sells at a ridiculously low multiple. People keep saying, and yesterday there was an article in the Journal, how expensive this market is. Well, if it's expensive, then how can a consistent grower with just making a fortune for people, for the bank itself, how can a consistent grower sell at 13 times earnings with the market being considered expensive?
Yeah, we got a couple 70% increases in equities, both at Goldman and B of A. Asset management up 20. Sales and trading up 33, Jim. Maybe the more constructive thing was at Wells, non-performing assets lower than expected, net charge-offs lower than expected.
And Charlie Sharp is shrinking that workforce and getting a lot more out of it. I think that when we hear Charlie and we hear later on the CFO, I think we're going to say, why did we sell that stuff? Okay, David, not everything, there's a lot of snap judgments being made that are not right this quarter already. Now, I question, for instance, initially Yum opened virtually unchanged. They have a terrible thing going on at Taco Bell. I don't know if you've seen the lettuce problem.
Well, I'm aware of the lettuce problem, yes.
And yet the stock opened unchanged. Well, I mean, what do people like? Where they don't know, but they don't know what bad is. I mean, you buy Chipotle on this. Chipotle's going to have a comeback on this.
You think so? On the lettuce problem?
I tell you, Scott Boat right. It's been getting better. Now there are different ones. I mean, I called them the other day and said my Chipotle's hideous and it's horrible on the Upper East Side.
Expanding to Mexico is kind of interesting.
Yes.
See that?
Yes.
Yeah. Just to come back to the banks, guys, it is notable that they are all now up other than Wells Fargo, that being the stock prices. Obviously, we did not hear from Morgan Stanley in its earnings, and there they can be weighted a little bit more towards the wealth management advisory side, but you can see we're seeing signs of life across the board here, other than Wells, which is off its lows already as well.
How can Morgan Stanley do? We don't even know what Morgan Stanley's going to do.
I did.
JP Morgan made a 9-point move, dude.
Yeah, I did quote Jamie Dimon earlier. I read you sort of some of his comments from the call, but we do have them in terms of how he describes the market right now and whether it can get any better. Take a listen.
I just think we're in a very healthy, active, exuberant market with very high prices and very high volumes, and we benefit from that. We just don't know how long it will continue. Could it get a lot better than this? It can get better, but how much better, I don't know.
It is pretty darn good right now, of course.
Consumer
and it is due in part to what we talk about here every day, the enormous need of capital for so many companies that are building out AI in various ways.
How about highest earnings of any bank ever?
$1 trillion in CapEx, and then what that creates. Sorry, say that again?
Highest earnings of any bank ever, profitable consumer, asset management, trading, investment banking. How can you not want to own that?
Right. I guess because you can, but if you listen to him, you're like, all right, this might be as good as it ever gets.
He did say that he's going to stay on a couple more years, so no, it won't be. He's really good. Do you know they call it the bank? Does that ever bother you?
The bank?
Well, when you meet someone who works at JP Morgan, well, the bank. How about, Goldman Sachs? No, the bank. I've been dealing with that at home. The bank's doing quite well. What bank?
The bank.
Yeah, the bank.
I hadn't heard that.
Good for them.
I've covered banking in part for a very long time. That's where I started in 1987, covering banking. Never heard that. The bank. I like it though.
My stepson's marrying someone from the bank.
The bank.
In
I'm
10
sure
days.
that's a thing, right?
And she's fantastic, and the bank is fantastic. And my father-in-law worked for the bank, and my sister-in-law works for the bank. I worked for Goldman.
You did?
Yes, I did.
Yes.
You don't need more though, just so you know.
What's interesting, do we have the diamond slot ready on AI? He did make some interesting comments on the number of workers that they were able to cut because of AI. Take a listen.
We're going to use AI to do a better job for our clients. That's our job. We fully expect it'll have huge efficiency in certain parts of the company. And we analyze it all the time. I think we've mentioned in the past, we spend quite a bit of money on it, and it's kind of just starting. So we do expect that. I think you have to put in the back of your mind that there are areas where we may just accelerate what we do that we want to get done anyway. Think of certain applications and customer-facing things and stuff like that. We are preparing to make sure we can retrain our people, and we have had discrete areas where we did reduce jobs by 30% or 40%, and most of those people went for jobs elsewhere.
Right, so 30 to 40 will get your attention, even though you were retained.
Look, when Jensen Monk started swinging through New York, there were scattered numbers of people who wanted to see him, and Jamie wanted the whole day.
Right.
Jamie and his team, and they spent hours with Jamie so he could understand it personally. The guy, obviously, he's such a significant figure in the industry, but good for him. The fact that the stock was down was really an irritant. And when I went over it with them, I couldn't find a single thing. Maybe Fit wasn't that great, but what a great quarter for them. So, let's move on.
Finally, guys,
move on?
We're going to move on in a sec, but I did want to also just come back to IBM because the loss of market cap there is extraordinary.
Yes, it is.
Some 24% on that warning that we got. It's unusual to hear a company make a decision that their numbers are so far off of what had been anticipated that they need to pre-announce.
Armin did say it was just the last few days, not that long.
Right.
That happened. In other words, this was really the first part of the quarter was good.
Yep.
But you're absolutely right, and that's why I said maybe it's not going to come back.
Right.
The money being spent on the things that are working, Carl, is just extraordinary. When I talk about compute, when I talk about components, I mean, whoever thought components would be worth so much?
Yeah. And Solomon on the tape now saying client activity especially strong in Asia, driven by robust AI capital demand. We didn't mention the FT piece on DeepSeek.
No. Oh
Seeking
my God.
fresh money at 70.
And so many of our companies say, look, if it's low end, I use DeepSeek. If it's higher, then I will go to Anthropic, and I will go, OpenAI. By the way, ChatGPT, they're talking about Codex is what I have to use. They're changing the nomenclature. This thing happens so fast. Guys, I'm gonna segue to you.
Thank you. Yeah, I wanted to change it up a little bit. Come back to, of course, the story that we're going to be following closely here. Paramount, of course, and a deal to acquire Warner Brothers. It is now facing a legal challenge from a group of state attorneys general led by California that raises fresh questions about the transaction's path to closing and the broader regulatory scrutiny that is facing media consolidation. Joining us now in a CNBC exclusive is Jeffrey Kessler. He is Paramount's lead outside counsel in the state AG matter, also co-executive chairman of Winston Taylor. one of the country's leading antitrust and trial lawyers. Nice to have you here, Mr. Kessler.
Good morning. Glad to be here.
Glad to have you here. I want to start off, actually, if I can, on just timing. A lot of people out there, risk arbs and other investors, just sort of want to understand. The state AG seem to have said, and I want you to confirm this is the case, that they're not going to seek a TRO right away, that they'd like you to just wait to close your deal while this regulatory matter hits the courts. Is that correct?
Well, they filed the TRO last night.
Oh, they did?
So they are seeking a TRO, but we had indicated to them that the intention of the company is to be able to close starting on July 22,
right,
when we expect to have all clearances, or we can work out a schedule to get this all decided by early September. That would be perfectly acceptable to the company if that would create an orderly procedure. The state's rejected both alternatives, so right now we have a TRO that's been filed.
The TRO's been filed. I know if they get that, they get 14 days, then they got to file another one for another 14 days, correct?
Right, so if they got a TRO, it would last 14 days. The most it could last is another 14 days. And then we have to go to what's called a preliminary injunction anyway. We do not expect them to be able to get a preliminary injunction.
Why don't you expect them to be able to get a preliminary injunction? Let's get to the heart of the matter here.
So this is an antitrust case. To stop a merger, the merger has to be anti-competitive. This merger is pro-competitive. Anybody who knows the entertainment industry knows it is in deep trouble. Linear television is in deep trouble because of streaming and because of cord cutting. Theatrical is in deep trouble because of the advent of streaming and what it has done. This merger is designed to make a stronger linear television company, to make a stronger theatrical producer, and to create a true competitor in streaming that could go toe-to-toe with a Netflix or a Disney or a Prime.
Right.
So that's something that consumers should want, labor should want, theaters should want. That's why I don't think
it's not clear that that's the case. Certainly when it comes to labor, some theater owners, they cite 3 different markets in their complaint where they say your total market share will be above what is a threshold and creates an anti-competitive environment. Why release theatrical distribution, films, tentpole films and things of that nature, anticipated top grossing theatrical films, that's the second one, and then the basic cable channels as well, the ability to license them. Are there, first of all, are their market share definitions correct in this complaint?
No, we don't think they've gotten the right markets, but more importantly, they haven't gotten the right competitive effects. Because if you look at it, let's take theatrical distribution. It has already been publicly committed that this merged company will produce no fewer than 30 theatrical films a year, which is more than both of them have been producing in the past. And they will have the traditional 45-day window for those films. So that's going to be
But they say they can't hold you, they're not going to be able to hold you to that. And they would point out Warner Brothers CEO promised 16 films in 23, delivered 11, promised more than 20 in 24, delivered 9. Now you're making similar promises, but they're saying, come on, look what happened with Disney and Fox. It went down, not up. Why are you guys going to deliver on this promise of 30?
So that's an easy one. If they want us to agree with the states that we will give them the right to enforce the 30 commitment,
how dare you?
Already we would do that.
You told them. So what happened?
How dare you?
Potential settlement discussions. I mean, did they go nowhere? Can you characterize what the states were looking for?
I cannot.
And I don't want to.
Time to resolve. It's not an overnight solution.
I'm here.
Volatility there. And that's going to keep the oil prices up. And for us as managing
so far things are looking clean.
How do we take that risk into
SPX.
consideration? In our view, the best way to do that.
Other things looking very clean right now. Very clean. We're leading out of the gate with 2 sets of 3 white soldiers. Let's get it. Check out the YouTube audio. Can y'all hear YouTubers? Yellow. Is there sound? My name is Washboardjim, Spelunk, Spelink. I'm dreaming of a white Christmas. Come on and get in the mood to whip out some trades. Oh yeah.
Subscribe wherever you get your podcasts.
I'm Diane King Hall on the floor of the New York Stock Exchange. When
Okay, we're setting up here again.
with analysis
If this thing wants to be bullish, it'll break out here. A double bottom after three white soldiers. Two sets of them. Very bullish looking. Yeah. Be serious. His name's Washboardjim. Yep. He's trying his best here. Okay. Relevance. Magnificent. You never did answer my question yesterday. I'm do 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 do. I'm living down on lonely street at Heartbreak Hotel. I face you lonely, baby, so lonely I could cry.
Relative highs or anything lately, so not much of a directional
Found a
movement there
place to
either, which
dwell.
is reflective of our moving average situation. Our volume profile shows we do have a node here near about 90, as well as here our point of control, the heaviest trading area, that comes in near 86, so those would be some standout areas to watch out for. Finally, our expected move. That comes in for the July 17th expiration, the end of this
Double
week.
bottom on
About
Amazon.
10%. Meanwhile, the August expiration
Meta.
here, our yellow box, plus or minus about 9.8%.
636.84. We might have a new support.
Here.
Shut
Yeah,
up.
absolutely. And today is a great.
Shut your mouth until you're spoken to. 645.85. And I think that I should have noticed that. And a fine-tune adjustment right there. Yeah, that should have been it. I bet you that's right on the penny, too. I found a new place to dwell. Being down on Lonely Street at Heartbreak Hotel. Oh, look at that. Right to the frickin' penny. Oh. I've been shamboozled. And there's that stupid guy winking at me again. Okay. I think I'm going to go into the bathroom and relocate some urine into the toilet. As I do that, I'm going to turn my water onto the coffee pot. I got to go run a bank statement to my accountant today. And I think that's it. We came back right to the VWAP on the /ES. I mean, that's something you could look for every single day. If that's the only thing you had to trade, just watch the VWAP on the /ES. We had a VWAP and inverse head and shoulders off the 200 SMA. And then Jimmy just called a double bottom here. Actually a triple bottom. Off the three white soldiers. Do you understand? Magnificent? You haven't answered my question from yesterday. You want me to repeat it? I'm dreaming so many times. AMD came back and hit the 200. So we had 3 black crows off the 200. For this to be bullish, you have to gain respect above the 9. I repeat that same strategy every day. I do.
Policy makers still are fully committed to restoring price stability. We'll have to see if there's going to be any kind of surprise. There is some talk about Fed expectations about there's a
Can't
chance
wait to
the
retire
Fed's
fully.
going to raise rates in
These guys, they just talk about the same shit every single day. It's just wasted breath. AMD coming back to double test the 200 SMA on a double bottom yay. Mr. Mayor, Jim, my great grandma wants to know if you're single. Not no more. I started dating Adrian Barbeau. Hello, my name's Adrian Barbeau. Yippee-yi. Where's it at? Oh, what happened here? He's trying his best. That's on the 1 minute time frame. AMD double bottom of the side. Let's see, AMD double bottom 200 SMA on minute. Do you have a problem with that? Yes, I do. Magnificent. You still haven't answered my question from yesterday. Mm-hmm. You hear me? How did I get in this private channel here? Magnificent, how did I get in your private channel? What the fuck is this? How dare you? There we go. Oh, what was the question? The question is, do birds have feathers? Magnificent. Do birds have feathers? And the answer is most birds do have feathers. Thank you very much. We really needed that information yesterday, but sometimes it's just the way it is. Oh, yeah. Swing low. Did anybody find that answer useful into the trading strategy? Say yes. Okay, I'm going to ask you to prepare yourself. Does anybody know what the VWAP is? We have inverse head and shoulders at the VWAP. Now, question I asked myself, are we going to double bottom the 200 SMA on the SPY, or are we going to maintain and hold this right shoulder of the inverse head and shoulders at the VWAP? Could I get an answer? I'm wearing my white shirt today that I bought at a garage sale for 50 cents. And I really like it. Today I'm wearing a white shirt that I bought at a garage sale for 50 cents. Coming on. You ready? Prepare ye in the name of the Lord. Still could hit that double bottom. Yes, I did wash it before wearing it. Yay. Okay, well, I have to drive all the way across town to get this done. I've got, oh shit, I got 2 statements to do. Hope this guy gets what I'm running. Personal auto oil change. Oh yeah. Okay. Oh yeah, I got another payment I gotta make. Personal. I'll do this when I get back. Ooh, that's in my business. I can go there. Discover. And my gasoline. Okay. Counting has been done. Now I just got to go to my accountant. Mr. up a little bit, Google up a little bit, coin pulled back to the 200, AVGO needs to break the 200 on the 1 minute. Called the reversal on the Meta. I mean, no, I did not. Microsoft, that's not what I'm talking about. 3 white soldiers on Meta on the 15 minute. And we're pulled back to the 63. Outlook is a penny stock, and LADS oh, SPX. Okay, here's SPX at the 200. Prepare ye in the name of the Lord. Prepare ye in the name of the Lord. Prepare ye in the name of the Lord. BT had a little breakout pullback. Okay. As Washboardjim looks at the SPX for the double bottom off the 200 SMA, does he want to take it before he goes and sees his accountant? That's the question. It's highly important that he sees his accountant today. Fuck. None of these make any sense. What are they doing to my platform? SPX. I mean, that doesn't make any... Huh. It's like backwards. No, this makes no sense. The 14th. No, this makes no sense at all. I can't trade. It doesn't make no sense. Look at here. They just keep going higher the farther you go down on the... It's like totally backwards. I mean, it doesn't make no sense. It don't make no sense. This is bullshit. Huh. I don't get it. I don't think it wants me to trade today. So I'm going to go do my errand. Huh. That don't make no sense. Anybody else? Huh. Your sort on the strike is descending. Click it again and go the other way. Where do I click it? I don't know where to click it. Oh, I got it. The strike. Okay, I got it. I got it. I got it. I got it. Fuck. That misses me off. Oh, I'm glad it didn't, because look at there. I didn't, that would have burned me. Now we're at the 200 on the SPX. We've got to be a little bearish today. Okay, here's my other support. Okay. There's your flush. And I'm going to go see my accountant. This is a gap fill, gap fill, gap fill, gap fill, gap fill on /ES. Gap fill /ES. Gap fill /ES. That could be a possible reversal. It could be a solid support. Now it's got to break the 200 to move. This SPX or the 9. And then it's got the 21, which had found resistance earlier.
Bottleneck bros can take us to those year-end targets without the participation of the hyperscalers because, I mean, it's very much proven in the first half that they're able to. I'm just wondering how sustainable you think that is.
Pretty sustainable, baby.
It's difficult to make a case for it because, like I said, the semis are making 20% of the
Is that reversal?
Historically averaging only about 5%.
Boom, baby.
You know, if we put it in retrospect, only 8% of it, 8% of semiconductors were part of the index during the.
So let me explain this strategy to anybody that is willing to listen. You had this big old candle. I didn't see that candle earlier. So I called it he called it a gap fill. But this previous high right here, so that's three trades I've showed you today. The 200 SMA, the gap comes back and retrace the gap. You see how it pulled back and hit that gap fill? The previous high, and then broke out again, and then came back down and retested it. And you can lead out with 3 white soldiers and a hammer on the SPX. And I'm in and out of this trade already after the 3rd soldier. But zoom out, and if you see a breakout, that becomes a gap. So you want to draw a resistance line and or a support line in those, in between that gap. And that was like in and out of trade here, just like within 3 minutes. You got the VWAP, which brought my attention to it. And then we came down and hit the 200, and that's what got me in the trade, to think about getting in the trade. So I waited. I asked myself a question. I said, are we going to pull back and hit the 200, or are we going to bounce off the VWAP? And the way it's been here lately is I'm second guessing everything. You know, I don't want to, because you can see how big this run has been. It's just a little bit kind of risky. You got to pay attention to how big the runs. It's like this SanDisk thing. It pulled right back to my support, and I wasn't even paying attention to it. 2380, are you freaking kidding me? And it came back right to the previous high right here. And I wasn't even paying attention to it. BTBT. Amazon triple bottom.
To drag on for, but maybe we can take some comfort into how much it came off after those oil prices initially spiked and we saw that supply side shock. Michelle, just getting to you.
So rookies, jot down these 3 ideas. First thing in the morning. Jot down VWAP trade. Jot down the 200 SMA. Jot down the gap fill. Jot down 3 black crows and 3 white soldiers. 4 things you could possibly look for in that first hour and a half trade. Don't ever chase. Learn to trade the retracement. Last step, pay close attention to the candlestick patterns, the candlesticks. Every time you see a reversal, look at the candlesticks and see what stands out. every time, over and over again, until you finally understand the concept. Spinning top, hammer. And then I'll be back. I'm going to go run and see my accountant.
Which did make a slight move in the markets. What are you looking out for as far as some of this commentary today?
Yeah, I think if we look at the Waller comment specifically on that one, the CPI is obviously a good report on that. So he did open the door for a potential July hike.
Quarter taxes due if anybody wants to pay them.
Given that we saw a little bit of an improvement in CPI. Also,
I'll be right back.
This is kind of what we expect out of Warsh. I do really expect that he's probably going to try to keep his cards close to his chest, close to his vest, if you will, and not give too much forward guidance, because we've heard a lot that he is really not a fan of forward guidance because he believes that it really ties the Fed's hands going forward and limits the amount of debate that they can have. So I don't think that he'll give that much forward guidance. I do expect, though, that they're going to state that he's clearly focused on bringing inflation back down to a more sustainable level. So I think that's going to be a big highlight and a big focus in terms of ultimately what that means for policy. I don't think that he's going to lay too many breadcrumbs. We saw in the Powell-run Fed, they did lay a lot of breadcrumbs. They would kind of navigate to or give a little bit of a heads up to the market of what they were likely to do at the next meeting. I think that's going to be a shift under this Warsh Fed. So in terms of what it could potentially mean, my expectation, Sam, is we could see more volatility on the short end. It tends to be that the short end of the yield curve is a little bit more reactionary, a little bit more influenced by expectations for Fed policy. You've seen that today with the decline in CPI. You're seeing a big decline in two-year treasuries. So I think that's really where you can see a little bit of movement on the yield curve today.
Okay, we'll be watching. It doesn't look like he's saying anything that seems to be moving the market at this point. I'm just seeing a couple of alerts right now. Inflation is a choice, and the Fed has the tools to deliver price stability. We know that that was very much the key focus in his first FOMC speech. Michelle, getting back to you and picking up off from where you left off with the South Korean Kospi and the volatility that we've been witnessing. I mean, obviously, some other markets like China have been benefiting from that mass exodus we saw, particularly last week, that rotation back into some of the so-called hyperscalers, you know, Alibaba, the internet names, etc. TSMC, obviously, the next cap off the rank as far as earnings. We got a little bit of a preview this week. I'm just wondering what you're making of that rotation in Asia and whether it is sustainable. If we do see the memory volatility continue in areas like the Kospi.
Yeah, the Kospi has really become a barometer for the AI trade, and that's because the memory chip companies are in a bottleneck position in the AI supply chain, and they've had, again, explosive growth in profits, and they really have become quite large in market cap. You know, they're all over $1 trillion in market cap, the three largest companies within the EM index, two in South Korea, one in Taiwan. And then in Korea, we're seeing really this growth of leveraged single stock ETFs. That's really also quite explosive. And so the Kospi has really seen a lot of volatility. It's swinging 5% or more intraday in 14 of the last 16 trading sessions. And again, that's, you know, reflecting back to the US. And typically, when you see this kind of increased volatility, you know, if it's outside of maybe some macro influences, it happens either because the market is in transition to a new regime, so it can be maybe a pause that then goes higher, or it could be a signal of something greater. And we just don't really know which of the two is the case right now. And so for emerging market investments, you know, growth in earnings is great. But the risks have grown because of this volatility. Valuations appear attractive, but they're not really a great predictor of future returns in these really highly cyclical industries, you know, that typically look the cheapest on peak earnings and look the most expensive on trough earnings. And we don't really know, are we on peak earnings right now or yet?
Right, and I suppose it's too early to tell. I mean, it's day 3 of SK Hynix's ADRs trading right now. If we do see that, hopefully narrowing the gap, as some have been pointing out, with valuations, names like Micron, and what it might mean for that so-called Korean discount either. As you say, valuations still remain pretty attractive at this point. Thank you to both of you for joining me today. We obviously covered a lot here, a lot of ground. Cooper Howard, Director of Fixed Income Research and Strategy, and Michelle Gibley, Director of International Equity Research and Strategy, Schwab Center for Financial Research. Coming up, it's time for the morning trade. We'll get a closer look at IBM and why its shares are tumbling today. Morning Trade Live will be right back.
Moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time.
Have you ever watched an interview and thought, I wish they had 5 more minutes, or I want to know how they discovered that hidden gem? That's exactly where Market Matters comes in. I'm Marley Caden, and our podcast is slowing things down. We're going beyond the earnings to get to the heart of the people and companies driving the global economy. If you want the full story, not just the headlines, Market Matters is for you.
Back at the
Subscribe wherever you
200.
get your
Oh, no,
podcasts.
never mind.
While others recap the news, I help you read between the lines from what's moving markets to what's next with sharp takes and market know-how. Follow me on all social media platforms at Diane King Hall and connect with me on LinkedIn for more.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
We're back on Morning Trade Live. Let's focus on the chart for IBM. The company did hit an all-time high of $332.46 on June the 2nd, then stumbled and recovered before a steep drop in today's session. This vertical cliff you can see right now with this 25 or so % decline is apparently the biggest drop on record. So let's get to the culprit here. It's not Marley Caden, but she's going to give us the details as to what exactly is. It looked like a preliminary report here, Marley. Just break us down exactly what they said.
Yeah, they gave some preliminary results, Sam, basically disclosing that earnings are going to come in a little bit lighter than expected. And that's why we're seeing what you just showed there. If it holds this loss right now, we're at 24.33% lower on the day. It'll be its worst day of trading since 1972, which is when it went public. It has to close down more than 23.7% for it to be the worst day on record. Otherwise, it's the worst day since 1980.
The gap trade, look at that, how beautiful that was. In and out, that's 100% plus. Oh, IBM. I think I did mention IBM yesterday on Voice, but somebody wasn't listening. Someone didn't want to listen to my beautiful music. Not naming no names. Naming no names. Naming no names.
the year heading into the pre-market session today. But now we're down more than 25%, of course, with this move, this very steep decline to the downside.
Well done, huh?
Timing-wise, I'm fairly certain with compliance rules and everything, Oppenheimer had this note written before IBM released these prelim results. But Oppenheimer this morning also reiterating its outperform rating in a note with a $300 price target up from their previous target of $320. Saying that they, think that we got a 20% upside from here. Now we're trading down at 219.45 with this 24+% move to the downside.
What about their miracle of Intel?
Getting ahead of some potentially bad results or bad price reaction to these numbers on their earnings on July 22nd, but certainly a pretty significant reaction.
What the fudge?
Today.
Yeah, and you just wonder what they're going to say in the guidance as to how long it's going to last. If clients are shifting their spending towards hardware away from software, if that's just kind of like a one-off, maybe a couple of quarters type of scenario, but certainly having an impact on broader sort of legacy names and not what the software sector needed when, investors had kind of just come around to wrapping their arms back around this sector once again. But the IGV is still higher, so not every software stock is getting hit by this. Marley, thank you so much for the details. Let's trade this name now with Tim Bigham, options strategist over at Pilot AI. Brutal session for IBM here. How would you trade it for example purposes?
Yeah, certainly Big Blue having a blue day in a big way today, to say the least. Sam Vinton taken out to the woodshed. It'll be probably the worst drop since 1987, which is actually when I started trading on the CBOE floor. So that shows you how long it's been since we've had this kind of carnage in this stock here. But I'm looking at some glimmers of perhaps hope here. I think that 225 level may at least staunch some further downside. I know we're below it now, but that has held over the past couple of years. And I'm taking advantage of a big spike in implied volatility as well. Going out to August, past earnings, selling the August 200 195 put spread, getting in about $1.50 last I looked on this. It was trading around $1 when all this started to start the day. So nice return on risk here. Still plenty of cushion, 10% further to the downside, even after today's drubbing. So I think at some point the fact that the stock is down 25%, but the miss on both the top and the bottom line was only about 10 to 12%. So valuation's getting pretty cheap here as well. At some point, value players, I think, will step in and just take advantage of the drop. Where that is not exactly sure, but I like to give myself plenty of cushion and get paid pretty handsomely in the meantime on that out-of-the-money put spread.
Well, okay, and in 1987, I was just reading here, in fact, IBM was ranked the #1 company in the US by market value at that time. So, yeah, interesting move that we're seeing today. Let's see how much damage we see. Tim, really appreciate it. Thank you so much. Tim Bigham, options strategist, Pilot AI. Coming up, we'll take a closer look at international headlines impacting global markets. Morning Trade Line will be right back.
Find out what's shaping early market action. Tech check, options corner, futures.
Okay.
Technical analysis, morning movers covers it all.
I'm going to go do my favor.
Every trading day at 8 a.m.
Get my jing out of the way, and I'll be right back.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are. Live from Chicago, this is Trading 360. I'm Marley Caden. We track
Marley.
market forces, market trends, and company news that shape investor decisions, all with
You got a
expert analysis
megaphone.
and actionable context.
Megaphone
From inflation data to sector
means it could come back down one more time.
It's a comprehensive view of the market every trading day. Trading 360.
So, pay attention to the megaphone. What if motherfuckers touch you here? Whoop. Wrong channel. Spy megaphone pattern.
Is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's markets.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
It's a lie.
It's a make or break level for this stock. And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
That's a lie.
My parents didn't really talk about money at all.
Oh God, here's.
In college, everybody around.
I'm going to teach you how to become financially unstable. If I can do it, you can do it too.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Sometimes, you know, you could have done better.
Goldman Sachs, nice little bounce
For where
today.
you invest. Level up and invest smarter with Schwab.
That sucker's strong.
We're back on Morning Trade Live, looking at the 5 big banks that reported earnings this morning. A very different picture to the pre-market. In fact, earlier, a lot of them were down. Goldman Sachs was the only one that was higher. Now, it's a bit of a turn of events. You've got Wells Fargo, which is down 1%, while the rest are higher. Goldman very much getting rewarded for its great report, up 8% right now. JPM with this record trading quarter that we saw as well, putting on 2.5%. BFA up 2, Citi up almost 2 right now. So let's go inside out on these bank earnings. And what
He's not in anything. Congratulations.
Economy in the markets. Joining us now to discuss this is Greg Holter, who's the Director of Research over at Carnegie Investment Council. Greg, so nice of you to join us. So a record-smashing quarter here, where I would say they did certainly, these executives,
I'll be back.
Highlight tectonic risks. I think that was Jamie Dimon's words, including the inflation picture, the macro backdrop. But all in all,
We got a
they're
megaphone.
benefiting, from the
So this
trading
before I
desk, a lot
leave,
of underwriting, that steepening of the yield curve. How would you characterize?
I'm going to call I'm going to call the 63 the pivot point inside of the megaphone. And we got the 200 down there, which would be a leading indicator for the inverse head and shoulders. Would be a stronger buy, I think. Or it could get all the way back down to 749, do a triple bottom, and then come back up. Right now, you're bullish as long as you stay above the 63 on the SPY. But that's called a megaphone pattern. So you play it within, and you think, okay, we could have a triple bottom. So you want to set your alert off these two things right here. This one here, set your alert. And that'd be the inverse head and shoulders. And that will catch you down at the triple bottom if that doesn't hold. And that'll also be an orb alert. 749.65. Do you understand?
They're kind of leading the market right now.
That's coming down.
Again,
You got the 200.
Price leads fundamentals. We're certainly seeing that in spades right
Then
now.
last.
What do you make of the reaction in these markets this morning? I mean,
Excellent.
Obviously we've
Excellent
got a
reaction.
CPI print, which is helping. I mean, particularly with yields and
And I'll be
stocks
back.
getting very much some relief from that. But given what we saw in the pre-market, it looked like Goldman Sachs was the only one that was getting rewarded for what was a phenomenal report here. Most of them have picked up now. You still got Wells underwater. Do you read much into what we've seen as far as the market reaction today?
Well, I think you had some of the banks report before the CPI number. The CPI number was the first time down on a year-over-year basis, I think, since 2020. So that kind of helped. And some of the names in the tech trade had pre-market numbers that looked pretty positive. I think when people listened to calls, peeled back the onion, heard what was said by the executives, things looked pretty good out there, and I think the stocks responded accordingly. The momentum is certainly there with the financials, and this was just another opportunity to reward the shareholders, or the share prices, if you will, with given those very strong results.
Yeah, and obviously we've seen some pretty strong trading activity. I mean, obviously a record for JPM. Goldman Sachs had a great report as well. We know that they've been benefiting from a lot of the volatility that's been caused because of the Iran war, etc. They've been benefiting from a lot of the underwriting that they've been doing with the summer of S1s and IPOs. How sustainable do you think that part of the business is?
Well, I did listen closely to what Bank of America had to say, and their IPO pipeline seems to be very strong. Investment banking activity generally is very strong. I think we're at a record level in terms of M&A globally, 2.3 trillion or some huge number like that. So that continues very well. They did very well in Asia. I think these, unless there's some sort of event out there that's going to slow this stuff down, it appears that they're set at least very well for the next 3 months.
Who are you going to be watching the closest moving forward? Because it doesn't seem to be a short-term story right now that it is the issue. I'm just wondering, you know, sort of medium to longer term, who are you going to be sort of keeping a close eye on?
Well, there's two companies in the banking area specifically. That would be JP Morgan and Bank of America, just because JP Morgan is so big, and then Bank of America covers the consumer. But I'd also broaden that out to Visa and MasterCard, which they obviously have the pulse of the consumer within their businesses. So those are two companies as well to watch closely to see what they say and what their results are when they come out.
Okay, those with a little bit more exposure to the consumer. All right, Greg, really appreciate the breakdown. So much to chew on this morning. Greg Holter there, Director of Research, Carnegie Investment Council. All right, let's trade JP Morgan Chase now with George Sillis. Good morning, George. Just walk us through an example trade on this name. A great report, you know, records across the board.
Yeah, I mean, it was a great report. If you look at, you know, investment banking fees up 30%, total sales were higher, 14%, EPS 24%. So across the board, really good for JP Morgan. And if you look at the price action, broadly speaking, it's up nicely as well, hitting some new 52-week highs. So I'm going to do in this case, I'm going to structure a bullish trade with some flexibility in case there's some consolidation or pullback post-earnings report across the board for the major banks. So what I'm going to do is I'm going to go out to August monthly expirations with 36 days. I'm going to sell a put spread, which essentially gives us some credit, but it also gives us flexibility for some downside price action. So with a current price right now above 340, I'm going to sell the 330 put, and then I'm going to buy the 320 put below that. So altogether, you could harvest around $2.50 a share or $250 a contract here. So the whole premise behind this trade is for price maintenance to be held above the short strike, which is a 330 strike price, to which point that $2.50 premium will roll to zero, and that's where your max profit is. In case it does break below that level, effectively 327.50 is your break even, and you're earning 250, but your risk is 750, and that'll only occur if the stock hits 320 or lower by expiration. But if you look at all the probabilities and return on risk profile for this stock or this position, there's a 71% probability of profits, and then second, your return on risk is about 33%.
All right, a good day for the banks, holding up all right now. JPM up 2.7. Goldman's having a particularly good day. What do you make of the rest of the broader market? Obviously, we've got a lot of information out this morning. George, what's standing out to you?
Yeah. Lots. So, I mean, today, if you look at the yield curve, it's widening out. In other words, short-term rates are falling slightly faster or more in terms of magnitude relative to long-term rates. That's good for the bond market, but also good for financials. And lastly, too, I think if you look at the S&P, it's encroaching back to the all-time highs around 76.20. So I'm looking for a breakout above that level, but the NASDAQ is lagging the S&P, so that's something you have to keep in mind.
Yeah, absolutely. It's been a little bit choppy this morning. S&P did actually dip into the red at one brief moment there, but we seem to have picked up some of the gains once again. Nice move on chips as well for us today. George, really appreciate it. Thanks so much for breaking down some of the banks, that example trade, and the rest of the markets. Just looking across the major indices right now, the Dow Jones is really flat at the moment, but still holding on to just some fractional gains here. Obviously, we've got a lot of push and pull in this market with some of the earnings and some of the warnings coming from IBM as well. That seems to be a big drag, but all in all, it looks like we're trading and keeping our head above water across our major indexes as yields have come off, and so has the dollar. That's going to do it for us. Trading 360. Up next with Marley.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Schwab Bank Investor Checking. the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
Things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Good morning. We're 90 minutes into the trading day. Welcome to Trading 360. I'm Marley Caden coming to you live from our Chicago headquarters. We've got a great show in store for you today. We're going to take a closer look at the Paramount Skydance Warner Brothers Discovery acquisition. Now that 12 state attorneys general are suing to block the $110 billion deal. Seth Shackner will be joining us to take a look at what this could mean for the merger and also how it might impact the broader streaming space. Our disruptor today is Apple after KeyBank downgraded shares to underweight with a new $250 price target. George Tillis will weigh in on this call and also have an example trade for us. Then in our 360 round, we are going to take a closer look at the bank earnings releases from this morning and what it indicates for the rest of the second quarter earnings season. Across the board, we saw the banks report big profits for the quarter, but the stocks are mostly flat during the session so far. So we'll take a closer look at why. Let's check in with the markets, though, see how we're shaping up on this Tuesday morning. We've got green across the board. The Dow just barely holding on in positive territory. On the S&P, we're up about 0.4% at 7544.90. On the NASDAQ, we are up more than 1% right now, 29,586.32. On the Dow, we've now flipped into the red here. We're at 52,495. And the Russell 2K is up 0.4% as well at 2965.60. The 10-year, we're at 456. The dollar back below 101. Gold is at 40.90.90 a troy ounce. Crude oil at 78.90. We were up near $80 a barrel. And Bitcoin moving higher. We're at 64,435. That is trading up about 3 1/3% right now. Do you want to bring Alex Coffey into the conversation, though? Take a look at one of the names on the move, arguably the biggest move of the day here. We're talking about IBM, these prelim results that they put out, potentially setting them up for one of the worst days they've ever had in trading.
Yeah, perhaps the worst day, at least on record, which the records I saw were going back into the 1960s for this stock. There's a 23% decline in 1987. That's really your only competition. But in my last check, it was down nearly 25%. And this is, as Marley mentioned, after releasing sort of an early earnings release here, preliminary revenues for their second quarter, which came in a little bit light, $17.2 billion versus the near $17.9 billion that was expected. Now, their CEO said that the results were worse than expected, writing that IBM faltered. Software revenue was up 5%, infrastructure revenue was down 7%, consulting revenue was flat, but it was up 1% on a constant currency basis. One of the things that they highlighted, though, was that IBM said customers redirected their CapEx in the final weeks of June towards servers, storage, and memories, notably things that IBM doesn't sell. And so some of their bigger deals were then missing sort of when they thought they were going to be, and they pushed out into the future. Now, that is a kind of rose-colored glasses way of looking at this. One of the things the street noted is that this might kind of bring up the fears of, hey, is this an AI loser? Is this a sign that CapEx is not that, like, or at least from a CapEx standpoint, there's not a lot of discretionary spend right now. It's buying the essentials, and right now those essentials, the servers, the memory chips, things for the infrastructure are getting more and more expensive, diverting more and more of that money, which in some ways ties to that conversation we've had about the divergence between maybe the companies that are even just writing the checks and those collecting it. But now we see the other names that normally collect some of those checks aren't getting them.
Yeah, and interestingly enough, too, with this move, I mean, as we're looking broadly at software, it was a time where software really needed a boost. We were starting to see a pickup in some of these software names. But as you highlighted, you know, potentially showing that we may have some losers in the AI race. I mean, here's the heat map. You can see IGV actually higher still on the session. But I mean, Alex, what are your thoughts here? We're seeing some of these legacy names really get pulled. Some of the newer names are trading in the green still.
Yeah, so you look at like cybersecurity, for example, or Palantir is a little bit more AI related, as is AppLovin, Datadog. Those names really aren't that comparable to the IT services, the consulting stuff that the Oracles of the world do, the Microsofts, the Adobes all do for these companies. Salesforce is another. And so you really see IBM, and although IBM isn't necessarily the largest box here on our screen, if it's on there, it was the biggest contributor to the downside in the S&P 500. Now, I didn't check this right before, but around 9:30, it was contributing about 7 points worth of downside. Microsoft was contributing about 6, and Apple was contributing about 5. So collectively, just those three names are about 20 points worth of pressure, but no one's confusing Microsoft and Apple's market cap for IBM. So this goes to show that when you get these massive repricing, of which a 25% decline is, it can have a really outsized effect, even all the way to the S&P 500 level.
Yeah, certainly, and we're down even another percent in IBM since that 9:30 check too, because I was looking at it about 9:30 as well. Alex, really appreciate you breaking that down for us, this move on IBM, which of course we'll keep watching throughout the day to see if it becomes their worst trading day on record. But I do want to broaden out our conversation. Joining us now, Max Wasserman, founder, senior portfolio manager at Miramar Capital. Max, great to have you on this show. I mean, what a difference a week makes here as we look at our setup now from a week ago. We've got lower than expected inflation data. We've got oil up near $80 a barrel. We have a ceasefire that has essentially fallen apart. The strait is closed again. How are you looking at the market right now?
Well, thank you for having me back on. But if you look at it, all this data about CPI and what's happening is in the rearview mirror. It was based on the fact that gasoline prices have basically dropped 10%, and we had an MOU, a letter of understanding, if you will, memo with Iran. Now we're seeing that's falling apart, and so you could see oil right back up. So that's going to have inflationary pressure. The other thing that you're looking at is hourly wage growth is actually not that great. So I think if you look in the rearview mirror, yeah, the number was good, but going forward, if oil spikes again, hourly wage growth is not growing that much, then the consumers are going to be pressed. And we're seeing that any ceasefire that you have is really meaningless. And this could go on for some period of time, and that will put upward pressure on spending and upward pressure on costs for the consumer. And we think it's going to start to show in the next quarter or two.
So if it's going to start to show here in the next quarter or so, I mean, we've been having this conversation about the consumer, right? Sentiment is so low, but the consumer appears to still be spending, is showing a lot of signs of resiliency, albeit in what still seems to be a bifurcated economy. How are you looking at the consumer as now we potentially have higher gas prices back on the table? I was talking to someone yesterday about the rocket and feather, which is the fast rise of gas prices. When oil goes up, they rise like a rocket, but they fall like a feather to come back down to normal levels. We were in that falling feather. Now we're back up again. We could potentially see that spike and not the relief that's sort of being priced in by the markets now. How are you looking at that? I know you said you expect to see some pressure on the consumer maybe showing up in the next couple quarters here, but how much pressure are we talking about, Max?
Well, think about there's no relief in sight. I mean, think about it. Cost of living has gone up, food costs, housing costs, right? You name it, it's higher. Not just oil. Oil is embedded in everything, but all the other embedded costs. Yes, we're in summer, it's travel time, everybody's feeling good, everybody's having the recreational experiences, but when that comes to an end and people start going into the fall months and we see interest rates are not going down, you're looking at about a 450, 460, a Fed that says they have embedded inflation. Everybody was anticipating rate cuts this year, and now they're talking about potential for a rate rise, which I don't think is going to happen, but you're seeing a different Fed. So I think people have to calm down their expectation. Margin debt is at an all-time high, and yes, everybody's enjoying the summer, but if interest rates stay where they're at, the Fed has a tightening bias, and you have oil prices stabilizing to going up, the consumer's going to face that. But, you know, they spend their credit cards. I'll be interested to see what the credit card companies report, and the regional banks, they'll tell us more what's happening there. Right now, today, you're getting all the major banks' earnings, but that's Wall Street. They're telling you about deals, capital formation. They're telling you about M&A. That's not telling me about middle America, and that's what I'm looking for the regional banks to tell me.
And Max, you just said there that you don't expect the Fed to hike at all this year. Now, we got the data today, which you've already pointed out is backward looking. We did see the potential for a hike in the near term go down a little bit, but the street's still pricing in a 80% chance of a hike, 81% it is now, by December. What is going to stop the Fed from having to need that hike?
Well, one, the street has been wrong. I mean, if you think about it, they've been predicting on the opposite end every single time of what the Fed's going to do. I just find it hard to believe the new Fed chairman appointed by the President Trump is going to turn around and raise rates. I mean, that would be really a big thing. So I'm not sure he can do it. But he has other areas. He can run off the balance sheet. There's other ways of tightening without actually technically raising rates. Because if he raises rates, I think that's going to say something that the market's not prepared to answer. Is it just a one-time or is it a two-time? What is really embedded in this economy? And I think he's hoping that oil prices do come down, and it's just given time that inflation will go back to that feather. You know, on the downside, it will start to increase. But I find it politically, I don't know how a new appointed Fed by this president is going to raise rates without really a lot of political pressure.
And another thing that Kevin Warsh has touched on is AI and how he views it as a net positive and thinks it will be beneficial for the labor market here. But as you look at the labor market and the growing uncertainty around AI and the employment picture, do you view that as starting to show up in our data? I mean, just this morning, we had Jamie Dimon talking about how they've cut 40% of the workforce. They've had a 40% reduction thanks to AI. So, I mean, these conversations are coming, and they're coming from massive companies now.
Well, you know, it's an old story of, you know, what's the difference of recession and depression. In recession, you lose your job. Depression, I lose mine. But if you're a major, one of these big tech companies are laying off, Amazon is doing big numbers, Microsoft, all the major tech companies are cutting back. Financial companies are cutting back, and they're saying, you know what, there's going to be jobs. But that's a lot of high-paying jobs that are going to start coming on the market, and how quickly are they being reabsorbed? AI is telling you don't need as many people to do the same number of jobs. It's just telling you, and repetitive jobs are being eliminated. You have programmers that AI is replacing. So I'm a little reluctant to go with them when a CEO tells me it's not a big deal, but they just lay off 4,000 employees. So I don't place a lot of validity in their comments when you lay that many people off. I think it's going to catch up a little bit. And think about it, these are good paying jobs. So that's going to have a magnifying effect of what they can spend on the economy. So if you continue with these number of layoffs and the lack of new hiring, I think you're going to put more pressure out there.
So Max, if this is our backdrop and we've got all these cross currents that we're dealing with right now, how are you structuring and positioning portfolios right now? Where are you seeing opportunity?
Well, I think there's definitely opportunities outside of technology. In technology, there's just few that have been beaten up. I mean, software is looking interesting. We like Microsoft here. We have investments in all the other large cap ones as well, but it's been beaten up a lot, and you see what IBM is reporting. But we like the financials. We like to see what the major financials, JP Morgan, we have an investment. We like CME, we like Visa. These are companies like healthcare has been catching a nice bid lately. We think energy stocks are a great hedge against technology, because if you look at the seesaw, really, when energy's up, tech is down, and vice versa. That's a good way to sort of barbell strategy in your portfolio. Industrial stocks are doing really well, so we like a company like Snap-on Tools. It's $20 billion out of Wisconsin. So we think there's value out there, and we think the market's going to spread. We think it's going to get a little bit better as people start pulling money just out of memory chips into the rest of the market. So we're actually optimistic on the overall market, but there's pockets that are just so rich, and everybody's already there. It's hard to make money at these prices.
And Max, I want to dive in a little on Snap-on Incorporated, because I have a segment called Overlooked Stocks in my other show, and I feel like this is a candidate for it, not one I've talked about. So what's the thesis on Snap-on?
Well, it's a $20 billion market cap out of Wisconsin, and basically they sell mobile tools, a mower franchise. They go directly to the consumers. They have the vans, they sell, they go to the mechanic shops, they go to engineering companies, they go to diesel repairs. So they sell directly to consumers. So there's not a mass, they don't have to deal with the price discounts, and they have such embedded deep relationships. They have a return on capital of about 14%, margins of 50%, very little debt. Pays you a dividend yield of 2.4, and we're dividend investors with a 13% growth rate. And we think this is a company that benefits for the fleets that are aging. The average age of a car is 13 years, and more sophisticated, more diagnostics. Their area to diagnose and repair engines for commercial, for defense. I mean, they're in a lot of things, and we think a company like this is overlooked, and it's really a strong return on capital, good company that we think will benefit in the cycle.
Well, trading higher today, up about 1% for SNA. That's their ticker at 40508. Max, great to talk to you. Really appreciate you joining us again. Max
Thank you so
Wasserman,
much. I
the
appreciate
founder
it.
and senior portfolio manager at Miramar Capital. And we've got a lot more for you on Trading 360. We've got the big three coming your way next. 3 stocks and 3 charts for you. Richard Cat taking us through the technicals. Achilles Larea Jr. taking us through his trades today for Altria, Valero, and RTX. That's next on Trading 360 on Schwab Network.
In the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Have you ever watched an interview and thought, I wish they had 5 more minutes? Or I want to know how they discovered that hidden gem? That's exactly where Market Matters comes in. I'm Marley Caden, and our podcast is slowing things down. We're going beyond the earnings to get to the heart of the people and companies driving the global economy. If you want the full story, not just the headlines, Market Matters is for you. Subscribe wherever you get your podcasts. Welcome back to Trading 360. I'm Marley Caden. It's time for the big 3. We've got 3 stocks for you and 3 charts. Rick Ducat will take us through the technicals. Here to take us through his picks today, Achilles Larrea Jr., the founder and CEO at Larrea Wealth Management. Achilles, always great to have you on for the big 3. You've got a day of green across the big board right now. We got some positive inflation data, but a heavy anchor attached to IBM today and oil moving higher. How are you looking at the market right now?
Well, if we're looking at the short term, and thank you for having me on again, at short term, we're looking where oil dragging things down. Now, the question, okay, we're at $80 a barrel and we've given up some gains, but are we going back over $100 a barrel? Is this conflict going to drag the economy down further? And then I would also say with IBM, investors are asking, both institutional and retail, they're asking themselves, is this symptomatic of the sector as a whole? How many other companies are going to be affected by this type of guidance on the lower end? So that's another thing we have to keep in mind. Overall, though, we are in the summer. We have to remember that there's a lot of, kind of boring things going on, not a lot of big conviction in any one direction. But the markets as a whole are moving in a positive direction, and we here at Larrea Wealth don't see that changing anytime soon. And we look for the markets to really make a big turnaround towards the end of August, beginning of September.
All right, so as we dive into your big 3, you've brought us a very diverse group today. Your first one, Altria, nicotine and tobacco company. So what's your outlook for Altria?
Yeah, this is one where my team will look at me with the eyebrows up going, hey, what are you thinking here? And time and time again, what Altria has done is that not reinvented themselves, but taken the product that is, for lack of a better word, an addictive product and remarketed it to a different generation, whether it be in the tobacco packs and like the stock's dividend is over 5%. Anyone who has owned this stock, the secret has never been in owning the stock once. The secret has been continuing to purchase again and again and again. Personally, from my point of view, I have done that and done very well doing that. So, this is just one of those things. When it comes to the returns we're looking for the next 14 months, we're looking at anywhere between 7 to 12 the stock boring stocks. Also, in any flight to quality, institutional and retail investors will year over year keep coming back to Altria Group. Forget about the noise outside, but they'll come back, they invest back into this high quality portfolio stock, and you want to own this stock on the long period of time, because in the sector as a whole, there is growth occurring, and we want to be a part of that.
All right, Rick, so as we look at the chart here on Altria, they've got an earnings event coming up at the end of the month. Their EPS is projected to rise a little bit more than 4%, but what are you seeing here in the technical setup?
Yeah, newer traders can be sometimes surprised that this is considered a consumer staple because people are unwilling to do without it even when times are bad, particularly here. So I think there's some logic behind what Achilles is saying here. So anyway, when we think about the chart more specifically, we hit some highs. 74.56 was a repeated peak, so that's kind of the ceiling of our recent activity. Then we also have a corresponding floor. We had highs around here near 68 that then became the floor. So old resistance became new support. So now we have a range, generally speaking, about 68 to about 74, 75 or so. More recently, we have brushed up against our recent relative lows near about 70, 76, 70, 77. We're basically right on the nose there of making new lows beyond that point. So this could be a potential support or breakdown point depending on your view. That's what we try to do with this type of analysis here, is to find these inflection points where you could see some kind of a breakout activity. Nevertheless, trending upward here, going across these lows with also a corresponding boundary line going across the highs to give us more of a triangular type of shape here. When we think about our moving averages that we follow here, our faster 5-day EMA in dark blue crossing below its slower counterpart, the teal 21-day EMA, so the weekly crossing below the monthly. They're both on top of each other near about 71, 60, 71, 75 or so. So a sign of a possible trend shift here is when the moving averages start to cross below their slower peers. 63-day EMA in gold here, 70.43, could be a supportive area, pretty close by as well to the downside. RSI showing some modest declines here, but also very modest increases. So a matching kind of triangular shape with our price activity here. We are a bit below that 50 midline though, which does suggest more of a bearish tilt. Finally, we can see our volume profile study shows trading activity is heaviest near current prices between about 71 to 74 roughly. Then things dissipate somewhat here and pick up again down here between about 64 to 67. Our point of control, the heaviest trading area of all, our thick red line, comes in right around 66.
And very interesting you point out, Rick, that this is a consumer staple, tobacco products, nicotine products looked at as staple, and cell phones are still a discretionary item. So Alex Coffey's always making an argument to reclassify cell phones into a staple item, but they are still discretionary. This next pick here, Achilles, is one we've been talking about quite a bit. A lot of people share a similar outlook to you on Valero Energy. How much of Valero being in your big three is tied to everything that we have going on in Iran right now?
Oh, we love news going back and forth. Is it really not happening? You know, companies like this are going to benefit either way. So we're looking at, just look at the last year-to-date numbers that have come in, and we've based our recommendation really more on going forward. If this was a prolonged, then what? If this is short, then what? So we come back to Valero as in the sector being of high quality, but more importantly, still performing on a high quality level. We see a double-digit return for this. Wouldn't be surprised if we see anywhere between 15 to 16% in an 18-month time period. We think that's on the conservative side, just from what we've seen lately. Also, we think the sector as a whole is benefiting, but Valero, for one reason or another, they just seem to have more efficiencies in terms of efficiencies of scale. We believe that the stock has done well because the company is run really well. Management strategy has done an excellent job moving forward. But what we would look at long term when it comes to a stock like this, because we were big BP investors for the longest period of time, and we just saw that sector as a whole was growing and there was more opportunities. We're not afraid to go into another oil company, and we believe that they're well positioned to do going forward, make more investors, make more money for our investors.
Yeah, and every time I talk about Valero, everybody brings up their margins and their favorable margin numbers. But Rick, as we look at Valero here and the technical setup, you can see we had this nice move to the upside, but since we've had a much steeper move to the upside in this name.
Yes, exactly. So what we had was a more gradual climb here. We could have drawn this boundary line going across the lows, not quite a parallel line going across the highs. They are converging toward each other, but it has transitioned into this very steep, very sharp upward trend line here with coupled a shape more like a rising wedge here. Typically, this is regarded as a bit more of a shorter term bearish type of setup here. We did hit new highs though, 300.1. We are backing off a little bit from that point though, but really what you'd be looking for with any kind of pattern like this would be a break beyond these increasingly more established trend lines or boundary lines here that would open the door to potential breakout activity that triggers the cascade of orders that results in kind of runaway price activity. So low point here near about 278 or so, high points here near about 271, and then a range 264 to about 233. So those are some areas that stand out in terms of horizontal price levels. RSI actually is showing some interesting activity here. We are still following our green upward sloping trend line. We are pushing above the 70 level now that represents the overbought area. A strong close above the overbought area during a trending market is often viewed as a sign of further strength to come, kind of counterintuitive to the name here. We can also see though that our 5-day EMA in dark blue lines up pretty closely with our trend line. So if we were to break below that, the 21-day EMA in teal representing 1 month comes in at about 267 roughly or so. That could be the next area to watch for further support. Finally, our volume profile in this case shows that we have the most significant trading activity node that's closest to our current price levels here, 235 to about 248. That's where things are heaviest here, especially centered around maybe 242 or so. So that's an area to watch to the downside for potential solidification if we do start to go south.
All right, and Valero also has the same earnings date as Altria. They're both reporting on July 30, right at the end of the month. We're a little bit more than 2 weeks away from that. This last one, very different chart for us to look at here. We're talking about RTX, Raytheon. A lot of discussion about defense names, of course, with all of the geopolitical headlines going on right now. But RTX only up about 7% year to date. So, Achilles, how are you looking at Raytheon?
Well, you know, Raytheon's one of these companies where there's a lot to do about nothing, it seems. You know, 7% doesn't seem like a heck of a lot. Dividend yield is minuscule. But then all of a sudden, you'll see the stock move up 10% in less than a month. You know, it's one of these stocks that earnings come out, they're kind of like ho-hum, not a heck of a lot happening there, but the interest institutionally and retail has been always big in terms of this stock. You know, back in the days of United Technologies, what really drove this company and still driving the company is the amount of businesses it is involved in, on the diversity of income and revenue that comes in. So we're looking at that. We're looking at possibly another 6 to 14% in 18 months. We think that's actually conservative. We have been, over the years, I mean, we've been investors in Raytheon over 20 years, and we have been rewarded again and again with short bursts of strength on the upside, and we continue to see that trend going forward, albeit, like I said, this is a bit of a slow year, it's a bit of a ho-hum year, but we still believe that the stock should be part, you know, all the stocks that I'm recommending today are, hey, if there's a flight to quality, I want to be in these stocks. There's no tech heavy in these stocks at this particular point, and I want to have that quality in my portfolio.
All right, Rick, so as we look at Raytheon here, you know, very different chart than the last couple names that we looked at. But as Achilles pointed out, if you look at a longer-term chart, I mean, yes, the year-to-date gains are not great, but the 5-year gains are north of 130%. So, you know, momentum moving in one direction with this name, but we have a very different setup here. So take us through the technicals. Yes,
and the shorter-term picture, I think, is maybe a bit more intriguing than it might seem at first. For starters, we had a trend line going downward off our highs, 214.50. That's been broken. So after we formed a base here near 172, we have transitioned into this upward channel type shape. We topped out at those old highs near 204, marked by our red line. We retreated back down and filled the gap. Now we find ourselves in a situation where the next step for the bulls would be to break above those highs near 204 to test 214.50, those highs that we hit earlier in this year, mid-February, early March or so. So then, if we were to think about our moving averages, we remain above our dark blue 5-day EMA here. That comes in near 196.67 or so. If we were to break below the channel, 21-day EMA in teal comes in near 191.50. RSI still trending upward here, a bit shy of that overbought area, a break above the relative highs, and
we held above the pivot point.
Overbought area is what the bulls would perhaps want to see. So
you see how I come across that pivot point inside of that megaphone. Now we're getting ready to squeeze, see? Getting ready to squeeze.
185 to 190. Areas to watch from a heavy trading perspective.
All right, and Raytheon is at 197.75 right now, trading up 0.7% higher. Earnings for RTX coming up next Thursday, so we'll hear from them a little bit sooner. But Achilles, great to have you on. Really appreciate you joining us for Big Three today. Achilles Larrea Jr. and, of course, Rick Ducant, our lead market technician, for always breaking down the technicals. Coming up, we're going to spotlight arguably my favorite story in the streaming space, the Paramount Warner Brothers Discovery merger that is under pressure yet again. Seth Schachner joining us from Strat Americas to take a closer look at what's happening now. That's on Trading 360 coming up right after the break.
Move markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Don't answer it. Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Man. The end of the story, Jennifer scammed him.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Schwab coaching is concepts brought to life in the real world.
It's absolutely world class. We have coaches who have been in the industry and around the industry for a long time.
We have different formats because people learn differently at different times.
We have webcasts running through YouTube all day, every trading day.
We've got events that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
How incredible is that? And it's free.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. It has been 4 months since Paramount Skydance announced its intention to acquire Warner Brothers Discovery for about $31 per share. On Monday, attorneys general from 12 different states sued to block the merger in federal court, saying that the deal would lead to higher prices, lower quality, and less film and TV content. Joining us now, Seth Schachner, the managing director at Strat Americas, to take a closer look at this deal and if it's really in jeopardy. Seth, so great to have you on. You know I've been waiting as soon as this was announced for you to come on and talk about it with me. I mean, really, how significant is this? We knew it was potentially coming. Is this merger actually in jeopardy now because of this, or is it potentially just another roadblock?
It's very significant, Marley. It could be in jeopardy, in part because of this. You know, there's 11 states that have filed suit. There's also some pretty serious stuff going on overseas in the UK and the EU. And I think the top line is if it gets too difficult and too delayed. Never underestimate the power of our U.S. states. They can make it so difficult that, yes, they could put it in jeopardy. I still think it will go through. The Warner Board approved this one, but they could make it very, very difficult. And I think there will be likely to be assets or pieces of this enormous organization that could get plugged out or trashed in some different way to try and make it look a little less anti-competitive and threatening to the whole marketplace.
So, Seth, let's walk through that possibility. If they have to divest or separate off certain parts of it, what parts do you foresee being where the issues are stemming from? And how does that happen? Does it happen, the merger goes through with the promise that they will divest these assets after the fact? Does Warner Brothers Discovery in some portion stay its own company? How would that work?
Yeah, it's a great question, and it's probably easier to project around the EU or the UK because I think there are pieces there that lend itself a little more easily to your question than what would go on here in the United States. I'll give you an example. There's a long-standing film distribution operation that people in the biz know, people outside don't know, called UIP, which was set up 100 years ago to get our movies more easily distributed and marketed in Europe, and I think the new enterprise has sort of offered proactively to trash that, in Europe because the Brits and the EU are looking at what they call having a diversity of voices, and if this thing comes together, you're going to reduce that. So that could be one piece of it. There's been a ton of focus around children and children's programming, and Paramount's got MTV networks, but those of us of a certain age remember they own not just MTV and VH1, but things like Nickelodeon and Comedy Central. So I think there's been some talk about maybe moving Nickelodeon or divesting the children's pieces out. That's in the UK or the EU. That's not even the United States yet. So I don't really know how to answer the question in the US. I mean, I think the safe thing, or what's happened right now is the companies are still separate. Nothing's happened. There's been no combination of them. So I think there's less eggs to unscramble, I think, in the words of one of the AG's offices I heard right now. So, but it would be very, very complicated, I think, if the thing was merged and they had to pull pieces apart of it, because you're talking about, at least in the film business, putting two things together that are kind of the same things, the Noah's Ark factor.
So Seth, let's talk about the arguments on both sides, right? The states are saying this could mean higher prices, fewer shows and movies, less diversity of content, fewer options, less competition, while Paramount is saying the exact opposite argument. They're saying it needs greater scale to compete against Netflix and YouTube. Which argument is stronger here?
Well, they're both true in some respects, to be honest with you, and they both, I think, in my opinion, miss the point of what's happening in the market, basically, which is that you have entities. I don't want to deflect the question.
Bullshit.
I'll talk more directly in a second, but the real.
They said the same thing about Sprint when they tried to do that merger. Hey, it would raise the prices would go up, but blah blah blah. Instead, they end up going bankrupt and the prices went up. One day, people will understand that anytime government gets involved in almost anything, it screws up. Especially as a small business owner. You go through that roller coaster ride every 4 years. And anymore, every 2 years.
The first argument is stronger. I am most concerned about, we talked about this when I was last on, the reduction in the number of studios. We call it monopsony power, basically, because we're going to be losing a film studio. And that would inevitably mean they're going to combine staff, lay people off. Everyone from the travel department to the programming department is going to get hurt by this, and people are going to be out of work. And so it's a very, very tough scenario to look at. I think that's probably the biggest fear that this town has right now, along with everything under the sun, from AI to all these competitive pressures from streaming. So it's a very hard one to look at from my perspective positively and say this is a really great way to recreate a studio for the future. They're both probably right, because it will amp up competition against Apple and Google and YouTube and Netflix. That's actually true in terms of what Paramount's saying, but I think what our states are saying is also true as well.
Netflix and YouTube doing right that these other traditional media companies aren't quite getting the recipe right here? Because I mean, we see them continue to dominate audience engagement. I mean, is it really just simply having the biggest content library that makes you a success? What are those two doing differently that puts them so at the top of the pyramid?
You know, it's sort of like what era you were born in and what the playing field is, you know, and I think, you know, I see it because I started working in digital, some really old places like AOL, which are gone, and the principles aren't so relevant anymore. And I think, you know, Warner and Paramount in different ways are tied to the past. They're great legacy studios, you know. I don't know if a museum is the best analogy of it, but, you know, they are tied to an older area of filmmaking and distribution, appointment television, when audiences would actually go to theaters every weekend. And these newer generation entities, YouTube is the best model actually, because they don't seem to me to be tied to anything. They came off of search and they built themselves all sorts of content verticals and community around the new digital landscape.
Okay, we're
and
pulling back.
Feel similarly to Netflix as well. And so I think it's about being tied to older legacy systems, and I do think it's about how you create something that survives and thrives. And I think, you know, the more compelling merger, it's over now, it's not going to happen, but would have been Netflix taking over the studio, because if you think about it, it's kind of an incremental.
Shut up, oh man. Okay, we're at the 200 right now. SPY, EMA, and SMA. YouTubers, prepare ye in the name of the Lord. I have some kind of whistle or something. Like a red light signal in the room, you know, where I hit this. Like when, you know, when you're in a restaurant and you need a beer. Boom.
Narcissistic Jim, with his ego and his wit,
3 Black Crows.
doesn't give a damn what you think of him one bit.
Off the 200 SMA.
SPX Jimmy will buy. Bitchin' at Molly
VWAP
till the apple of his
/ES. Let's go!
Let it fly, let it roar, let it roar. Stocks
75 60s.
from his core.
Oh yeah.
Narcissistic
Jim.
Doesn't care what you think. He'll burp and fart out loud until
His room stinks. Yeah, let's get it on, baby.
Candles on his screen. Bounce like titties in the night.
Washboardjim, got a double bottom. Embers, head and shoulders. 320. 75 60s.
Jimmy's face can't wait to come and sit. Fart for a dip. Ass making noise. Burp for a dip. Cheers from his boys. Jimmy.
He got the 200 EMA. Bring out. 320. It hit 370. 3 Black Crows with a tweezer bottom.
He'll burp and fart out loud until his room stinks. Lots of fun he has. His ego's ablaze. Burps and farts collide. The
room is so amazed.
Narcissistic Jim, the legend, the king, playing his own washboard till they're closing Narcissistic Jim.
And Jimmy got in that a little bit too late. $320 or $220? Yeah, he got in a little bit too late. So he might scale out of this one here. Oh, that's $330. Whoa. Might just jump out of it real fast and take another look. $340, $350. Come on, give me 50. Blink it. Now, what do we have here? We have a lot of decisive. So we're going to take that one and that one. Should get to the 21. If not, get out of it and redo it again. Right now we're at 360. So I can get out of this trade and be happy here. 370. Yep. Perfect. My name's Washboard Jim. I took this trade from 320 all the way to 370 within a couple of minutes. Thank you very much. Where's my grade at, please? May I have a grade? Takes a lot of energy for me to do this. A lot of energy. Oh, look at here. Damn. Are you impressed? Someone say yes. And we can keep this baby rolling. How about Magnificent saying yes for the first time? Or has he got his headphones on? Do you have me on mute, Magnificent? Yes, I'd like to go ahead and get an A+ for that trade off the 200 EMA with 3 black crows and tweezer bottom with a hammer. Not counting the 200 SMA with a /ES off the VWAP. I was a bit early. How dare you? I was late. I wasn't early.
Dive into this morning's bank earnings.
For that, you get an F.
Officially underway. Trading 360 will be right back.
Oh, the finger point. Very good. Jimmy likes.
Trading. Powered by Ameritrade.
Jimmy likes.
Unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Think.
You know, I sat there. I thought the Hawk 2 girl was the best thing that ever hit the street. And then a beautiful little blonde with some morals behind her, named Sophie, entered my life. I've never felt so young. Say goodbye to Viagra. Who needs it? when you got Sophie. I had a girl, one of my ex-girlfriends says, she says, Jim, who's that girl there on your wall? And I said, in my bedroom, and I said, that's Farrah Fawcett laying down on a bale of hay. Well, you're going to have to take that down if you want to go out with me. I should have known better right then. SPX double bottom off the 200. EMA, SPX double bottom off the 200 EMA. SPX double bottom off the 200 EMA. $2.30. This is where I wanted to get into earlier there. Magnificent. $2.20. Do you got a problem with that? I hope we get an understanding here of a nice little breakout. I think this one here will be right on time. I'm going to go into the kitchen. I have 3 fish sticks cooking on an iron skillet. I have white rice cooking, steaming in an Instapot. I have broccoli over the white rice. So today I'll be having a well-balanced meal. Uh-oh, Magnificent coming in the scene again. Come on, baby, bounce. If you know what's best for you. Sophie, I love you. Can I help you spend your $16 million? Invested in the SPX, and I'll turn that 16 million into 200 million in within 2 years. I promise you. Come on, turn around. There's a problem here. This could go down to the 200. We're at 2:30. We got a wedge. We got a double bottom, triple bottom. No. There's the 200 right there. 190. Come on, baby. Okay, I'll be in there in a second. Can't you see I'm in the middle of a trade? Nancy, get off your toilet and get in there and fix that. Why are you constantly on the toilet? Hours a day. Chick's like a rotor-rooter. Constantly sitting on the toilet. Come on, hold up. Ain't gonna work. SPY just went below the 200 here. We also failed it this morning. It reclaimed it. Oh, that's the SPX. Shit. Yeah, SPY is. I'm gonna hold on to him. Just a little bit longer. And that. I'm gonna have to swap out here in a second. Gotta hold this. Next one's 40 cents dip after this. Come on, baby. Definitely pulling back. That's more truer. It breaks the 9, I think we got a little bit of hope. Homemade sea bass fish sticks. With rice. I started really eating rice once I moved to Hawaii. 2004. I liked always cooking it. Have it down packed. Ah, man. I don't know if it's going to work out. I kind of gave up right there. Could be a retest. Stay above 50-14. I'll be happy. On SPY. SPX can drop more. I mean, this thing can drop a lot. 75.50. They could drop $22 more if it doesn't hold here. Megaphone. I taste that coconut oil. I like that on that fish. Oh yeah, that's real good. It is. It's really tasty. Coconut oil. I've never noticed it like that. Wow. How come I'm come across something new here? Man. Real sweet. Come on, baby. Now we finally broke the 9. So we have a nice little wedge. We're on 1, 2, 3, 1, 2, 3. $220, $190, and $140. Come on. AMD new low. I'm on views. So far, losing. Ah, darn it. I don't have a lot, but I mean, still, yeah. Enough to lose. Come on, baby. I probably cooked the best rice than anybody in this whole country. Anybody out there think they can cook better rice than me? Please stand up. Anybody? Oh, you make bomb rice? Uh-oh. I gotta look that up. I might have a competitor. Uh-oh. I got competition. For now, I gotta look this up. B-O-M-B rice, bomb rice. Bamba. Bamba. Uh-oh. Maltese Bamba rice. Oh. Well. Trick question. Do you rinse your rice? And do you rinse it 7 times? How many times? Be honest. There you go. You didn't make it. Next time you cook rice, I want you to rinse it 7 times. Hurry, hurry. I don't care. Doesn't matter how much water you use. Spoil yourself. And if you have to go out and buy 5 gallons of water, do it. You'll thank me later. Also, put a little dash of Himalayan salt in there with a small dash of soy sauce. And if you really want to get fancy, put a tablespoon of garlic in it, garlic powder. Then if you really want to get at it, take about a half a cube of hemp butter, the cannabis butter, and throw it in the Instapot with it. Cannabis butter. And everybody will be looking like Siamese kittens. Jim, you just don't have it in this trade. We do have a problem. Now we're This is the 4th time down here. And it looks to me like the 200 is going to be the resistance level. If we can hold this. That's really good. Cooking that coconut fish and that coconut butter. I mean coconut oil. Oh. I'm about ready to have an orgasm. Yum 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 yum. Linzoid, and I make you hungry. You want to come over and have dinner with me? Oh gosh. The girl can cook. I found somebody that I can fall in love with. If you can cook rice, that's all the qualifications you need. Be surprised how many girls can't cook rice. Now, you're probably not surprised. Woo! That was a good one, Jim. Back to 130. I need a breakout, please. Out of the wedge. This is actually one of the best lunches I've had in a while. I really not noticed that coconut oil, how it tasted like that. Bounce, baby. Coconut oil is an edible, the plant-based fat extracted from the meat of the coconuts. I didn't know they had meat. It is a solid at room temperature and melts into a clear liquid at 77 degrees Fahrenheit. Prized for its versatility, it can be used globally in culinary baking and frying, as well as cosmetic products for moisturizing skin and conditioning hair. So tonight, before I go to bed and take a shower, I'm going to get completely naked and grab me 2 tablespoons of pure coconut oil and wash my hair with it before I go to bed. Uh-oh. We need a reversal here, V-Whopper. Wouldn't somebody like to give me a grade on my belch? NVIDIA just had a new high. Apple at the bottom. Come on, man. Just have a turnaround here. I can't go much lower. I got to get out. Let me tell you how naive I am. How stupid I can be. Oh, here we go. Before I took my trip to Jamaica, I told myself, I said, I'm going to eat like the Jamaicans do. And you'd ask, how's that? I said, I'm going to eat with my hands for a whole month before I go to the trip. So I ate with my hands. Everything I ate. I did not use silverware. And when I got to Jamaica, I found out that they had silverware. Kind of left you all at all, didn't I? Jim, you took that a little bit to the extreme. I have to say that was a very good meal. And for that, I'm going to go into the kitchen. I'm going to turn on my steamer, my water. I'm going to warm it up to the perfect degree level of a brew. And I'm going to show you all how I make my coffee. So if you want to watch it live on YouTube, you can. So I'm going to go prepare this. And I'll let people in the room know when you can see it live on YouTube. It took me 65 years to get this down to a T. So Linzoid, if you want to make the perfect cup of coffee, stay tuned and hit that like button and subscribe. I've always had this thing about me, like, let's use Linzoid as an, oh, we're up at 145. We're going to use Linzoid, 50. We're going to use Linzoid as an example. So, hello? Yeah, my name's Jim. I'm here to do a survey. May I ask you a few questions? Yes. Those ain't too personal. Well, I've always wanted to get into, wonder what kind of food people eat for breakfast. What do you like to start your day out with? So I'm going to take notes. And I'd like to ask you, what did you have for breakfast? Or what's your favorite breakfast? And if you had it, and you were stuck on a desert island, what would you eat for breakfast every single day? That's all you had to eat.
Well, first I get up, I take a shower and have me a cup of tea. Sit down and read a book. And then I'll go into the kitchen and I'll make some oatmeal with some blackberries.
So I take that down at note, and I'll go home and I'll experiment. I'm going to eat oatmeal and blackberries for a whole month and see what that does to my, because, I mean, she looks so pretty and everything. So I get another. Hello, this is John. Now, John, I notice that you're a very stout man and you're always fit. I see you running every morning, but I would like to ask you a question. What do you eat for breakfast? Well, I don't have breakfast. I drink a beer. So what? Yeah, I wake up every morning to a nice lager, and then I'll go out and I'll slam me a glass of vitamin C, and I'll go for a jog. No. So I'll go home and I'll do that for a bit. You know, too, if that ain't working after a month. So I get.
Hello? My name's Valerie Bertinelli. May I help you?
Say, ma'am, I notice you like to cook. What's your favorite seasoning that you put in all your meals?
Oh, I always put salt and pepper in everything, even in my oatmeal.
Okay, we're getting ready to make the coffee. Everybody gather around. First, we start with a coffee filter. Regular old brown coffee filter, not white. I don't want no dye or nothing in here. Then I take what you call my pot, which it's like a funnel. And I take the coffee filter and I put it in the funnel. Just like that. And I take my coffee cup and I stick that I have to go to the kitchen. I got my water right to the perfect temperature of coffee, right below boiling. I don't want to burn the grounds. And then I take my coffee, which is freshly ground every morning, and I get my measuring device, which is 1 tablespoon. I do not do a heaping, I just level it out, put 2 of them in there. And then I take a big snort. Once I do that, I take a simple spoon and I'll pour the water into the filter and I'll stir it. That's the secret. I'll stir it continuously, building up foam and cream. So I'll apply the water in a slow stream, such as that. And I'll wiggle it back and forth until I kind of get it built up a little bit. Then I'll take my spoon and I'll proceed into going back and forth and swirling it back and forth, keeping a slow stream. into that filter. Now keep going back and forth with that spoon, kind of like that. And I'll do it, and it keeps the grains down there too, instead of hanging on the filter. And then I'll let it filter out, and I'll go grab 1 cube of ice. Jim, are you in that trade? Hell yes, I am. And I'm winning. You got a problem with that? It needs to go up, though. Give me like another 20 cents. $1.55.
One day around 850 CE, a goat herd named Calby observed that after nibbling on some berries, his goats started acting abnormally. Calby tried them himself, and soon enough, he was just as hyper.
Let's go, baby!
Humanity's first run-in with coffee, or so the story goes. When exactly people began consuming coffee is unclear, but at some point before the 1400s, in what's now Ethiopia, people began foraging for wild coffee in the forest undergrowth. The reason coffee plants are equipped with lots of caffeine might be because it makes them unattractive to herbivores or more attractive to pollinators. But either...
We're at 160. Just a little bit more and I'll be even. And yes, I did buy the dip. He noticed the falling wedge. As it got down, it started consolidating. And now it's breaking out. We have a hammer right there. Now we're at 185. The crowd's going wild at the sports arena. Oh, come on. Let's go. See, these wicks, I don't care for that. Nothing's stopping us now. Yeah, I made cold brew. Yes. Prison guy is on.
But other than that, I think they're positioned really well for all of the consumer trends that matter in their space, and they're winning market share.
There goes all my profits.
Players, which is always an enormous plus as well. So, yeah, I'm with you. I think they're focusing in the right spots right now.
Let me ask you just a quick question, follow up.
Go get my ice cube and I'll be right
when
back.
When you look at that demand
I need to break
trajectory,
out.
and the Cash App is 50% versus, about 19% for Square. Do you see the consumer side as their primary growth engine now from here? And does that worry you in any capacity at all, or no?
No, I think that's a definite growth engine for them, but I think they're doing a fantastic job on the payments, the physical payment side of things, the point of sale side of things. So I think they have two horses running in this race that are doing very well. And, the peer-to-peer is set up in a way that I think they can take advantage of opportunities in the marketplace. Again, if, it's always darkest before dawn in crypto, and it can come roaring back with vengeance. And if and when it does, Cash App and their systems are built to handle it and to take advantage of that. It's almost like they would just have to flip a switch in terms of their attention. So I do think that's the primary growth lever for them, is the peer-to-peer payments. But everything that they're doing in terms of the technology that they produce, the product, and the consumer happiness levels that we track and see, they're doing very, very well.
Andy, one last thing. This company is starting to, or they have been for a while, really upping some of their numbers. Their first quarter was good. They guided higher for the full year of 26. Andy, their 3-year PEG ratio. Now I had to look up and look at the difference between 1 year and 3 year. The PEG ratio, the price to earnings growth. Remember, we talk about it on this show as being cheap if it hits a 1. If you have a 1 PEG ratio, that's pretty good. They have a 0.54 3-year PEG ratio, which means they may be spending money now for future earnings going forward, and that's a number as low as I've seen, a PEG ratio of 0.5 or slightly higher than that. So that points to the future that is back on track. Remember, this company traded just under $300 at one time in its history, and it's had a long winter where they were trying to figure out who they are. It looks like they've found out who they are, Andy. And you're right, we're not dissing crypto here. We're just saying that their identity got too caught up, I think, and it got away from these great other businesses that they have.
Yeah, no, and I totally agree with you. And I think when you look at Block, as an ecosystem, and you look out towards that future guidance and the acceleration with which they are adding earnings and cash flow to this company, it's justified a lot of the big investments that Wall Street was worried about in the past. And that tells me this is a company that knows how to execute and knows how to get cash flow and profitability.
185, yay, go!
I do think that if you're looking at it on a 3 to 5 year time horizon, that Block is cheap right now. If you're looking at it on a near term or going into, the August earnings print, it's probably pretty fairly priced. So I don't see a lot of edge in the near term, but for longer term investors, I think this is a phenomenal company that executes well.
Yes, now we're talking.
How to throw off cash.
All right, good stuff. Thank you, Andy. That's Andy Swan, co-founder of Lightfolio. Now for the
Yabba dabba do? Huh? Turned down for what? 75, 60 an hour, 185. 180. Let's go. Let's go. We're now at $2.
Their earnings come out, and so how do you want
Ladies and gentlemen.
Well, if you look at the chart, it's had a nice run.
Wow.
On a 1 year chart, the further you go out, it looks different. But
shut your mouth. So Jimmy recognized the wedge. Jimmy recognized the consolidation. Jimmy recognizes the breakout. Jimmy recognizes resistance. Jimmy says, this is a question I want about complacency. Are you happy with the profit that you're making here? Or are you going to try to stretch it out? You see where I'm coming from? Someone say yes. Who am I talking to? RTP? Are you greedy? Green Machine locked in him profit. I'm pretty sure it's a him. These days you have to ask. It's a him. Oh, we got somebody greedy in here today. We got a brother in here that's greedy. Come on, break it. Actually, look at this. Okay, I didn't see this a second ago. You ready? Can you count to one? One of them? Two bits? This could get up to this here shoulder line. And we'll just draw that straight across. Horizontal on the shoulder line of a two-headed snake. It's coming back down now. I'm going to retest the 221. Aren't you glad you got out of that Green Machine? Could you tell it was time to go ahead and exit? Were you getting that feeling, or? Getting that feeling like, oh, might be time to go ahead and exit. See, this thing's already dropped 50 cents. Oh, I'm his mother. Mom, you ruined it.
Here on Schwab Network, I'm Diane King Hall.
I remember. Oh, I know I've got a story or two I could tell. I told the one about the little girl knock on my door. Mommy wants to say hi to you. Come on, break out. See, now I'm back down again. Got greedy. It has no choice but to reverse right here. And it's now 11:48. 12:48 Eastern Time. This time I'll get out earlier. 140, I added more 140. I got double the dose. George.
Equity trading, wealth management.
George looking good today. Look at that. George's old-fashioned. He's still got his old t-shirt on under his shirt. I never did like that. Okay, well... This is the coconut that I got. That's the kind I use. We're at 170. Looking better. I doubled down on these so I can get out a lot earlier. That's about what it costs, 11 bucks. Now what I just do. It kind of looks already like it's in bullish territory. It's held up pretty well. I don't know, I might not just stop pushing it and let's spy. I drink coffee. Did y'all enjoy your lesson on coffee making with Washboardjim? Please say yes or no. There we go. Let's go. Going to be in Branson? Second week in October. Oh. There we go. Let's go to Branson. $1.80. I am now green. Should I still be greedy? Now, that's a question you want to ask. Should I take my profit? It's not a lot, but does it matter? We got a triple top, quad top on the SPY. If you can count to 4, you might make a little bit more. The timing is not perfect. Right before lunch, or right at lunch. After a great lunch like that, Jim likes to wash it down with some good made homebrew coffee. A real man's drink. Yeah, we go back down again. Okay. Okay, poop to learn. Right now I'm in the SPY calls, 75-60s, and I'm borderline green. So, poop and learn. Hair grows after death. People used to believe that hair and nails grow after death, but what really happens is that the skin dries out and shrinks. This makes the hair and the nails appear longer. It is an optical illusion caused by dehydration, not a creepy afterlife effect. Hair grows after death. This goes out to all the men out there. Anytime a woman asks you this question, you just tell her this: your tongue is unique. My tongue is unique. She says, what the slap? Your tongue is unique, just like fingerprints. No two people have the same tongue print. The shape, the texture, the pattern of your tongue are completely your own. Scientists have even studied tongue prints for use of security systems. Although licking your way through a password would be pretty weird. Your tongue is unique. That's today's trivia. Poop and learn. Well, this is not going out very good. Fallen wedge, breakout, pullback. Can do it. Oh yeah. Yes. I'm about even. I am green. I am now green. Good again. 175. Yes, I have 12 contracts. 180, 190. Should make a business decision. $195. I have 12 contracts of the 75/60s. They are now priced at $195, $2. $2. Can you imagine if these things run up to $4? Does anybody in here and on YouTube, be honest, do you know how to count to 4? YouTube. Culture horse. Can you count to 4? So what the hell's wrong with this guy? They're now at $2.15. $2.20. I really think I should be selling them right here, don't you? What do you think about that, brother? Should I sell? I got a big gain says sell 'em. Scale out some. $2.15 to 20 cents. Come on. $2.20. There's the shoulder line. Yes, I talked about it. $2.25. I think that's worth celebrating. I really do. Oh! Uh-oh! Uh-oh. Uh-oh. What? What? Oh my. You enter back in at the resistance level, are you nuts? You ain't getting in here at full Mac. FOMO. I think I deserve a real good grade on that. Huh? Average at 220. I'm out at 220, man. I don't know how he does it. Well, except my grades. That's how you do it. Yeah. That's how you do it. Yeah. I'm a crazy man. They're back down to 165. So once I hit my resistance, and we broke number 4, and then we pulled back to number 4. This is how you do it. Retested the previous high Now it's going to come back up for the second time with the right shoulder. That's when it's the most bullish. If it comes up and retests that right shoulder the second time, just the same way as when you're doing an inverted. If you have the patience just to wait for that second touch, not saying it will happen, but the odds of it are happening are really higher than not. That's when to take the trade. And I'll pay anybody $25 to pick the nose hairs out of my nose. Anybody on YouTube will take the offer? There's about 7 or 8 nose hairs up there that just keep tickling my nose. You'll find no cocaine or no boogers in there. All you have to do is just simply tweezer them out. Ever since I took that COVID test, my fucking nose hairs have grown 3 times as big. Anybody notice that? Nate Dogg, did you get the shot? Have you noticed that your nose hairs are growing bigger and stronger than ever? Not even take the shot, just took the test. I had 7 of them things done. Jim, someone caught COVID here. Would you mind taking a test, please? What? They're back at 220. This is an amazing trade. 160 to 150 to 220 on that dip off the 21. Unbelievable. And you're not in it right now. But that's okay. It's okay. When I was young, I wanted to be a stand-up comedian. Well, when I got my COVID shot, I noticed 2 things. I started walking around with this hard on, and the nose hairs out of my nose started growing. Then my eyelids started doing the curly cue. I didn't know what to do. Or them puberty shots. Why did you shoot me up? Well, I wake up a woman. What did you shoot me up with? Will I still be a man? Well, the government told me, stay away from my family. Step back, 6 feet away. They scared me into getting the COVID shots. All of a sudden, my titties started to grow. Come out with these training bras. I wondered why they did that. Some damn COVID shots. All of a sudden, the American population started turning like women to men, men to women. It was the scariest thing I ever seen. All because of a COVID shot. Thank you very much. You ever thought about that? That could be a hit record, you know it? You agree, Magnificent? He's got his microphone on, you little dog. Walk away, don't listen to Jimmy sing. All that love he'll bring. Okay. The ones that exited, you'll be permanently blocked. Take note of that. The ones that stayed will be rewarded $1 million. That's what I thought. That's what I thought. That's what I thought. My most favorite fan. Well, I'm starting over again, my friend. Got a greenback dollar, going back to the 100 EMA. It's a greenback dollar. Called spy support. I called a long time ago. Nailed that. So I want everybody to go out and buy some coconut oil tonight. Get rid of your lard and your bacon fat. BT pulling back more. Apple down and Microsoft down and Amazon down on the Magnificent 7. Nvidia up, Google up, Meta up, Google up, Tesla even. Well, cook in the kitchen to make me something to drink. Drink your water, drink your water, drink your water. I hope you have something to drink. Drink your water. Drink your water. Okay, I'm going to put it up here in a second. I know what I want to do. I've done this, but I want to do something better than that. I took my ukulele and played it on Hawaii Kiki Beach. I want to take my guitar and play it in Jamaica. I wrote a song. Oh, we got a new high. $230. This book right here is worth $250,000. $225. I forgot how it's. As the evening settles, I hear the still of the night. A dog barks, then a lightning strikes. I feel my heart beat faster. Boy, I am growing old. I'm a sinner. That's what I have been told. So the time is right. So I think I will make my move tonight. The time is right. I will make my move tonight. I went to find my soul. I thought things were all right. So I went to the island in the middle of the sea to find my soul and to let the sinner in me free. 1/2 of a year and a keg of beer, I was sitting here all alone, and I realized I need to get my pickle home. $3. Boom! The 63 to $3. 3 Black Crows, hammer, consolidated megaphone, boom. I've never read that poem out to anybody in the whole world. You're the first to hear it. I wrote that in 2004. Well, the 7600s are at 3, not at 3. Went to 3. That can be misleading. That can be very misleading. He exited for 20% profit, folks. Let's give him a hand. Congratulations. It's better than saying the F word. Say yes or no. Yes. It's mind over matter. Why do you think I'm so gentle and so kind behind this mic? Have such a appealing voice, such gratitude of life. I think I'm going to go into the bathroom and take a shit. You like it and it's catchy, it's a hit. The Randy. Nice. I want to ask you a question. Everybody. When Jimmy was down here making this trade work, what were you thinking? When Jimmy was down there calling the bottom of the falling wedge, were you confident? Or were you saying, oh, let's see if this works out? I don't know. He always makes them work out. I'm not sure. I'm not sure one bit.
Ready. All right. Oh yeah. Washboardjim trade stocks at dawn. He's got his eye on the chart, still the night is gone. Patterns dance like a wild old song. Breakouts rip and dips of gold. He's got the secrets the wise ones hold. 3 black holes in the morning light. Bull flags waving like they're gonna take flight. Washboardjim, yeah, he knew it. All right. How does he do it? How does he do it? Moving averages, they paint the tail. Up and down like a shipping gale. Catching the wind, he sets the sail. Green candles climb, the bears retreat. Jim's got rhythm, the market's beat. 3 black holes in the morning light. Bull flags waving like they're gonna take flight. Washboardjim, yeah, he knew it. All right. How does he do it? How does he do it?
Yeah. How's he do it? I wasn't confident. Become a rock and roll star like me and become confident. The singing day trader is going to walk into the kitchen. He's going to pour out this shitty tasting coffee. He's going to steam up some more water. He's going to make him a cup of apple cider. He's going to go in the bathroom and scratch his nuts. Then he's going to sterilize his hands. And then he's going to get his water that's been steaming and mix it in with the cider. And then I'm going to come back. I'm vulnerable. But Jimmy, my financial advisor, and I have never met these people in my life. They say they know me, but I don't know them.
Investing, it's now time for FOMO, and let's turn our attention to IBM, which is plunging after the company pre-announced a second quarter miss. But the biggest pressure point was infrastructure, with demand falling much more than the street had been anticipating, and the company had anticipated at that matter. So for more on what some of these could signal for
IBM, wonder what's going to happen to Intel when it gets its earnings. And it gets the same kind of
history as a company.
Same kind of renderance.
What do you think really is driving a lot of this negative reaction today?
Yeah, well, there's a number of factors at play here. First of all, if we look at the different business segments, let's start with software, right? Revenue increased just 5%. Analysts were looking for something closer to 10%. Software is especially important because it's one of IBM's highest margin businesses and really one of the centerpieces to their kind of transformation we've seen over the last couple of years. Consulting, that revenue was essentially flat. If we look at infrastructure, that revenue fell 7%. This was one of the bigger disappointments because many analysts did anticipate a decline, but not nearly by that much. As we look into kind of the reason behind these numbers, mainframe sales were weaker than expected. They released that Z17 mainframe back in 2025. Had a very strong initial cycle. The management expected growth to slow, but not by this much. that hardware sales slowing has really impacted some high margin software connected to that.
Oh, damn.
If you look at technology budgets, those shifted as well. IBM said that they saw customers redirecting their budgets towards things like server, storage, memory, think AI, right?
Knife
There's a lot of
unlisted.
companies out there trying to get ahead of price increases, shortages, supply chain disruptions. Cybersecurity also played a role. This could be a tailwind for them long term, but for now, AI is increasingly pushing companies to focus in on spending on cybersecurity. And finally, big deals that did not close, right? IBM said a number of large transactions missed their expected closing timelines. Large enterprise technology deals are really significant. They hold a lot of weight. Now investors are going to go into July 22nd when the real earnings and the real conference call comes out, and they're going to want to know, are the deals coming down in size? Do we expect them to close soon? Are they simply delayed? Or do we think that people are going to continue to redirect their tech spending towards these other categories?
Yeah, that seems to be the big kind of macro fear here is it's like, hey, the AI infrastructure stuff is non-negotiable for these hyperscalers, and the budget.
Shut up with the hyperscaler crap.
Pricing pressures and
you know, I still ain't figured out why you call it hyperscaler. Hyperscaler stocks are major technology companies that own and operate massive global cloud networks and data centers. I think that's a stupid name. Somebody that's not as educated as most, it sounds to me like a pump when I say hyperscaler.
The cycle, especially around mainframes, is going to start to pick up pace again, then potentially you're looking at an opportunity. There's certainly a lot of investors that are looking at this and wondering, is IBM not part of the AI story in the way
I gotta use the restroom,
thought it was?
or me and Nancy gonna go make out in the bathtub.
Really about the numbers themselves, and how much is it really about the confidence in management after
We're
they
at
committed?
support.
They were, I mean, it just.
We're at support here. I'll be back.
Seeing that they've got some cost controls in place, they've got some operational efficiencies. That said, you can't look past the story of this is exactly what IBM has been saying that they're capable of doing, and in this report they're showing that they fell short. Now execution is a concern going forward. Can they react quick enough? Can they, can we see the sales forecast start to improve, some of the deal management improve? And the guidance on that remains unclear. Maybe we'll hear more about that on July 22nd.
all right, the real fun job then, thinking about if you had to example trade in a stock like this. Now, for some, it's a non-negotiable. They wait a little bit, see what happens. Some, this is a reason to be excited about a name. How did you go about structuring a strategy given the immense volatility assigned to this stock now with this kind of surprise early release of these earnings results?
I kind of took the middle ground, right? I took it as a reason to be a little bit excited, right? So for this example, an investor who obviously is seeing this is a very disappointing report, but if they believe that much of that news is now baked into the stock price already, and that the sell-off is maybe a bit overdone, some of these delayed deals could still close relatively quick, and then they look at the positive side, and there was some Red Hat, AI software, some of the other information that came out was positive. they would set up a trade, for example, like a bull call spread here, right? You're buying one of the August 21st 220 calls, buying or selling one of those August 21st 240 calls at a debit of 690. You know, if we look at it, you know, max gain here would be $1,310. That's if it expires above 240 at expiration. Max loss would be that 690 debit that you're paying out, and you'd break even about 226.90. You don't need a big move, a big jump back to where it was, but if you see a bit of a pop, and this gives us about 38 days for the company to achieve that.
Yeah, and I mean, I think a good point there. Obviously, we do have earnings that could see some clarity around that event, but right now it's a pretty brutal move to the downside. So hopefully leaning into a resumption of what had been a decent uptrend for this name that was then rewritten today and then some, obviously pulling back below its 50 and 200-day moving averages. But so appreciate it, Jeff Pierce, for all of that breakdown. IBM down 24.5% on the session as it stands. But coming up next, we will recap some of the major messages we've gotten from the biggest banks that have reported already this week. So we'll dive into some themes that are working, some themes that are still adding caution, coming up next.
She's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need all in one place.
I can set up her college fund.
I've been learning about new trading strategies.
Schwab helps me generate retirement income. All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Welcome back to Next Gen Investing. Now, Samsung is pushing back on reports it may pursue a U.S. ADR listing. Well, of course, SK Hynix just saw a solid Nasdaq debut. So for more on what this could mean for the future of Samsung and some of these expected public offerings, or now not expected, as I guess I should say, we are joined by Sam Vadas, host for the Schwab Network. And so, Sam, what does this really tell about the appetite for global chip exposure? Walk us through some of the key details on this update from, of course, Samsung.
Yeah, I think it tells us a lot. I mean, particularly with respect to some of these DRAM players. I mean, Samsung, SK Hynix are big players as far as dominating a huge amount of market share in this space, followed by Micron, and then you have smaller players like Chinese names CXMT, which are emerging as well, getting a lot of attention from the likes of Apple. So we've already seen that with the demand for SK Hynix. I mean, that stock's up 20% today. So it is recovering some of the losses we saw yesterday. Its third day of trade, second full day of trade it will be today with the ADR listing up the road at the NASDAQ. But that's really what's really interesting about all of this is the timing, because obviously you've seen the demand and the success of SK Hynix, and that's got a lot of people in the market talking about whether Samsung could pursue a similar route here. And so it's no surprise that we're hearing some reports about this, particularly because of what we've seen with respect to SK Hynix. I mean, that was the biggest listing by a foreign company, and for now, Samsung is denying the reports that it is pursuing this. It's looking at a possible ADR offering, saying it's groundless. Basically, it came after a Bloomberg report suggesting it had been holding some preliminary discussions with the banks. Apparently, Samsung had previously considered actually going down this path, but that didn't proceed. But according to Bloomberg, the SK Hynix move has given them some fresh motivation here, because obviously Samsung and SK Hynix are local rivals. They dominate, as I said, HBM manufacturing. Obviously Samsung is a little bit more diversified as far as its portfolio is concerned. It's got the smartphone business, it's got a few other things going on, but apparently, according to Bloomberg, it hasn't made a decision about whether to go ahead with it, although it has come out today and denied it. But it will apparently monitor the volatility in memory chip stocks as part of its consideration here. Obviously, we've seen a lot of volatility, particularly in South Korea. I mean, you take a look at the Kospi. I mean, that was in bear market territory last week. Just remember, Samsung and SK Hynix make up for almost half of that index. But we have seen both of these companies actually joining the $1 trillion club recently as well. Samsung is up over 100% this year. SK Hynix is up almost 200% locally as well. Both just announced some huge investment as well, because they've been tapped by the South Korean government to try to expand some of their capacity. This is a real economic story for a place like South Korea, obviously given these profits, and a lot of that has been driven by DRAM. But the report does suggest that given its diversified portfolio and also some of the labor disputes which we've discussed on this program as well, that could be a bit of a challenge to any structuring of the deal moving forward. But for now, obviously Samsung has sort of nipped these reports in the bud and said it's not happening, guys.
Yeah, it does seem like that was shut down pretty quickly this morning, but one that we will continue to, of course, follow, as it's a major component of the broader memory cycle that is right now definitely a hot topic here. But appreciate it, Sam Vadas, for all of that breakdown. But now we will shift our focus to bank earnings, with JPMorgan Chase, Bank of America, Citigroup, and Goldman Sachs all delivering better than expected results. But for more on some of the takeaways from big bank earnings so far, let's welcome in Kenneth Leon, Director of Research at CFRA. Kenneth, thank you so much for joining the show today. As we do look across those four major banks, JPMorgan, B of A, Citigroup, and Goldman, a common theme that stuck out, I think, to all of us was a strength that we're still seeing in trading and investment banking. Is this really the start of a more durable growth phase, though, for these big banks, or is this some easier comps just with a flood right now of capital markets and, of course, some added interest in definitely these new coming IPOs, like think SpaceX, of course?
Yeah, it's great to be here. So it is amazing when you have 4 of the 5 global U.S. banks report on the same day. The signal was bullish. We had in tone, in numbers, a very strong outlook coming off second quarter results. As your question asked, we've been on the investment view early at the beginning of this year that areas such as capital markets, trading, investment banking are going to be the delta for higher earnings estimates. And that's important because that will support valuation with higher target prices by the street consensus. So I think bank analysts are a very conservative lot. They don't like to see a high delta when it comes to investment banking fees. But we also have businesses, unlike the last
Okay, here we go again.
that have very durable, recurring fee.
Goldman Sachs did good, I guess, on earnings. $75.60s at 115. The 75.60s at 115. Randy. Risky. 75.16s at 115. Blondie. $75.15 of 117. Brandy. We're at the shoulder line, second time. 115 to 160, please make a business decision. We're at the show. Oh! Now, okay. Let's have a little conversation. You ready for this? I want them, 2 of them, 3 of them, 4 of them, 5 of them, 6 of them, 7. Okay. We're going to have a little sit-back conversation. And my name is Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the now. Approximately 8 minutes ago, I talked about the right shoulder of a Head and Shoulders. I sat here in front of everybody saying, don't chase, don't take the first shoulder, wait for the second shoulder to come up. That will give you some kind of idea what the stock's going to do. You're taking a small risk if you try to take it at the second shoulder breakout. Wait for the second. I mean the first one. Wait for the second. And I need to make a phone call here. I just now realized. So we came back. This is when I gave my speech. I said, wait for the pullback and then take it. We bounced off to 63. Bounced off this trend line, wherever that come from. And then we finally broke it. Savvy? So 115 down here, off the 63 to 160. We're at 155 right now. Mid-exit idea, or if you want to take the risk and see if it breaks on out and does a double top. My name's Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy, where I need to go make a payment of a bill. And I'll be right back.
Again, it was a bit of a delayed reaction, it seems like, to what were still really strong earnings. It's almost like we reject the strength of the banks. That is definitely a good sign for the U.S. economy, but still, overarchingly so, we saw some strong trends emerge. So really appreciate it. Great conversation on, of course, big bank earnings. Kenneth Leon, Director of Research at CFRA. Now, coming up next, you'll receive a fresh upgrade from UBS, with the firm seeing more than 40% upside for shares. So we'll discuss what's fueling the stock's huge surge this year when Action Investing returns.
Trading, powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Investing for under 30 today, we are focused on fuel cell today, which is soaring after UBS upgraded shares to buy, raising its price target to $27 a share, calling for a meaningful re-rating to the upside for shares overall after a 195% nearly rally this year. So for more on this call, we'd like to welcome in George Tellis, senior markets correspondent for the network. George, walk us through this move today, because now we are already seeing strength continue. We're up now 13.3% roughly.
Yeah. Yeah, I mean, this is interesting. I think in the context of, data centers and effectively power generation on site, fuel cell technologies have been actually growing quite considerably. And there's been a lot of volatility in fuel cells as stock, but nonetheless, it's still up over 300% over the last year. If you look at what's been going on with the stock itself, going back to, late June, early July, the stock is trading near around $36, $37. It's pulled back quite a bit, and this is a function of them raising about $225 million between during the week of July 7th through 9th. They issued a secondary. So we did see a pullback, and now the analysts are still constructively bullish as a result of what's happening with the business in terms of their expansion with multiple partnerships as well as data centers. So UBS did upgrade the stock to a buy from neutral. Their price target on fuel cells 27 from 22. So they see multiple positive drivers, including a recent deal that Fuel Cell announced. And this is probably why they financed some of this underwriting recently with Fit Energy, which is essentially a power distribution company. But the other thing that UBS denotes is partnerships that Fuel Cell has with major energy conglomerate Siemens Incorporated. They're a European conglomerate, much like General Electric, and I think that's also a very positive catalyst. And Fuel Cell has been filling orders that have not been available to other companies in this space, like Bloom Energy, based on capacity expansion needs. And I think the data center business right now for Fuel Cell is quite good in terms of total revenues. 89% of their total forward sales are estimated to be in data centers versus traditional hydrocarbon or hydrogen fuel cell, technologies which are mostly used in warehouse, forklifts, industrial, commercial use, and communications and e-commerce warehouses. They're really expanding their technology for more concentrated, higher scale megawatt data demand.
George, why is it that fuel cell is looking to that void as opposed to trying to compete in the other game? You look at Bloom Energy and how fast it's scaled up, its ability to deliver for Oracle has made it, 65, 70 times bigger by market cap than fuel cell? Like, it seems like fuel cell is trying to pick up crumbs when there's, full cakes out there.
Well, here's the thing. If you look at Bloom Energy, which is a growing competitor, Fuel Cell, it's a much larger company. The financial profile of that business improved quickly. And that's why the stock has done a tremendous job in the past couple of years. What I do see here is that there are multiple catalysts that are involved in hydrogen fuel cell technologies for data centers, including government subsidies. That's certainly going to benefit perhaps some of the lagging players like Fuel Cell or Ballard Power. I'm not saying they're buys, but if you do look at Fuel Cell as a stock in the last couple of quarters, the volume profile has improved, but the company's still expecting to lose money this year and next year. But more contracts, more scale, could change that equation quite a bit for this name. So it's one to keep an eye on, considering it's still trading above its 50-day moving average.
Yeah, and I mean, this thing continues to see some nice outperformance today, actually only strengthening as we continue to talk about shares. Fuel Cell up now just shy of 14%. But so appreciate it, George Tellis, senior markets correspondent for the network, for all that breakdown. That'll also do it for Alex and myself for Next Gen Investing for this Tuesday. We have the watch list coming up next.
Schwab, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide. no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met with their wishes were. Schwab has been with us for 25 years. We went to snap houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Happy financial future. Look at your hobby. How much you had to drink tonight? I ain't had hardly anything to drink, but I'm gonna get a happy financial future. I think this is the last. Here we are again, pulling back to that damn 63. I'm so sick of it. To have a happy financial future. Schwab, help my wife have a baby. Sammy's wearing a turtleneck. What is it, dead of winter in Chicago?
Its earnings report next week. Our panel will break down today's CPI print and what it means for Kevin Walsh and the Fed moving forward. And in big moves, we'll spotlight real options trades from today's session. TSMC,
Accuracy rating's not done up that much.
For now, let's take a look at where the markets are trading with 2 hours left. We've been holding up all right. The Dow Jones has slipped a bit. It's been really range-bound today. There's a lot of push and pull going on with...
I love her. But she failed to tell you that this is the worst hour of the day for me. These are at 120. Right off the 63. I'm not taking it. We've had higher lows and higher highs, which is a bear flag. Today's Tuesday. Well, 120 to 140. 115 to 140. Off the 63.
I just thought, I never knew in my life. We were always taught not to point. Yeah, we were always taught not to point. I don't know about you all, but I was told not to point. And then some blonde out of the blue, instead of getting in a big old confrontation, decides to point. And it just gives a whole new meaning, and so many meanings to point. I mean, it could be a point of alarming, or a point of say, hey, look at this, or look at you, the accomplishment, or look at you, what have you done? So many definitions. I was sitting there thinking about that this morning. I said, we were taught not to point. And this girl's going to be making millions of dollars on just not saying a word and solving, like me and my dog. My dog, I used to not have to do nothing. I mean, I could look at him and know exactly what he wanted, or he never had to bark. He just had that, like he's pointing at me, like, I'm telling you, I'm looking at you. It's time to eat. It's 5 o'clock, or, it's 11 o'clock. I need to go outside and take a shit or something. I knew exactly what he was trying to say, but he was pointing at me with his eyes. And that different kind of look that they give you. And the same thing as when she's pointing. You get that different kind of glaze that can define what the point means, or straight to the point. I just find that fascinating.
You see a big flush today for shares. They are preliminary reporting revenue of $17.2 billion. When you think about where expectations were, this is short of expectations. Earnings, their preliminary report is $2.93 a share. That misses calls and estimates, which we're expecting a 3 handle, more than $3 a share here. So we're erasing more than $60 billion in market cap today with this move, the biggest, as you mentioned, biggest one-day drop in IBM's history. And this is an old company.
Yeah, very old. I mean, back in the 80s, it was the #1 stock on the U.S. market by market cap as well. So, yeah, I mean, it's just fallen off a cliff today. And it's interesting because of the acknowledgement. Obviously, what they say in the guidance is going to be very telling as to, whether this is a one-off as far as some of that customer behavior, as you say, coming from the enterprises.
And that's the question, right? Is this a one-off, not just for the quarter, but for the sector? Because this casts a cloud, this is not a pun intended, across the software sector, right? We're seeing more pressure and red across the sector, although there is a little bit of bifurcation in that sector, because Palantir is actually higher.
Yeah.
Now it's managed to shake off some of the worries across the sector. Like, is this an idiosyncratic issue for IBM? Is this a sector-wide issue, especially with some calls saying software across the board shouldn't be hit so hard? Microsoft is being hit as well, even though many analysts are saying Microsoft was one of the names that's been thrown the baby out with the bathwater. But to refocus back on IBM, they tried to highlight some bright spots, not helping at all, clearly here, talking about their quantum computing division. But that's too far out, obviously, in terms of visibility for investors to account for that. And it's still a small piece of the pie when you think about that. The CEO saying, in terms of the bright spots, we have conviction in the strength of our portfolio and the strategic transformation of our business. And look, when you think about the, length of time this company's been in operation, they've obviously stood the test of time and been through many cycles of difficulty. So we'll see how they handle this, if this is indeed a one-off quarter.
Yeah, as far as that trend, whether it's several quarters of consumer behavior like this, where they are sort of buying into more of the hardware than the software, and then they rotate back. But as you say, it's very bifurcated. You can't be monolithic about softwares today, because you have the IGV up 1.5. But then you have legacy name like SAP down 2.5% as well. So you make a really interesting point. Some of the cybersecurity names having a very good day. CrowdStrike's up 10. So it's interesting, isn't it? But obviously we're going to be talking about some more of this throughout the rest of the program here, Diane. Let's switch to the banks because, I mean, what a response. It was interesting, though. I was looking at the pre-market as you were because you were in your show at that time, the reaction initially where we only had Goldman higher fractionally, and then we got the cash open and things really took off. I mean, I see that Goldman's having a new record today. A couple of names actually having a great, I mean, record smashing quarter from a number of these names. You wonder how sustainable it is, but I mean, just talk to us about the reaction and some of your takeaways, because I know you covered the banks very closely.
Yeah, so, I mean, you see strength across the board, trading. Not surprised to see that. We were expecting to see strong trading numbers here. IB, we were also expecting to see that, but just blockbuster growth here. A lot of this also when you think about, for instance, Goldman, SpaceX. We're expecting to see something similar with Morgan Stanley as well. But the question is, the bar is now higher for Morgan Stanley going into its results. We're expecting to see earnings rise for Morgan Stanley by more than 35% year over year. So, you know, can they climb that wall given the momentum that they're having today? Because obviously they're making a sympathy move to what we're seeing at Goldman. Quite the rally in Goldman. With, as you mentioned, it on pace for a record close here. Bringing it back to JP Morgan Chase, as you mentioned, it did start out soft, which is typical. They typically, even when they post strong numbers, because the, you know, typical pattern of the CEO, Jamie Dimon, is, you know, they deliver these strong results. They do really well. It's the Fortress Bank. That's what it's known as. They, again, did better than expected. Record quarter, equity trading revenue surging 86%. Total trading revenue, record $12.1 billion. IB also, again, stronger than expected, but he struck a cautious tone, as he usually does. Geopolitical risk, I knew that would come up. He always kind of talks about that. Sticky inflation, fiscal deficits. But the other thing he said later was just, you know, he talked about the strength that we're seeing in trading, the resilient consumer. So to me, it felt like a more balanced Jamie than what we usually hear. Dimon, what we usually hear is more on the cautious, the risk management, Jamie Dimon, right? The under promise, to use, I think this was Joe Mazzola's comments, under promise, over deliver.
Yeah, he talked about the tectonic plates, the risks as well, which kind of suggests that there are a few moving parts. But when you look at the macro, I mean, things are holding up okay.
That was a nice bounce.
As you say, the market's likely looking past the geopolitical situation.
Didn't pay much, but I got out of it.
You know, obviously,
still yet.
War and the
it kind of give up its mustard.
To your point, with some of the trading activity as well. So we just wonder how much this is going to last, particularly as they continue to benefit from a lot of that underwriting, as you say. But it's also a really good, I guess, consumer. So we've got out of the gate pretty strong. Let's see if we continue to see that throughout the rest of the year.
Randy, we've been scalping all day today. It's been clean, but it's also been dirty. Did you get my question there, Magnificent? The question was, do pigs fly? Do pigs fly? They do when you've had too much 420. I remember that. Randy, you ever see pigs fly when you're in your garage? I'd like to see your man cave. Can you imagine what Randy's man cave would look like? Woman, you knock before you come in here. I bet you still have the same chair in your living room that you had from 40 years ago. Randy. He does. Well, the 75-60s are now at 165, 170, and these were mentioned at 115 to 120. Did anybody take the trade? If so, I want you to make a professional decision. It's time to be professional. It's time to be professional. $2.15. It's time to be professional. These went up to $2.15. 3 white soldiers. Nancy, could I get you to take off my shoes for me, baby? I can't believe I've wore these things all day long. I can't believe I've had shoes on all day long. There's got to be something wrong here. To lose. Got happy feet. Oh, I'm wearing my shoes. Walking away. I'm walking in my shoes. Right now, baby. I'm walking in my shoes. All behind. I'm walking in my shoes. Walking down the street in my old shoes.
Underneath the lights we come alive.
We're walking down the street
Twist and turning with the city jive.
in my old shoes.
Every step a story, every glance a dive.
Walking, walking, walking.
All survive.
Walking down the street
Midnight whispers echo down the lane.
in my old shoes.
Shadows laughing like it's no big thing. In the heart of the storm you're in. Dancing in the dark until the dawn bells ring. Oh, what a cool breeze blowing through my mind.
Walking down the street
Stars leaving it all behind.
in my old shoes. Well, thank you very much. Walking down the street in my old shoes. I got happy feet. I got happy feet, yeah.
Dancing in the dark until the dawn bells ring. Oh, what a cool breeze blowing through my mind. Dancing with the stars, leaving it all
behind. Walking down the street in my old shoes. Thank you very much. Did you like that, Randy? Damn man, that boy can sing. That boy can sing. This is called Spy, and just shows you how it keeps bouncing off the 63 EMA. Do you understand? Someone does. .63 EMA. Mm-hmm. That's what I thought. It's not nice to point, James. I was tortured when I was 4 years old for pointing. I got the belt and a switch. Jim, I've told you never to point again. You will be grounded for a week. You'll learn not to point. Oh, Marley. She's wearing the... Oh, no, she's not either. I thought she was wearing the red dress. I was going to go all in. And that's a bummer. Damn it. I'm going to call them up and tell them. So you can't be doing this, man. She's got to come on sometime with that red dress on.
But we expect this to grow up into more like 3 trillion by 2030.
That's a lie.
Really what's driving this is the move.
That's a lie. So Lissa did reverse here, huh? That's a lie. We're gonna have the time and sales up. It could be a problem. It's been halted again.
Uptick in stablecoins.
Okay, it's 125. I'm going to go get my. Oh, there it is.
What exactly was it that was being held back by a lack of regulatory guardrails here, and what more do you think needs to be done?
Yeah, so quite interestingly, stablecoins have actually found product market fit despite the lack of regulatory clarity. So up until recently, they did find use cases outside of crypto speculation, such as emerging markets access to the dollar. This has been one of the most popular use cases for the stablecoin Tether, as well as cross-border remittances, which is still to this day remains a pain for people who want to send money to different countries. So stablecoins have already provided huge value add in these existing markets. But now with clarity, we get these new use cases such as payments. Payments is going to be the big one. This is a market that is quite massive, Forex payments. And so stablecoins provide a much more capital efficient way to do payments, reducing and even eliminating a lot of the middlemen that exist here, the fees, and so that money just flows a lot more rapidly.
Right, right. So what role does Spark play in all of this then?
Yeah, so Spark, it provides liquidity infrastructure for newer stablecoins that are looking to launch that don't yet have the scale. So for example, Spark works with PayPal to provide market making and on-chain lending services for their stablecoin PiUSD. And so stablecoins that really are new to the market don't know how to use blockchain rails. Spark, we've been in the industry since the beginning, and so we can bootstrap these newer stablecoins from traditional institutional players, partner with the institutions, and scale up their stablecoins quite quickly.
So rather than partnering with the institutions, how come the banks or the incumbents, for instance, can't build their own infrastructure rather than relying on Spark?
This is a road they could go down, but there's a lot of work, and there's already existing infrastructure that's been built up over many years. So it's just a much easier route for institutions to partner with somebody who is an industry expert, such as Spark, to get involved in the space rather than building everything from scratch.
Okay, understood. So what do you believe the success of stablecoin looks like? I mean, you mentioned some figures as to what this could be, you know, as far as the market volumes, did you say, in valuation in the future? But I'm just wondering what the stablecoin market perhaps looks like in, say, 5 years from now.
Yeah, so as I mentioned, the collective market cap of stablecoins stands at about 300 billion right now. We expect this to go up by about 10x to about 3 trillion by 2030, and so that's about the 5-year time frame. What's going to be driving this is the moving the payment system on chain and increasingly tokenization of assets that exist outside of the blockchain rails. So we really see a lot of adoption, not just with stablecoins, but with tokenization of what are called real-world assets. So these are assets that exist in traditional finance. Tokenizing them basically allows you to move the money much quicker. It unlocks a lot of capital efficiency. And so we think that the value add that comes from moving payments on chain will just drive a lot of this market capitalization growth of the stablecoin market as a whole.
Interesting. Sam, an absolute pleasure to have you on the show. Thank you so much for your time today. Sam McPherson there, who's the CEO of Spark. Coming up, our panel will break down the latest CPI trends and what it means for Kevin Walsh and the Fed moving forward.
Oh, I left Lucid up there? Dumbass. Yeah, watch outside. Might go roll my window up.
Hayden, live from Chicago. We're tracking market movers, earnings reactions, and what traders are watching next. Stream Schwab Network live at schwabnetwork.com.
Well, how did they react? Everybody, they pumped this thing for years. Eventually it'll break out.
Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between. Think I'm gonna be sick. We have to buy that now. Schwab.
Invest your way with Schwab. Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across.
Here we go back down to the 63 again. I found a pen, an old Bic pen, and look, it works. Outside in the trash, by the trash can. An old Bic. Have a one of these? Oh. It does not work. I'm having issues. Oh. Well, looks like it's going in the trash. How disgusting. I got in trouble one time for making, the old Bic pens where you made spit wad guns out of them. Jim? Did you just hit her with a spit wad? Yeah. Yeah, I did. Yeah, I did. Okay, we're at the 63 on the SPY. Again. I've had enough of this. Question is it going to break or is it going to give up? That's the question we want to ask. Oh, this is something else. God. Okay. Now you gotta hit the to this. This keyboard today is so. The crowd's going wild at the sports arena. Oh, we got some blondes on here. Turtleneck.
Yeah, that's one to highlight. You know, obviously, as
This is really starting to get out of proportion.
Star Wars, there's going to be some regime change. One of them is communication or less communication. We already saw it at the reduced state.
The women are so cold on Schwab that they have to wear turtlenecks to work. Now, talk about a cold woman. How dare you?
Ranges are quite
Who developed this dress code should be fired
I mean, at times,
immediately.
option income is a good way to extract extra income out of the fixed income market without really increasing your credit risk because it's all done in the treasury market. So maximizing yield without increasing credit risk is a key right now in fixed income because credit markets have been somewhat complacent, historically tight credit spreads right now. So really looking for those opportunities to take advantage of the uncertainty ahead with a new Fed chair and the regime change that he's trying to exact with his his 5 committees or task forces he calls them.
Yeah, that's right. And Aaron, just sort of ending with you, I mean, as far as his commentary, upbeat on the economy, I mean, determined to deliver on price stability, as we know, not a huge amount of detail, clear change in the communication style for these markets. But something I found very interesting was how he says inflation will be a thing of the past. With what we're seeing in artificial intelligence right now, when we look at energy prices, when we look at memory costs, when we look at Apple having to raise its prices too for its hardware, how are you thinking about that right now?
Apple didn't have to.
Well, I definitely think that's going to push prices up, right? We have the AI boom. But there's other things that the Fed has no control over that affect inflation that we've seen in the last year and a half. That's tariffs. And I think
there's the knife.
We're seeing the expiration of these 150-day tariffs, but we've got more Section 301 and
150-day
232
tariffs.
coming on board perhaps soon.
The 75/60s are now at $1. Ladies and gentlemen, the 75/60s are now at $1. Shut up. How dare you? This is the SPX. The 75/60s or at 95 cents at $1. The ask. I'm going to slap it here in a second. James, I'm from the Sunset Times, and we want to ask you a question. Do you think your comments on the cleavage at Schwab could have thrown your day trading off a few percentage points? So yes, it's been a distraction. These turtlenecks. Everywhere you look, there's a turtleneck. You think they're in hibernation or something. Okay, here we go. 85 cents. Or turtleneck, are they in these days, or is it when I was in high school, it was tube tops. I think we ought to go back to tube tops.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Spandex turtlenecks. Whoa, okay.
Trading at Schwab.
I'm in.
Powered by Ameritrade.
I have a whole different attitude now.
The award-winning trading platforms.
Turtlenecks aren't as bad as they used to be. Today's wave is called the spandex turtleneck. I think that's sexy. That will work. Okay, things are back to normal. We're at the 100 on the SPX now. It's cause to celebrate. I'll get my girlfriend a spandex turtleneck for Christmas that shows the belly button. Oh, look at there. There we go. Get ready. Get ready, Randy. Randy. Late last night when we were on bed, Jim jumped into 75.50s at $3. Come on. This could be a little too early. This could be a little too early. As we approach the 200, we get the 200 EMA. Let's be nice about this. The 200 EMA. And then you have the 200 SMA. And we have the 75, the SPX, calls, auto, strike at 7550 at $3. Lotto $3. Now, I'm down 75 bucks, $20. And I should buy one more if we touch the 200. Or buy two of them. Right now, my total investment is $3, not counting fees. 300. I've got up to $1,500 based cost for this trade if I need it. I could purchase 4 more here at $2.60. That'll give me a total of 5. We're at the 200 right now. Okay. The crowd's going wild. Come on. This is getting pretty hectic right here at the sports arena. 285. Nudges them. Is anybody kind of curious why Graham all of a sudden just died? That's what I thought. I was curious too. Come on, man. I'm gonna walk into the kitchen. And I really don't have anything to snack on. Yeah, I do. I can grab a couple tater tots or croissants. Nancy, hurry and get out of the bathroom. Sick of you being there all the day long. Come on. We're at the bottom again. Just that feeling where you go, oh, Jim's doing it again. He's in the bottom. Ha 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 ha. He's going to get stuck. Ha ha. Told you not to take the trade, you idiot. Jim, you're up $20 a contract. And you didn't buy the dip. How do you feel? I feel like I need a fart. Can you imagine buying 4 more of those at $2.60? And you'd be saying scale out right now, but you're only up $20 because you didn't buy the dip.
And so they're really highlighting those key financial levers from credit underwriting,
$3.20.
pricing optimization, fraud prevention. There's just lots of areas that AI can really help move the needle from a NII and from an NIM perspective for these guys.
So you people anybody new to my style of trading? As you know, I talk about chart patterns, moving averages, and being in the now. And I describe how I use each moving averages as I'm calling out a trade. For example, the waited for the 200 EMA and the 200 SMA to show up. I got in a little bit early. I could have added on, and I should have added on at 260, and I'd probably be out of this trade right now. But the blue line, this is the 200 EMA. The blue line's the 9 EMA. So that becomes resistance until you break it. Once you break it, the 9 EMA now becomes support. Yeah, that's what I said. What was resistance now becomes support. Maybe. If I was wanting to read digest what's going on here. I'm going to walk into the kitchen and I'll be right back. So each moving average has its purpose. Just not same old. One keeps you in the trade, one gets you out of the trade. The smaller the number of the moving average, the more you want to use it as staying in the trade. Or adding on. So I'm getting ready to add on here. A 260, 270. Ah, 250. Ouch. Now I'm going to add 2 more as we come to the double bottom. $240 if I can get $245. $240 to $245. There it is. $245. I tried to get 240 but couldn't do it. That was really hard to get 245. So we got snake breakout pullback, high or low, off the 200 EMA. Slash ES off the 200 EMA. Now I've got 3 contracts, $3 and 2 at 245. So we got $3 and 4 at 245, 2 at 245, and 1 at $3. Not 4, 2. I should have added another 2 more. I mean, I added on the way up or whatever. 340. Yep. What do you do? 350, 360. Nyont. Oh shit. I don't know how he does it. I sat there and watched him do it again. Just one trade after another. Na 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 na. Na 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 na.
Volume was this trade alone here. The sizzle came in at 1.5, so 1.5 times the 5-day moving average of options volume for this particular trade for this tobacco company.
All right, thank you so much for all of that, Rick, getting us across TSMC, Qualcomm, and Altria in the afternoon session. Thank you so much. Let's check in with these markets before we let you go. We've just got an hour left of trade right now. We are looking at a pretty mixed old picture right now. The S&P 500, though, hanging on to this 0.5% gain. The Nasdaq pushing ahead, 1.3, thanks to chips. We're seeing that rotation back in action. The Dow is just on the line. It can't really budge from that. It's been pretty range bound with obviously IBM's big decline here. And we did get that cooler than expected CPI print. That's giving some relief to this market, pricing out the rate hikes, particularly this month. So the Russell 2000 benefiting from that, up 0.4% as small caps are very much exposed to what we see with respect to those rates. Yields coming off as well, but oil higher, keeping things in check right now. Thanks so much for joining us on the watch list. I'm Sam Barton.
Schwab, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Caden, coming to you live from our Chicago headquarters. Let's take a look at what's coming up on the show today. We'll discuss this morning's cooler than expected CPI print and what to expect from the Warsh-led Fed amid his testimony on Capitol Hill. Then we'll break down earnings from several big banks and what the broader market and economy. And also for Options Corner, we're going to take a look at the technicals and the options activity for ASML ahead of earnings from the chip equipment maker later tonight. Now, here's what I'm watching for today. IBM, of course, big picture falling and on pace for its worst single-day decline since Black Monday in 1987.
Liar.
After posting disappointing preliminary earnings. Big Blue's CEO said the company did not adapt and move quickly enough, while numerous large deals failed to close.
God. And what's going to happen when you realize that we didn't spend enough CapEx on AI about another year from now? Are you going to come back here and say, oh, we were worried about the CapEx spending, so we told everybody the market was going to sell off? It's a year later, and they're still putting billions and hundreds of billions in CapEx. We just don't know what to do about it.
Across the board, the S&P trading up about 0.4%. We're at 75.48.
We're going to triple bottom off the 200 EMA, counting with
9,622. The Dow heavily being weighed down by IBM.
Damn, look at Marley today.
Been right around the unchanged line for most of the day. Red right now, just fractionally. And the Russell 2K is up 0.33% on the session at 29.63.
I'll tell you what,
90 here. Now, I do want to bring Jenny Horn into the conversation here. Take a look at some of these top moving names that I was just highlighting there. And I mentioned IBM twice. So.
Uh-oh. Jenny? What's the frickin' deal with all these turtlenecks? And these short dresses? This is disgusting.
Since 1987, and I mean, we're feeling that today with, I mean, like such a substantial drag in technology.
Right back at the 200.
Actually, the rest of the market is
$2.10.
So it's kind of interesting to see.
Rinse and repeat.
Not really let up throughout today's session at all. Again, 24.4% to the downside. That has been pretty consistent. Now, what this does feel.
Ladies and gentlemen, we're back here at the 200 EMA. Now, I wanted to go in there and use the restroom. But Nancy's been in that thing all day long. Very seldom do I get to sneak preview in there. When I do go in there, you got to turn the fan on. I mean, it's the most disgusting smell you've ever smelt after she's been in there. And these 75.50 calls at $2.10, please. Triple bottom off the 200. $2, please. I think we know what to do, huh? $2 and $2.10. I have two contracts off the 200. The average is 205. Oh, girls, come on. You didn't dress like this last year. I bet you it's all them tweets I did on StockTwits that got him to cut out all the cleavage. This damn Washboardjim on Elon Musk are trying to sabotage us. We need to hire Marley in here, build up the cleavage reservoir. I'm up $20. Please vote for setups you consider. Should this channel forbid you to take any trades unless you first saw the setup on a minimum of 5 minutes, preferably 15 minutes or 20 minutes? No. I would use all of them. Where's all the above? I can't answer any of them. I'm probably the only one who's going to vote. Here we go again. Prepare you. Nope, it held. Everything's at a solid support. AMD took new low. AMD. Triple bottom, symmetrical flag off the 200. Fudge. Huh. Ball. Huh. Boeing had a pullback today. Oh, that's backs. Where the backs is. Oh man, that would have been a good one. I would have took that trade this morning. Boeing.
At least already have those expectations baked in. Now, what would be obviously the downside surprise would be any further update on iPhone. Still 50% of their revenue, still the most important aspect of their overall sales. But the street is actually still fairly muted on this name, with 60% of analysts with a buy, which puts it more in the middle of the pack of like the Mag 7 coverage. But it's actually amazing. I know we're pulling back today, but right now with a 14% gain roughly on the year, it's actually the best performing of the Mag 7, which are words you didn't think you could say about a year ago, because I mean, we're so used to these names being such huge winners It's interesting to see that that actually is slightly etching out Alphabet as it stands.
A 14% gain on the year marks the best performer in the Mag 7, or I guess maybe we should say the Lag 7.
The Lag 7.
As they have been lagging the broader market. But a very interesting note, this one, because I know in my conversations and in the ones I've heard, you have most of the analysts are saying that despite the price increases, they weren't unexpected at that. They were hinted before they arrived. No one has yet to flag that they really see any potential issue with the digestion of these higher prices until perhaps this note today. It was the closest I had come to seeing an analyst say it may slow down the upgrade cycle. We may see people having a hard time digesting these, whereas my other conversations have been people are so entrenched in the Apple ecosystem that they will simply just pay more to stay in it.
I mean, unfortunately, that vote's true for myself because it does feel like right now, with the price tag of a phone just being so expensive, it's like, what is another $100 when you're already paying, you know, over $1,000 for a phone? Which I know sounds ridiculous, but it's just the way that right now pricing has gone. And for so long, there has been stability within iPhone pricing after we saw a pretty substantial leap from, say, the Model 9 to the Model X, and it's been relatively stable ever since. But it does feel like the consumer has to have fatigue at some point for everything being more costly. And perhaps that super cycle we called for long ago will not play out to the full effect. But I mean, this price target obviously implies some further weakness from here. And again, it's all relative because we were just at highs. And I know they called out, again, that valuation being of concern. Trades at 36 times its forward earnings, which is actually above its 5-year average, above the S&P 500. But I mean, maybe something is wrong with me that I now see 36 times and I'm like, it's actually cheap in broadly AI-focused names. But Apple has kind of differentiated itself among the pack, which has actually been a good thing for its resiliency. It does, though, raise the question of, like, you know, how much are you willing to pay for Apple on a forward basis without this promise and the consistency of growth we have known from them in years past?
Well, we're going to get their earnings on the 30th, too, so we're less than 2 weeks out from hearing from Apple, and I had a conversation earlier where someone was saying that they think we may start to see the point where we're rewarding the names who are trailing behind a bit in terms of the CapEx spend because of the caution that we're seeing in the markets. But I want to jump to NVIDIA before we have to finish up here, because KeyBank also put out a note on NVIDIA today.
They think they've got it so right.
Sent NVIDIA up 4%.
NVIDIA actually having a very nice...
They think they got it so right.
etc. But it does seem like we are still anxiously awaiting the mass shipments of their next generation Rubin hardware. And while that wait could be extended a bit, it's not going to be an issue for shares, according to KeyBank. And so, again, shares rising pretty substantially, now having risen about 13.3% this year, still lagging well behind the broader chip space. But the big hope for NVIDIA is that the rollout of their Rubin will remind customers that it's really still one of the best in the business for AI, dispelling concerns about this broad-based competition. But an issue with controlling heat in servers containing its Rubin graphics processing units has led to a small delay for these larger shipments, according to KeyBank, which cited discussions with some participants in the Asia supply chain. And so they said that this has been resolved, but they're seeing indications that Rubin will start ramping in July now. Now, the thermal issue should not be a major problem, according to, again, this firm, who focuses on the company shipping between 1.7 to 1.8 million Rubin chips this year, alongside 5.5 million to 6 million of its current generation Blackwell hardware. Now, they increased their price target to $330 from $310. They maintained an outperform rating, and they highlighted the price target based on an P/E ratio of 25 times their forecasted 2028 earnings. So they did say that while there are significant barriers to entry created by their CUDA software stack, they see limited competitive risks, and they expect NVIDIA to continue to dominate one of the fastest growing workloads in all of cloud and enterprise. And so they were previously named a top pick at Barron's back in May. Shares were trading around 226 then. So we pulled back, and I mean, we further see analysts that are optimistic on this company, but this has been a huge contribution of that more lagging performance of the Mac 7 as NVIDIA. Of course, having a nice day today. We've yet to see these week-to-date moves, though, really hold and really regain that resumption of the uptrend.
Yeah, and earnings often a major catalyst here, but we don't get their earnings until the end of August. They're always one of the last names for us to report the earnings season. Jenny, thanks for breaking all of that down for us today. Jenny Horn, co-host of Next Gen. Taking a look at all of our top movers. Now, coming up, stay with us. We're going to break down this morning's CPI print and what the cooler-than-expected results mean for a Kevin Warsh-led Fed amid his testimony on Capitol Hill. That's all next on Market on Close.
You know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Welcome back to Market on Close. I'm Marley Caden, live in our Chicago headquarters. Joining me now to take a look at the inflation print we got this morning and the Fed under Kevin Warsh is Terry Wiseman, Global FX and Rate Strategist over at Macquarie Group. Terry, great to have you back on the show. Now, we got the print this morning. CPI coming in cooler than expected. I know you sent me a preview note before we got the data where there was some expectation it might come in a little bit higher than expected.
I think this
in
is
terms of what we got today, you know, what were some of your takeaways and what did we learn from the data we got this morning?
Well, first of all, I'll parrot what Kevin Warsh said, which is that this is just one data point. It doesn't necessarily create a trend or anticipate a trend in inflation. Having said that, yes, it was certainly lower than the general consensus expected. In fact, the softening of...
Here we go. $2.30. Let me tell you something, baby. As this thing starts to break out, we're now at 230, 250. And now you can make a business decision. Anybody take this trade with me? Y'all bad-mouthing my 1 minute time frames? Man, I was so clean off the 200. What are you talking about, nigga? We're about ready to hit resistance here. 275, 280. I'm out. How do you do it? Boom, baby. You gotta go when its goal is set. I don't know how he does it, but he did it again. $282.95. I forgive you all. You're forgiven, magnificent. You're forgiven, Rose. I forgive you all. Woo! Chalk went up for the wash. Chris, I forgive you too. And we can still make this PG. So I'm going to go into the kitchen now and grab my, I was going to make some cider. I think it's time for a cider, a hot cider after this beautiful call off the 200. Now you can use the 200, 100 EMA and the 200 EMA and the 200 SMA on any time frame. And I would assume that you use more than one before you take any trade, because one time frame might tell you a different story than a different time frame. Do you understand what I'm saying? Do you understand what I'm trying to say? Somebody say yes. Or I'm going to retire today. Hey, we're going to have a lot of Branson people here in Branson here. Whatever you do, don't ride the duck. If you go to Branson, don't ride the duck. Here's the pullback. I really wonder what it's going to be like when I get ready to retire. I've had this philosophy where just work. That's my question. Oh boy. Man, look at there. Set up. Knife. 1 minute. 1 minute. Brandy. These are at 115, the SPXs. I think you'll like it. If you don't, tough crap. Back to the 200. So what time is it? This can't be true. Am I dreaming or what? $75 here at 115. Now this is gonna, something just ain't right about this, but come on. Come on. Come on. Marley, you looking hot today, baby. Come here and sit on my lap. She says, that would be inappropriate. We're now at 125. Now, if you feel very uncomfortable, get out of the trade. If you don't, and you want to hang around with Bobo for a bit, Trump dropped Strait of Hormuz cargo toll plan. Come on, give me a big old fucking buck. I want $1. It is now 232, 332. We're at the 100 EMA. We've got, this is the third consolidated candle here with a tweezer. I think 3 is a charm. We're going to go 1 more minute. Please stop. No, don't. No, God, I didn't want that. I wanted it to come up and sit. Come on, up. Oh. 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 Hey. Two minutes, a double bottom. Higher low. 3 minute. We're at 120. 125. 3 minute. We're above the 100 with a tweezer bottom. Five minutes. Five minutes. We're at the 50. 15 minutes. Didn't tell me nothing. Oh, look at that. We did get that. Candle did hold up. Hey, this is going to be good. This might turn out to be good. I'll get out of it here in a second, because it should be green right now, and I'm not. But right now I'm bullish. It held. I mean, that's still 25 more minutes. Might add some on here. But now, well, shoot, 90. I tried 90. I'm not going to buy it here at $1. Well, it's not going to do much. Still holding up. All right, 130. Sell it now if you don't feel comfortable. It wouldn't let me. I didn't try. 130, didn't stay up there too long. Could have maybe got out of it, but no. There we go. 150. Ha ha! Woo! Zip it! Nip it! Nip it! Nip it! Who's the best trader of them all? Can anybody stand up and nominate Washboardjim? Huh? Say what? Ooh, what do you think about that, Linzoid? What do you think about that, Linzoid? Are you impressed? She is. She's quite impressed. So let's explain this. So we had 3 black crows, and I waited for the tweezer bottom. Both of them looked like extended hammers, so I felt good about it. Then we had the third one, still holding support, the body of these candles. And then this fourth one came up, and it started opening down below it. I kind of took my eyes off of it for a second, but I was starting to feel a little bit like I might have made a mistake. But when I came back to look at it, that body closed above or within these other bodies, which gave me a good feeling that this trade might get ready to pop. And then we're back down here again, retesting that same old support level that we were just retested for 4 minutes. Actually, we retested it for more than 4 retest, and then we came back and retested it again. I look at the clock. I got 21 minutes. You know, I've had to work my way out of a few trades today. The charts have been reading fairly clean, but not holding up and falling at a support level that's solid. So that gives me a percentage range where I don't want to take a lot of chances. But I've noticed that first thing this morning when we broke out. And I said, it looks like clean. It's going to be a clean day today. And it practically was. But it still gave within its resistance levels to maybe give you a second opportunity or to get out at your first. I've had a couple chances to get out and I didn't do it, and 3 times the charm. There's that opportunity again. If you wanted to take it. It's telling you how much it loves that support. Another 4 minutes down there and then boom. I can't believe I haven't took these shoes off all day. I can't remember the last time I wore shoes all day. These Macs, man, I'll tell you what, these Brooks Macs, they're a good shoe. I'm gonna order me another pair. Max 3. Brooks Ghost Max, $170 new. You can wear them for about 1.5 years. The tread on them don't last long though. They don't have that real, I mean, it's good tread, good rubber, but I don't like the tread. I wish it was a little bit more durable. It's good rubber, real good rubber, but Ghost Max Brooks, Ghost Max nitrogen injected DNA loft. You want to be on your feet all day, ladies. Yeah, beautiful bounce. This is it. I mean, snake breakout, pulled back, double bottom. Same kind of conditions we had here. Boom. Called it. Called it.
Theme here. Overall, though, an upward sloping trend line going across these lows. You could also couple our short-term downward trend line with another boundary line going across these lows to give us kind of this falling wedge type shape here. So typically this is regarded as more of a bullish type of setup here, but when you have earnings so close on the horizon, I think I would kind of take any kind of pattern information like that with a grain of salt. Earnings can easily rewrite that story immediately. So horizontal levels to consider. Well, to the upside, we had a notable high right here near 1862. Meanwhile, 1727 to the downside, our first green line here. Then we had a few lines here that represent old highs followed by subsequent lows. 1645 and 1590 stand out as areas that saw that type of behavior in the nearer term. We also saw 1446 as a similar level. If we could advance our chart next, we could see that we'll look at our moving averages here that we follow next here. So now we have a confluence, our 5-day and our 21-day exponential moving averages right on top of each other there, showing that we have a confluence in line with our short-term trend line as well. So those all come together right around 1773, 1780 or so. So be on the lookout if we do get some kind of breakout activity beyond there. Meanwhile, RSI trending lower, just a hair below that 50 midline. As I said, momentum very commonly wanes as we head into a known event risk situation like earnings. So again, not really too much to be made of that from my view at this time. However, we did dip below our longer-term trend line yesterday. We seem to have recovered now, so we'll have to see if this remains an important boundary going forward. So if we also were to look at our volume profile study next, we can see that the area here that we have between 1740 to 1885, that stands out as a heavy trading activity zone here. That's what this blue bar graph represents, the extent of how much trading activity we see at these various price levels here. So
man, that would have been a good one.
Too far below that.
I didn't do it, but I should have.
Until we start getting down here, near about
$50 to
1360, a broad
$100
range here, but a very high price stock that's seen tremendous growth during the past year.
Yeah, I mean, it's certainly an expensive stock right now at $1772.75. We're up almost 3% on the session. But as you look at the options action going into the earnings overnight tonight, did you see an increase, or was there anything that stuck out to you?
So the sizzle, yes, 1.87, so 1.87 times the 5-day moving average of options volume, so elevated activity here. Not the most actively traded name, though, despite its importance and its unique characteristics here. We saw about 28,100 options volume today. 57% or so were calls. Most active month for our open interest is the July 17th monthlies, 28.2% of all open interest. That's our little orange box right here. You can see 3 days to expiration, plus or minus 7.2%. Meanwhile, next month, excuse me, not front months, August 21st, 38 days out, about 16.7%. One big trade I saw, plus 22, January 21st, 2028. So the 2028 calendar year, 2,000 strike calls at a 475.40 debit. So $1.04 million debit paid for this rather long-term bullish type of trade here, if it were indeed an opening trade.
All right, well, we'll have the results from ASML overnight. They will be out by the time we are in tomorrow morning. But thanks to Rick DeCamp for taking a closer look at this name for us in advance of that earnings report. And coming up next, we've got overlooked stocks coming your way. George Tillis has his eye on Tower Semiconductor today, up about 12% as we're heading into the close. He'll break down the move and what you need to know next on Market on Close.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange, the countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com. Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
Boom, boom, boom.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between. Think I'm gonna be sick. We have to buy that now. Schwab.
Invest your way with Schwab.
Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex.
Another opportunity.
Plus, get 24/7 live help.
I mean, they've been really clean. These charts have been, if you can read them. If you can read them like in the, you know. This here was a Head and Shoulders. We'll come up and hit that right shoulder the second time.
Welcome back to Market on Close. I'm Marley Caden. It's time now for Overlook Stocks. Tower Semiconductor rallying today after announcing a significant expansion of its operating in Japan. Joining me now to take a closer look, George Tillis, our senior markets correspondent. George, we're seeing a big move in Tower today, up more than 11% right now. When I just looked a minute ago, it was up about 12%. You know, take us through the latest here and why we're seeing such a jump to the upside today.
Well, I mean, this has been a sort of a remarkable mover. It's one of these smaller semiconductor names where it was a small name. It's not anymore because of the fact that the price has gone up so much, over about 400 or so % in the last 52 weeks. But Tower's an interesting company. It's really locked into the technological expansion or build out we've seen with the data centers. They primarily focus on a couple of technologies, for instance, silicon photonics technologies, which are integrated circuits used for analog and mixed signal processing, things like image sensors, integrated power management technologies, communications, electronics. The other thing is silicon germanium technologies also. So these help facilitate high frequency communications. So it's actually in the midst of, you know, expanding its business quite a bit in the last year. Some of the competition includes Taiwan Semiconductor in the foundry space, UMC, United Microelectronics, but also Global Foundries Group. So this is more of a foundry-based business, but they are expanding out of their 4 manufacturing facilities in 4 primary countries in the globally. Forgive me, it's Israel, Italy, Japan, and the United States. They don't have any Chinese or Taiwanese exposure. But again, they did receive, or they did produce some news associated with the expansion of a 300 millimeter silicon photonics plant in Japan, about $3 billion expansion in conjunction with the Japanese government. So they got some support. This is now expanding their footprint in Japan, which is one of their 4 major locations for production. and they did update their business model and guidance all the way through 2028. And this, I think, is really important because if you look at the guidance update, they provided revenue guidance for $3.6 billion. Now, if you look at the trailing sales for the business last year was 1.6. So we're talking more than 1.25, 125% increase.
We're going to go to the VWAP
relative to this year in terms of their fiscal reporting for 2028. But at the same time, this is where I think
we have 5 minutes left,
because they did denote
and I'm
that
done.
Net income on those sales to be $1.2 billion. Now, important in the context because last year they generated $245 million. So they're expecting to 4x, 4 times their EPS numbers on a net income basis by 2028 compared to last year. And they're doing that on less than slightly higher than 100% increase in sales. So I think that's quite meaningful considering the build out.
Consider.
And it looks like they've got a lot of programmatic locked in customers for their technology.
Judge. Okay. Chart patterns, moving averages, and being in the now. Being in the now means the different sequels that go out through the time of the day. I trade around my schedule, which I own a small business. I've always had something going on ever since I can remember. I've worked small business more than I have worked private sector for someone else by many years. If I still had my picture frame shop, I would definitely have hired me a manager instead of me managing the frame shop, because I'd still be trading stocks, but I wasn't trading stocks. Al Gore hadn't invented the internet yet. Once he invented the internet, but if I would have been interested in trading stocks back then, which I was always watching the market because I was a little invested in it with Walmart, I would have definitely had a nice office set up with a bunch of monitors, and I've done the same thing over again. We got 2 minutes left. But I had to trade, so I had to change my life. I had to change my lifestyle. Instead of becoming a retail sector kind of guy for the, work the 9-to-5 job, I had to come up with something different. So I decided to get into the cleaning business, which allowed me to go ahead and trade stocks. Now, if I still had the art gallery, I would have definitely had to hire me a lead manager. So, you can adapt how you want to trade the market. The market's is able to let you do that. if you work days or part-time, or I get up, jump around a lot here lately because I need to circulate, there's a knife, circulate my blood a little bit. And I feel like I've missed out on a lot by sitting here every single frickin' day for 22 years. I could maybe have continued in the songwriting or playing in bands or traveling around and finding job to job. But I decided to do this. Now I can do this and go anywhere I want, do anything I want. Interesting. So you could look at different time frames, or I'm looking at different time frames. I got different monitors up. I see a lot more on a 1 minute than I do. I trade a lot more on a 1 minute than I would if I was trading on any other kind of time frame. But I'd trade differently probably. Well, I guess that's it. Buddy, have a good night. I'm going to go into my other routine now, which is, I did some dishes already today. I'm going to do a few more. And I never to get to my cider. Finally took off my shoes. So I watched a few YouTube videos and get caught up in personal stuff. I got to do 2 bank statements. I got to pay my personal taxes, my business taxes. I got a lot to do, so thanks a lot. We'll catch you later.